안녕하세요. 9월 6일 월요일. 지금 장 시작한 지 35분쯤 지난, 30분쯤 지났죠. 근데 시장은 어떻게 돌아가는지 아직 파악은 안 되고 있습니다. 조금 시간을 두고 봐야 될 것 같고요. 지금
Going back all the way to April of this year. But considering May of 2020 is where the last service index was on the S&P Global, it's definitely a better number. And we see what's going on today. Whether you're looking at the euro currency 57.
지금 ISM Non-Manufacturing PMI가 나왔는데 예상치는 55. 그 다음에 나온 것은 56.9. 그런데 갑자기 주가들은 막 떨어지고 있네요. 안 좋기를 기대했던 것 같아요.
David, still young, thank you. We're 30 minutes into the trading session here. Tesla to outperform with a $360 price target. They say the Inflation Reduction Act is far and away the most consequential development for the U.S. auto industry that we've seen in a very long time, and that Tesla and their customers may be receiving close to $11 billion in incentives over the next years. So Tesla shares down about 1%. Alibaba falling along with many other names in China tech after China implemented full-blown lockdowns impacting around 65 million people. The government also discouraging domestic travel. We'll have a live report from Beijing later this hour.
네, 승민님 어서 오세요. 지금은 뭐 굿뉴스, 배드뉴스 뭐 그런 거 없이 모든 게 배드뉴스다 그렇게 봐야 될 것 같아요. 흐름이.
For a lot of different cross currents here, Brian. Certainly in Europe, not to mention even over here as well.
Yeah, really kind of a hat trick here. They'll try to blast through and then we can chit chat around number one. Russia coming off the North Sea when the pipeline flows fully. They want the sanctions lifted. Remember, they shut down for maintenance, and I'm waiting if you're listening on the radio for that. Now they're just coming up and being honest and saying we're shutting it down for good. They want those Western sanctions lifted. There's a lot of talk now about price caps. Italy and Germany talking about natural gas. Not just oil price caps, we've got an emergency meeting as well. Now, German storage is ahead of schedule, but just keep in mind, Germany's never existed on just storage alone. There are still two smaller Russian pipelines sending some natural gas, most of the Southern Europe. Overall, natural gas flows are down 89% from last year. And yes, that will hurt Russia and Putin too. It is not just about natural gas, guys. Electricity prices hitting record highs in the last 24 to 48 hours. Get this, Goldman Sachs out with a note just a couple of days ago saying the typical European family will pay about 500 euros per month for energy this winter. That's up 200% from last year. All viewers and listeners think about their energy bills going up 200%. Goldman notes it's about $2 trillion total increase across the continent in energy bills. The UK, by the way, maybe in worse shape than Germany.
뭐 시장은 지금 보시면은 지수를 봤을 때 지금 지지가 깨진 것 같아요. 지지가 확실히 깨진 느낌이니까 어려운 상황으로 흘러가지 않나 그렇게 보이네요.
Late, like a week and a half ago, so that's what happened there. Get this, Equinor, which used to be called Statoil, one of the biggest oil companies in the world, Norwegian company, coming out at a conference in Italy today. One of the executives there was saying that governments may need to provide 1.5 trillion in liquidity backstops to cover margin calls on gas and energy. 2 trillion in energy bills.
이런 주말에 주식 관련 뉴스를 하나도 안 봤어요. 일부러 스트레스 받기 싫어가지고 그래서 지금 하나하나 업데이트 해야 되는데 지금 유럽 쪽의 에너지 문제가 좀 심각한 상황으로 돌아가는 것 같죠? 러시아에서 잠궈버린다는 그런 얘기 들은 것 같아요. 완전히.
And what should our viewers be looking for to sort of identify the idea of the beginnings of potential crisis or something in fact that actually has been solved?
I think you have to look for the banks that are very, this is your area, David, we'll rely on you for this. The banks that are more heavily exposed on the European side, according to Goldman, they are BNP Paribas, they are Barclays, and they are HSBC. I think you also watch any of the shares of publicly traded utilities. We saw 31 energy providers go under in the UK in the last 12 months. Many of them are small, but keep an eye on the bigger ones, David, because you know this. If the British people are told they do not have to pay or cannot pay their energy bills, but the utilities are buying gas in the spot market because they killed all their storage 5 years ago, somebody is going to pay that bill. If it's not the people, it will be the utility. If it's not the utility, it's going to be the government through some kind of a bailout. So watch Barclays, watch BNP, watch HSBC. And by the way, on the other side of that point, David, you had that awesome documentary on Exxon. This could be quite bullish for many U.S. companies because we're just going to continue to sell.
혹시 에어컨 노이즈 안 나죠? 에어컨 노이즈가 나면 좀 알려주세요. 듣기 불편하시면은. 오늘도 아침부터 무척 덥네요. 저는 지금 뭐 SQQQ밖에 볼 게 없어요. 오늘은 떨어지고 있으니까 뭐 이벌스로 오늘 수익을 좀 낼 수 있는 그거밖에 없을 것 같아요. 오늘은.
Some participants have told me as well, Brian, that LNG capacity is sold to those who can sometimes resell it a la trader. And you can't cancel and pay a penalty and then resell to the highest bidder. So the money here is going to be enormous potential.
Hey, China, David, is making a lot of money on this because, to your point, here's how it works. When you sell, if Cheniere sells a load of LNG to China, China owns that LNG.
일단은 지금 보이는 거는 그냥 내려가는 게 방향으로 오늘 세팅이 된 것 같다. 그렇게 보이니까요.
Europeans are buying LNG from the side effect from China. Whatever China's paying, call it $12. I'm making that up, but that's probably close. They might be selling it for 50 because they're probably lockdowns and reduced energy demand. So the Europeans are getting gas, but at what cost? And the Chinese may be making a lot of money for reselling these cargoes.
Very interesting, Brian. Appreciate you being on, of course.
지금이 딱 고비일 것 같아요. 지금 순간에 넘어가면은 이제
Raising its global price forecast for natural gas, citing ongoing geopolitical tensions and
반등이라보다도 바닥 확인하는 걸 수도 있고 이제 여기서 깨지면은 쭉 흘러내릴 수도 있고요. 근데 제가 보기에는 흘러내릴 가능성이 훨씬 더 높아 보여요. 이게 하락세가 상당히 강한 차트 쉐입이라.
The U.S. is actually benefiting in 2 different ways from what's happening LNG to some degree. Europe, unfortunately, is seeing energy-intensive industry migrating out, migrating especially to the U.S. We see fertilizer companies, particularly going into the Southeast and Southwest.
아마 일단 S&P 기준으로 요 한 3,900 언저리를 지키려고 좀 시간은 보낼 것 같아요. 그러다가 이제 못 지키면은 그냥 흘러내리겠죠. 3,800까지.
U.S. industry and U.S. economy was benefiting while Europe suffers. And one of the things to be able to look out for are this elections. We have an election, one of the big European countries coming up this month, Italy. We don't know what the right-wing rebellion is against the European actions that are affecting citizens in those countries, affecting employment in Italy's own energy-intensive industry, like housing.
So, what is your base case scenario now for Western natural gas in Europe? And I would assume conservation methods are coming to the fore here. I'm not sure how much that's going to impact your views overall, but sort of longer term as well.
이제 CNBC 좀 듣고 계세요. 볼륨 좀 줄여놓을게요.
We ended it in the average price going down, as you were mentioning earlier. But the extraordinary thing is if we look at overall demand for oil in the month of August versus a year ago when we were coming out of the pandemic and growing, our demand for gasoline and for diesel is down over 1 million barrels a day. Overall demand for oil products is down 2 million a day, and that's in a very healthily growing economy. So there's nothing like high prices to cure this, and conservation, as we've seen in the U.S., driving less really makes a big difference.
Yeah, Ed, we've talked to you about this all summer long, even at times where this call was very much out of consensus. We had you on June 17th. You said we still think the forward curve is wildly overstating where we'll be at the end of the year. Has there been any evolution in that view?
There's been no evolution in that view that's tangible. I'd say we have a different set of circumstances now weighing on prices, but also risking a higher price. The biggest one is the accelerating global recession. We haven't felt it in the U.S., but we felt the impact, as I said, of prices on demand. We're seeing radically lower demand around the world, and that is where the pressure is coming on prices. If you look at two elements of prices, one is flat price, which is down. The OPEC meeting didn't really mean anything to markets because the markets are getting softer. We're building inventory built in high frequency data in both July and in August, even though U.S. Crude inventories went down, overall inventories went up. But we're seeing, a recession impacting demand. OPEC doesn't want to believe it. They're still calling for a tight market, but there's, I suspect, a lot of politics involved in their reported view on where prices are going. So, as we said, a recession can bring the price down not to the $82 level that we see WTI at the moment by the end of the year, but well under 70 if the recession really hits around the world, and things are moving in that direction. We have a lot of risks at work as well, working on the other side.
Risks and uncertainties, Ed. You mentioned the political equation in Europe, kind of going back to the nat gas situation here. How much weight should we put on the weather equation as well? If Europe experiences, say, a milder winter, could that help kind of create some sort of a ceiling on what we're seeing with regard to prices of nat gas? Or do you still think, just given all the other cross currents in the market right now, that things will continue to go higher?
Well, weather and conservation are going to make a big difference. The big weather issue, though, is a bullish factor, not a bearish one. And that big weather issue is whether, as you said earlier, that we're going to have a hurricane season. The world has fundamentally changed over the last year, and the U.S. position in the global markets have fundamentally changed in the last year. The U.S. has become, on a gross basis, the largest LNG exporting country in the world, and it's become, on a gross basis, the largest oil exporting country in the world.
밑으로 많이 열리네요, 이제.
As much as 11 million barrels a day at times.
아래로 열리네요, 오늘.
Last winter, we were exporting 7 million a day. We've seen crude exports go from 2 million a day to 5 a day over the summer, and that results in the U.S. depleting its inventories while the rest of the world is building them. But it also means that if we have a significant hurricane season, we have 2 million barrels a day, let's say, production in the Gulf of Mexico, out for a month. We have 3 million barrels a day of refining capacity flooded out in the U.S. Gulf Coast. That's going to have ripple effects, not just in the U.S. economy, but globally, and it would bring prices up significantly, raising the inflation risk even more and the recession risk even more.
Yeah. Hard thing to bet on the weather, but that's what we're going to be doing both here, but even more so in Europe as they hope to not have a cold winter. Ed, thank you.
Thanks for having me. Good to see you.
As we go to break, take a look at our roadmap for the rest of the hour, including some new COVID measures in China. 65 million people now in lockdown. We'll go live to Beijing.
Plus, a hard truth for Digital World acquisition for investors. Leslie's going to have more on that SPAC deal this hour.
And then Wall Street is returning to the office if they haven't already been coming in. But how many people are actually coming back, and how often will they actually be there? We'll discuss. Squawk on the Street is just getting started.
Welcome back to Squawk on the Street. Major averages turning lower after 3 straight weeks of losses and, of course, a difficult afternoon on Friday. Joining us this morning, Northern Trust CI, Chief Investment Strategist Jim McDonald and JP Morgan Asset Management's Jordan Jackson. Gentlemen, it's great to have you both. I appreciate it. Jim, let me begin with you and just ask, coming off of the jobs number, the Friday action, the loss of the gain today, is September sledding going to get tougher or easier, do you think?
Well, there's no reason to expect the volatility to settle down here. There's great uncertainty around what the Fed is going to end up doing. You've got real economic challenges in Europe and in China. The U.S. is the kind of lone bright spot, if you will. So I wouldn't expect a downturn in volatility over the near to intermediate term, Carl.
Right. Jordan, even if we get through some of that chop, is your general view that Q4 is going to end the year on a brighter note rather than darker?
Well, I think we could enjoy a bit of a December Santa Claus rally, if you will, in the markets. But I think we've got to get through the elections, the midterms. So I think the markets are going to be very, very choppy through November. Seasonally, September tends to be a challenging month for markets. And I think the markets are already sort of appreciating a bit of a slowdown in the economy, potentially hitting sometime in the first half of next year. So again, I think it's going to be a choppy market, again, at least until the elections. Once that cloud of uncertainty sort of clears up, I think we could enjoy a bit of a late end of the year rally.
Jim, what do you think is responsible for today's sell-off? Is it the fact that U.S. investors are finally starting to pay attention to a potential crisis brewing in Europe, given what's gone on with the slew of headlines over the weekend and this morning surrounding their energy situation?
I think that's part of it. One of our key risk cases is what we're calling Eastern threats, and that's around the risk of Russia and Ukraine with gas supply into Europe. But it's also very importantly tied to the difficulties in China with their zero COVID policy and without a world-class vaccine in place. The risk around China is that we're going to be running through this for the next 12 to 18 months. So I really think it's a combination both of the weaponization of energy in Europe and also the lockdowns going on in China.
Jordan, if we can expect some chop between now and the midterms, as you mentioned, what do you think is the best way for investors to play this, given that we've seen a portfolio, your typical 60-40 portfolio deeply in the red this year? Is it best to just kind of sit on the sidelines and cash, or are there other types of potential hedges that investors could be pursuing?
Yeah, I think investors have to remain broadly diversified and balanced. We certainly have a preference for U.S. markets. We have a preference for large cap. And if I'm putting new money to work, I'm probably putting into in a large cap core type of strategy to play both the value and growth side of things. We've already had a pretty meaningful correction in markets. While markets may be choppy, we could have short-term stints where markets perform particularly well. I know we're on a downward slide now, but that could always change, particularly if we have call it white swans, if you will, some positive news in terms of lockdowns in China, in terms of the energy crisis happening in Europe. So there could be some positive data that we get from a global standpoint, but I think markets are recognizing some more of the challenges that we're seeing, particularly this morning.
Yeah, it's interesting, Jim, the way in which I guess positive data is going to get greeted by the market. I mean, Goldman's note this morning is all about what a welcome development below trend growth, rebalancing in the job market, and declines in inflation are. I assume for the time being you agree that bad news is net good news?
Well, generally speaking, yes. The part of that wasn't discussed is the risk around the earnings front. So we have shaved our estimates for 2023, taken them down to about 5% earnings growth, which is below expectations. Companies are starting to lose a bit of pricing power, but without a doubt, the decline in inflation numbers that we've seen, whether it's across rents or across wages, or across commodities, that certainly is welcome news. That is absolutely necessary for the Fed to consider to start to slow their pace.
Fascinating, and we'll find out more from the Fed chair on Thursday. Jim, Jordan, appreciate it very much. Good to see you. Thanks.
We want to turn now to some sad news. Bed Bath & Beyond CFO Gustavo Arnal died Friday by suicide just days after he briefed investors on the company's restructuring efforts. Our Courtney Reagan has more on that story. Hey, Court.
Hi, Les. Yeah, the tragic news of the death of Bed Bath & Beyond Chief Financial Officer on September 2nd does add to the company's current turmoil. Board Chair Harriet Edelman said the company's focus is, quote, on supporting his family and his team, and our thoughts are with them during this sad and difficult time. Bed Bath & Beyond is elevating Laura Crossan to interim CFO. Sue Gove remains interim CEO after Mark Tritton was fired in June. Just last week, the retailer did detail its go-forward plans that include large layoffs, store closures, and new financing. I've confirmed that the various financing facilities with JP Morgan and Sixth Street Partners were finalized as of September 1st, ahead of Arnold's death. Bed Bath & Beyond trading does remain active.
그리고 주말에 베드 앤 비욘드 CFO가 자살했죠? 참 그것도 참 의문이네요. 무슨 스토리가 있는 건지.
Of artificially inflating Bed Bath stock price and personally benefiting. Stock sales in question for Arnault were both pre-planned as part of an agreement that he signed in April. In a filing last month, Bed Bath & Beyond said it was, quote, evaluating the complaint, but believes the claims are without merit and would not comment on litigation when asked by CNBC. Now, Quiver Quant tracking of Wall Street Bets mentions of Bed Bath & Beyond does show it is the most mentioned individual name in the last day, with mentions spiking on the news of Arnold's death. The Reddit discussion does lean towards holding on to Bed Bath shares or those call options, believing, David, presumably that those shares will go higher, though today here they are down by 17%. Back to you.
Yeah, not quite to the recent lows prior to the meme madness, Courtney, but getting there. Thank you.
Thanks.
We've got the NASDAQ composite down 1.34%. We'll be right back.
오늘 S&P 3880이 되게 중요한 체크 포인트가 될 것 같아요.
Transports are failing to deliver any relief for investors today. The iShares Dow Transports ETF, ticker IYT, underperforming the Dow by about 4% this year. And now we got the Citi downgrade today of FedEx, sending shares lower today. Analysts cite some pressures to EPS growth. They cut their price target. They revised the rating to neutral. And overall, just say we are not getting the freight peaks that we typically get at this time of year going into holiday. Maybe that's a sign of continuing moderating demand.
And speaking of transports, there will be more people transporting themselves to the office now that we are after Labor Day. There have been fits and starts over the last 2 years, but Wall Street is tackling its new return to office normal. By and large, it looks something like this. Post Labor Day, employees can work from home when needed, but encouraged to be in the office as much as possible. They must be vaccinated to enter offices in New York, but most other markets don't have that mandate. And once in the office, things will likely look a little more like they did in 2019, with no mask requirements and the curtailing of COVID testing in the office. This is the picture at firms like Goldman Sachs, Morgan Stanley, BlackRock, just to name a few. Most firms have stopped short of issuing broad physical mandates after years of attempting to do so, only to have to switch gears in the face of new variants and COVID waves that would reprioritize remote work, much to the dismay of the C-suite. JP Morgan CEO Jamie Dimon, for example, has long lamented the drawbacks of the work-from-home model, including the lack of apprenticeships, slower decision-making, and less spontaneous learning and creativity. So we'll see, guys, if this latest in-office push will be any stickier. But of course, COVID, so unpredictable. You know, we've seen this movie before, this even just the post-Labor Day marker, only to kind of reverse course and allow people to work from home more frequently.
It hasn't really been about health for a long time, Leslie. At least a year. I mean,
well, once people were vaccinated, things kind of changed.
Yeah.
But in terms of having these broad sweeping mandates and making things look exactly like they did in 2019, we're not really seeing that. I think UBS even has said that they'll allow remote work. They're kind of going the opposite extreme of not requiring people to be in the office, that they've created these special technologies that allow people to work remotely.
yeah. Citi was fairly aggressive early on, but they've sort of changed a bit. I think Jane Fraser, hasn't she? They were sort of more lenient. I don't know where they stand now. Maybe not quite the 5 days a week that some of the banks you mentioned are looking for.
Yeah, and it also kind of depends on your job. If you are working for a Citi bank branch and you're a teller, or you're someone who's on the other side of the loan desk, I mean, you need to be there to serve your clients. That's a requirement of that job. And JP Morgan, just kind of as their peer, has said that 50% of the workforce really falls into that category. The other, 40% say, they said, can do more of a hybrid model with 10% working from home exclusively. But again, it kind of goes back to what your job description is.
Yeah, that kind of fits with the number of people who were in 5 days in New York. I think it's 8%. We, the three of us, are part of the 8%, at least in New York City. Some rarefied air. Coming up after the break, Digital World acquisition plummeting on some headlines you might have seen already this morning. Was on pace this morning for the worst day since June, when it fell 28%. We'll get details after a break.
지금 시장이 얼마나 더 흘러내릴지 한번 예측을 한번 해볼까요? 일단은 일봉으로 보면은 지금 S&P 같은 경우에는 아마 애매한 위치일 거예요. 지금 이걸 기준으로 했을 때 1.8%가 내려왔거든요. 그러면은 대부분 50%에서는 반등 거를 보고 68%에는 더 확실한 반등을 예상을 하거든요. 그런데 지금 그 지점에서 지금 계속 좀 싸우고 있는 그런 모습을 보여주고 있고, TD 시퀀스 카운터를 봐도 지금 여기서 컴플릿 된 데서 다시 새로운 시퀀스가 생기고 있는 그런 모습이고, 이런 걸 볼 때 이제 주봉으로 보면은 비슷한데, 주봉으로도 카운트 3이 나오고 일봉으로도 카운트 3이 나와요. 그럴 경우에 이게 매치가 되는 경우가 많죠. 그러니까 지금 더 내려갈 수 있는 확률이 여기서는 좀 읽혀지고, 그 다음에 월봉으로 본다 그러면은 월봉으로는 이제 거의 다 하락세를 마친 모습이거든요. 8이니까 한 이번 달 정도까지. 그러니까 지금 당장 반등을 할 수 있는 그런 시그널은 조금 부족한 것 같고, 약간 보합세가 약간 흐르면서 약간의 보합세가 있을 것 같은 게 강한 추세인 것 같네요. 모든 모멘텀도 그렇고, 일단 마켓 오버솔드 된 상황도 거의 다 이제 가까이 오고 그러니까 한 뭐 조금만 기다리면 될 것 같아요. 한 3,900 근처에서 좀 유지해주는 식으로 버텨주지 않을까 싶은 생각이 드네요.
Factors working over there. Absolutely. Thanks. We're about an hour into today's trading session. Let's turn back to the broader markets. This morning, Morgan Stanley's Mike Wilson doubled down on his bearish stance, writing, "We think the next several quarters will end up containing some of the most significant downward revisions to forward EPS forecasts we've seen in the past several cycles." He's been consistent on that front. Let's get to Bob Pisani for more on how we're trading today, Bob.
And Carl, those estimates we have now are about half what they were a few months ago. So Q3 and Q4 for the S&P 500 earnings estimates up 5 to 6%. Still up, but about half the 11% it was just 2 months ago. So Mike's directionally right, at least on the downtrend there. We're seeing a lot of post-Labor Day trading that looks like pre-Labor Day trading. In other words, we have a failed rally. A lot of times, 6, 7, 8 of the last trading sessions, 6 out of 7, we've seen the high print right at the open for the morning and then trend downward throughout the morning. That's happening again today. We had 2-to-1 advancing to declining stocks, up 20 points at the open. And now, look, we're negative, and it's 2-to-1 declining to advancing stocks right now. You see, we took another leg down around 10 a.m. That's when we saw the August ISM services come out. That was a little stronger than expected. And again, you get this problem with slightly stronger than expected, not going along with the narrative of we're looking for a little weaker because that's what the Federal Reserve wants here. Also want to point out the VIX is over 27. Now, this is the highest reading since mid-July. This is high but not panicky high. I just want to say, normally panicky high to me would be in the mid-30. That's where we were June 16th, 17th, 18th. That's when we hit the bottom earlier in the year, 35 or so. So you got to get into the mid-30s before you really start seeing people noticing panicky levels. Not much in the way of buying enthusiasm today. You know it's a defensive day when utilities, real estate investment trusts, healthcare, those are your leadership groups. Tech is down about 1%, mega cap down. ARC Innovation, of course, that's a high beta tech names. They're down 2 to 3%. I just want to point out the coal names because after a weekend where there was a lot of discussion about what's going on in energy in Europe, the coal names are again moving to the upside. They're not normally appearing on the top of the trading list in terms of gainers, but they are today. Big cap tech down about 1 to 2%. And we've seen some real declines here. 6 out of 7 trading days. Apple's been down. Microsoft down. Microsoft was 280 not long ago. Now it's looking 254. Apple was, 163 a short while ago, 7 or 8 trading sessions. Now sitting right around quite down there, 154 right now. So quite low. We're down about 10% overall in the last 6 or 7 trading sessions for Apple. Leslie, back to you.
Yeah, Bob, now that we're kind of very much in September, is there any seasonality that we can glean from what's going on with the market today, what happened last week? expectation of more choppiness to come
Yeah,
this
the
month?
problem is normally on a seasonal basis, September is not a great month. In fact, in the last 50 years, it's actually the worst month. It's the only one that's actually down on an average basis. August, September, October, not a good quarter. Everybody waits for November, December, and January, generally when you get the three best months together of the year. The problem is seasonality may not mean
애플도 지금 피보나치 리트레이스먼을 보면은 50% 정도를 터치하고 지금 버티는 분위기니까 이제 요 애플의 위치가 가장 중요할 것 같아요. 152불대를 유지해 주는지. 그리고 애플은 오늘 언제죠? 내일인가? 내일 프로덕트 이벤트가 있죠. 뉴 프로덕트 이벤트. 그러니까 그게 좀 호재로 작용한다 그러면은 시장을 좀 끌어들일 수 있는 원동력은 만들어낼 수 있을 것 같아요. 그리고 테슬라도 지금 지지선을 유지는 해주고 있어요. 267불 정도 되는 위치. 그 위치가 서포트가 되는지 봐야 되고, 만약에 그게 깨지면 255까지 흘러내려갈 수 있는 그런 흐름의 확률이 있죠. 얘도 지난 저점부터 올라온 거를 한번 쭉 연결을 해보면 얘도 한 50% 근처에 지금 와 있거든요. 그러니까 일단은 시장보다는 좀 강하게 가지고 있다, 그렇게 볼 수 있을 것 같아요. 지금 지수들도 보면은 약간 저점 확인을 하고, 인트라데이로 봤을 때 저점 확인을 하고 지금 약간 반등을 하려고 하는 그런 제스처가 읽히긴 하거든요. 그러니까 하방으로 인버스로 오전에 이제 수익을 내셨다면 이제 후반전에는 반등하는 거를 좀 잡아보시면은 어떨까?
to the stock, essentially. So it increases the value of your liquidation ever so slightly. Goes into the SPAC, and that will buy them another 3 months. But to your point, they need to get this an affirmative vote. It's like people voting against. You simply have to vote, as you said. And many of them may just not be aware, may not be showing up. Send in
Why do you think that is? Do you think that is truly the case? And is there a will and the capital out there to reverse this and solve that crisis?
Yeah, it's a great question. I think we have been underinvested and continue to be underinvested. I mean, I think when you have no less than Elon Musk saying we need to be using, all means at our disposal, oil and gas included, it's really not an or, it's an and. So over the last 10 years, we've definitely seen underinvestment, and that came partly because of capital allocation dynamics. And at this point, you're seeing fewer permits granted. You're seeing energy companies be very judicious with their capital. So I don't think this is about to end anytime soon. And we're going to need a sea change in terms of the political environment to really make the change. And, I guess good news for investors is from a U.S. perspective, I think that makes us very bullish on U.S. energy because to some extent we're going to succeed in spite of ourselves because we are blessed with an incredible amount of natural resources here in the U.S. and the world needs those natural resources.
What about the actual capital available? There's the political will, as you mentioned, with regard to permits and so forth. But there's also the typical limited partners that would go into funds such as yours, pension funds, endowments. They've been shying away from these assets in recent years due to pressure from their constituents. There was Preqin data that found that PE firms raised just $3 billion across oil and gas-focused funds in the U.S. in the first half of the year, 40% less than just the same period last year. So is there capital that can actually go into some of these projects to reverse the underinvestment that we've seen?
Well, there's certainly capital out there. You bring up a great point. We're talking about energy transition, and I think if not all of us, the vast majority of us agree that that needs to take place. We've got a climate change issue. Transition needs to take place. The question mark is really over what time period can that transition reasonably take place? We've got companies today in traditional oil and gas trading at 3 times earnings with 40% free cash flow with virtually no debt. So I think ultimately the capitalist system wins out and you find pockets of capital that actually want to invest in these companies. I also think that pension plans and others over time will take a more reasoned approach to the and, not the or, and that energy transition does need to take place, but the time frame over which we can reasonably do that has to be realistic. So short answer, yes, I think there is capital out there. I think the returns are too compelling to ignore. And I think at the end of the day, pension plans and others are representing their constituents' money. And if it's a good place to go, it will go there.
Alex, David, I wonder, did the Inflation Reduction Act change any of your views in terms of how you're actually going to allocate capital, or will it result in perhaps you taking a look at things you might not otherwise have?
No, David, great question. We're really playing across, the full spectrum of the energy sector. So as Leslie mentioned at the beginning, E&P, infrastructure, renewables, we think there are opportunities in each and a transition has to take place. I think the Inflation Reduction Act does provide some incentives on the renewable side. It doesn't change anything that we were already doing. It enhances returns on some renewables dynamics. I don't think it changes anything with respect to traditional fossil fuels or how we will be allocating capital.
So given the confluence of factors, macro factors, political factors, geopolitical factors that are out there, where are you seeing the most opportunity right now? Is it on the renewable side, or is it on more traditional energy?
I really think it's both. To your question, this is really an and, not an or. So we play in all of those, and I think there are tremendous opportunities in all of them. Traditional fossil fuels as well as renewables all have to play a significant role in satisfying our energy needs. So we're playing in all of them. We see tremendous opportunities from a U.S. perspective. Not only is the U.S. a safe haven in terms of the global order, and I think some of the dollars that we'll be looking at for investment will be coming from foreign sources, but also you've got, as I mentioned, the natural resources and the ability to satisfy global energy demands here in the U.S. And as one of your, as a previous guest mentioned, we are already a large exporter, but we have the capability to do far more. And I think we'll see this play out in terms of nat gas and LNG. And the world order in terms of energy is certainly reorganizing right now. If the Russia-Ukraine war ended this minute, we would not go back to business as usual. And I think we'll see that play out over the next 5 to 10 years.
Interesting. The world order reorganizing right now. We really appreciate your perspective and insight, Al. Thank you for joining us today.
Thanks for having me. Appreciate it.
As we go to break, a quick programming note. Starting tomorrow, Tech Check will be live from the Code Conference in Los Angeles, where the speakers include Tim Cook, Andy Jassy of Amazon, Sundar Pichai of Alphabet. Of course, we'll bring you live coverage alongside Kara Swisher and the crew. In the meantime, Dow almost erasing all of its morning losses, down 2 points. Squawk on the Street. I'll be right back.
여러분들이 트레이딩 할 때 차트를 보실 때 이런 부분을 잘 관찰해서 보셔야 돼요. 이걸 플래그를 만든다 그러는데 이렇게 돼서 여기가 지지가 되고 그 다음에 하락세로 가는 듯하게 보이게 플래그를 만드는 거죠. 기뽕 플래그. 거기서 터지면 플래그의 길이만큼 그러니까 기뽕의 길이만큼 올라갑니다. 기뽕만큼 올라가요. 그럼 요거는 잘하면 여기까지는 올라갈 수 있어요. 여기까지 올라간 다음에 또 요런 비슷한 플래그를 한번 그려줄 수도 있고요. 그래서 지금 같은 경우에는 한 번, 두 번, 뭐 한 3번 정도 가면 오늘 잘하면 이거 다 회복하고서는 오늘 반전으로 갈 수도 있는 그런 트렌드로 보셔도 돼요.
Coursera.org.
Welcome back to Squawk on the Street. I'm Contessa Brewer. Stocks are well off their lows of the session this hour. In fact, we've seen the Dow hovering around the flat line. However, the communication services sector is still lagging as a number of growth stocks underperform. Media players like Netflix, Paramount, and Warner Brothers are among the worst performers today. And we're also seeing big declines in a range of tech and media giants, including Disney, Alphabet, and CNBC parent Comcast, all of which are down 1% or more. Carl, send it back to you guys.
All right, Contessa, thanks. Contessa Brewer. Coming up after the break, 65 million people impacted by new COVID lockdowns in China. Meantime, you got the NASDAQ down 7 straight sessions. We haven't done that since a 9-day loss in 2016. We're back in a moment.
뭐 이런 예측을 해서는 안 되지만 느낌이 오늘은 이 흐름이 오늘 보통 이제 1시간 반, 한 2시간 정도의 흐름을 보면은 그날의 전반적인 흐름을 읽어볼 수는 있는데 일단은 크게 보면은 천천히 움직이는 자체가 오히려 훨씬 더 긍정적인 것 같아요. 너무 레디컬하게 막 빠르게 움직이면은 좀 변동이 심할 수가 있는데 오늘 같은 경우에는 장 초반에 쫙 흘러내리고 또 지금 회복하는 속도가 그렇게 급하게 올라가지 않고 천천히 올라가는 자체가 어떤 뭐라 그럴까 투기성보다는 그냥 천천히 정말로 이제 바다 한번 반등을 일으켜 보는 그런 흐름으로 나오지 않나 싶은 생각이 들어요. 그러니까 너무 방향성에 베팅을 하지 말고요. 시장을 보는 그런 시각에서 기술적으로 한 피보나치 60에서 50 사이로 쳤기 때문에 그 전 고점과 지금의 저점의 사이에 한 50% 정도까지는 일단은 반등을 해줄 수 있다는 그런 예측을 한번 해보는 것도 지금의 이 상황에서는 맞지 않나 그렇게 보니까 그렇게 한번 그런 시각에서 한번 바라보고 계세요.
And no returns to the capital from any district or county that has had one positive case in the past 7 days. So no surprise that the authorities would be discouraging people from traveling over the Mid-Autumn Festival holiday, which is coming up this weekend and is usually a big family time for a lot of people. Guys?
Eunice, we got about a minute, but why is China persisting in its zero COVID policy when so much of the rest of the world has essentially moved on?
Well, I think that Beijing has been selling this COVID policy as a big winner for China at the very beginning. China saw it as something that made it look as though it's much better in the way it manages its lockdowns and its COVID infections compared to the West. And so, there's a lot of questions as to whether or not this policy is going to change, maybe after President Xi, assuming he gets a third term. But then there's also a lot of folks who think that that might not happen. And in fact, there was an indication tonight that suggests that his policies might not change. President Xi just announced that he is vowing stronger state-led systems to create breakthrough core technologies. So another very controversial policy.
Eunice, thank you. Eunice Yoon in Beijing for us. That's going to do it for us right here on Squawk on the Street. Tech Check starts now.
Good Tuesday morning. Welcome to Tech Check. I'm Carl Quintanilla with Deirdre Bosa, John Ford, and Julia Borston. Today, the end of summer slump continues. NASDAQ has seen its longest losing streak since the pandemic began, although the S&P and Dow have turned around. Where tech goes from here, why Tom Lee is still bullish, plus the biggest deal of the year, probably not your first guest, why one of our guests says to keep an eye on private equity this hour. And finally, investors looking for the next read on tech demand. Look no further, the latest ahead of a big product event for Apple tomorrow, and even more when we go to Code with the CEOs of Apple, Amazon, and Alphabet all set to speak this week, John.
Yeah, Carl, but let's kick it off today's feed with the NASDAQ in the red yet again as the index sees its longest losing streak since 2019. Senior markets commentator Mike Santoli joins us now to help break down the action. Mike?
Yeah, John, and the macro pressures remain, as we know, across the market, hitting tech and high valuation growth most profoundly. Take a look this year at the U.S. dollar index compared to the S&P tech sector. Pretty consistent inverse correlation. Obviously, the dollar index moves are less dramatic, but not only do you see them being mirror images, but even in the shorter terms, when you see dollar index hitting a new high and then going on a new uptrend, and you see tech weakening again, and vice versa as well, right? You see sort of the dollar index flattening out here, and you got a bottom from mid-June. And then what was happening with this last down leg here in the S&P 500 tech sector? New highs in the dollar index. So global risk appetites on the decline, financial conditions tightening, all those are consistent with both strong dollar and weak tech, in addition, of course, to the basic bottom line fundamental input of international earnings going back and translated into tech company bottom lines at a lower rate when the dollar's stronger. That's the secondary issue in my mind. Now, there's another game going on this year, which is what is and isn't a tech stock within the tech index. So take a look at how IBM, Apple, and others have traded relative to the overall tech index. So ADP, IBM, and Apple. So ADP and IBM have basically, point to point this year, been about the same stock. Apple has outperformed. They're not being treated as traditional tech stocks within the index. The lower valuations, for one thing, steadier businesses. So you have this real bifurcation in the market. And Apple is the most interesting example of this just because it's so huge within the tech sector and within the NASDAQ itself that somehow it's diverging from the average stock there. So financial attributes matter a lot more than sector and where the earnings are coming from. IBM, really just incidental that it happens to be in the technology business right now because it's really more of a contrarian value restructuring type story instead.
Right. Mike, I'm looking at the 10-year yield today, which was above 3.35 at one point, and the NASDAQ, meanwhile, has managed to claw back some of its worst losses. What do you think that correlation is heading into the back half of this year? Usually, at least for the first half of the year, tech stocks have really gone lower on the back of those rising yields, but are investors becoming a little more comfortable?
It's one of the bigger drivers of a general negative pull on tech stocks. It's never seemed to me to be the main one, but it has held the overall market in check. And what the NASDAQ and tech have been is an amplified version of the overall market. If the overall market got a little bit richly valued, growth in tech got more richly valued. So you see a more pronounced impact of things like higher yields, and really just people being more concerned about valuations because of it in that context. So I'm not sure that we've gotten used to it. I'm not sure we've necessarily made our peace with yields at this levels. But once you've had tech down as much as it is, it starts to matter a little bit less each tick in what the 10-year yield is doing.
Mike, appreciate that. We'll talk more in a little while. Mike Santoli joining us here on set this morning. Let's stay on the market. Our next guest says while his expectations for a second half rally are strained, he still remains bullish. Joining us this morning, Fundstrat Global Advisors co-founder and CNBC contributor Tom Lee. Tom, it's great to have you. Thanks for helping us start the hour.
Yeah, great to see you, Carl.
You've done some work in the last couple of weeks, I know, at least looking at various components of CPI that, in your words, are falling.
탐리 얘기 한번 들어보세요.
Though, like that disinflationary thesis is kind of tough sledding when it comes to talking to your clients.
That's right. I think the bar is pretty high for investors and markets and the Fed to be convinced inflation's breaking. I mean, part of it is because inflation is so uncertain that the market wants to have comfort that it's truly vanquished before they think the Fed could even consider being a little easier. But I think one of the things that is giving us a lot of encouragement is, when we look at the 70s to 80s, gasoline never had a drawdown, a decline of more than 2% on a year-over-year basis in CPI until 1982. We're already starting to see gasoline, as you mentioned, fall like a rock. Housing, which has been the one thing that people consider quite sticky and saying shelter could be inflated through the end of next year, is already starting to roll over when you look at the high frequency data like from Redfin or Zillow. And, 42% of the CPI basket of price indices are already deflating from their peak. I mean, that's That's a pretty huge number. So I think that investors should be encouraged that the price sort of impulse of rising prices, I mean, that's hit some sort of wall. We think it's actually going to fall pretty quickly.
Yeah, that's interesting. Although the Fed's messaging, Tom, has been essentially goods deflation doesn't impress us much. We want to see it reflected in wages. And I just wonder whether or not you thought Friday's print on jobs, directionally, the sense was that it was a move in the right direction, but then it got steamrolled by the Nord Stream headlines.
Yes, that's right. There are other things, while the worry out there, that investors are, look over their shoulder. They see China and they see the Russia-Ukraine war and they see the energy crisis in Europe. So these are giving investors pause. But, as a lot of economists note, a lot of those impulses from Europe rarely come back into the U.S. either as inflation. In fact, they tend to just come back as weakness if there's a downturn, and that actually is disinflationary. But I think one of the things we should be heartened by is, even if you look at the employment data, there is a pretty big gap between what's called the household survey and the establishment. In the last 5 months, there hasn't been any growth in full-time employment in the household survey. So I think the job market is indeed a lot weaker than it appears.
Hey, Tom, it's John. Good morning. What kind of data do we have to get heading into the holiday season when it comes to retail and the health of the consumer to keep the market from going down from here? I'm curious what sort of signals necessary for you to stay optimistic.
Well, it's in a way, it's a half full, half empty setup, because we know sentiment is pretty negative, and we know positioning now is similar to where it was, actually pretty close to March 2020 lows or even the GFC. But there has to be a fundamental backdrop that supports investors willing to put money to work. And I think, to me, maybe the biggest thing in the next 3 months is going to be the CPI reports. I just think we're underweighting how important the drop in gasoline's been. Gasoline has fallen huge. That actually does flow eventually into core services through, both bills and then the cost of travel and the cost of moving food. So the drop in gasoline, I think, is really going to show up as deflation later in services.
So, Tom, even though you're positive, you don't sound that positive, right, on the markets. Have you gotten incrementally less positive over the last few weeks or no?
Well, I would say it just feels like we're still teetering on this cliff, and investors are really nervous. So I think, I think the bulls do have to sort of prove their case. But, we've been trying to be led by what we consider to be leading indicators of inflation, because we think that still grounds much of what will drive markets. The one thing that gives us comfort is the bond market is a lot more convinced about the Fed vanquishing inflation than the equity market. Because if you look at inflation swaps, for instance, for the next 6 months, first of all, in the next 2 months, if you look at inflation swaps, we're talking deflation. The inflation swaps market is saying we're going to have falling prices next 2 months. And for the next 6 months, inflation annualizing under 2%. So I think stock market just needs to be convinced of what the bond market is seeing.
Tom, good morning. It's Deirdre. We've been talking to a number of enterprise CEOs on the show over the last week, and the takeaway has been, even from ones that have posted strong earnings like PagerDuty and Samsara, is that they're all seeing lengthening sales cycles. Do you think that the market has priced this in, especially the effect that this could have on the major cloud players, or could this be another shoe to drop?
It's one or the other. It's clear that business leaders and CEOs have become more cautious, and that's why we're seeing the PMIs weaken and the sales cycle and even like hiring plans slow down. But at the epicenter of all that is an abrupt change in monetary policy. I think that when we look back, this is our expectation, this is going to look like the 1980 recession, where it was almost announced on cue because monetary policy wanted to try to abruptly slow the economy. That's a pretty unusual policy shift by the Fed. It's normally in other business cycles, we have an overheated economy, incremental returns of invested capital are turning negative, so the Fed is trying to intervene. This is almost let's just step on the brakes just to kind of slow things down. So I would say a lot of these cautionary moves by companies aren't necessarily because there isn't a demand, it's because demand slowed because of caution. It's a little circular, but I just think a lot of this can reverse if inflation starts to weaken.
Okay, Tom, and while we have you, I do want to get your view on crypto. As the 120-day correlation between Bitcoin and the stock market, that's at all-time highs. What does that mean for Bitcoin's trajectory ahead of the Ether merge and as Bitcoin remains under 20K?
Yeah, it's a great question. I mean, I think Bitcoin and crypto is still sort of reeling from, those shocks that occurred earlier this year that had to do with Three Arrows Capital and other events. And so, there is a equilibrium being established. I don't think that the thesis for owning digital assets has been destroyed. Digital assets really do serve a pretty important purpose and really cut and reduce the cost and improve the access to banking for a lot of people outside the U.S. But this is going to take time. And I think the ETH merge is a pretty big event that's being closely watched. But I think I would say overall, I've been pretty impressed that crypto has actually hung in there because, when people talk about economic, like pessimism and the Fed being tight and risk assets being, something people don't want to touch, Bitcoin's kind of held in there. So, I mean, I think I'm pretty encouraged.
Yeah, it has been sticky around 20K. Tom, pretty fascinating given the chop we've seen in other asset classes. Great start to the hour with you. Thank you so much, Tom Lee. Fun
Thank you.
Meanwhile, the Nasdaq did briefly turn positive. It is now down by about 0.1%. Let's look at Meta, hit by a fine over its handling of children's data. Just the latest in a growing list of headaches for the social platform as big tech comes into the crosshairs of regulators. Julia Borston's got more on that story for us. Julia, I read in a note from one of the Wall Street shops this morning, investors don't care when the balance sheet has $40 billion on it, which has always been the argument and why regulation hasn't really dented their businesses or even investor sentiment.
That's right. We haven't seen privacy crackdowns, regulatory crackdowns hit Facebook's stock price yet, but it is worth taking a look at all of these different factors as they add up. The latest being Ireland, its data privacy regulator, levied a record $400 million fine against Instagram following an investigation into its handling of children's data. That investigation started back in 2020. Meta responding to that it intends to appeal, saying, quote, this inquiry focused on old settings that we updated over a year ago, and we've since released many new features to help keep teens safe and their information private. Now, this all comes amid a growing privacy push here in the U.S. We are waiting to see whether Speaker Pelosi will schedule a vote on the American Data Privacy and Protection Act, which is the furthest along a privacy bill has gotten in decades, though it is not expected to pass. Plus, the FTC, which just sued data broker Kochava, is hosting a forum on Thursday to help it craft new rules on what they call, quote, commercial surveillance and lax data security practices. Though any of those rules it does eventually make are likely to be challenged in court. The much more near-term headache for Meta and these other companies is the growing patchwork of state privacy laws, such as California's Age-Appropriate Design Code Act, which was passed unanimously last week. If it is enacted, it would require privacy by default settings, among other things. So all of this is distraction, and it comes as Apple makes gains on both Facebook and Google. According to a new study out just today from AppSumer, it found that Apple's ad business benefited from its iOS privacy update with a jump in advertiser adoption of its search ads, while Meta's share of wallet declined. Now, as Meta is working to adapt to Apple's operating system changes, it's also making privacy-focused changes to both Messenger and WhatsApp, because though U.S. regulation is not likely to change anytime soon, the scrutiny continues to rise. Guys?
Julia, all this makes me wonder whether we've been spending too much time concerned about government regulation and fines and too little time on the dynamic where these tech giants are checking each other in their positions of strength. You mentioned Apple growing in digital. Just the iOS change has caused the biggest market share and market dominance challenge in digital advertising that I think I've seen in a generation.
Oh, absolutely. I mean, what's interesting is as we hear all these rumblings about regulatory crackdown, here in the U.S., we really haven't seen much action. GDPR, which is the big European privacy law, that did have an impact, and we saw these companies adapt to that. But I think when it comes to what's been going on here, the biggest factor has been the actions that Apple has taken, which are privacy-focused actions. So I think this question of how privacy-focused actions, whether it's by regulators or fines like what we saw out of Ireland or by the likes of Apple, are those going to change the way these companies operate? And, you know, we're seeing Meta trying to get ahead of it with some of the changes they're making around their messaging platforms. But the question of scrutiny of privacy issues, that question is not going away.
Julia, fodder for conversation all throughout the week at Code, that's for sure. Still to come this morning, we're going to break down the most important deal of the year. Not Twitter, but a software buyout our next guest says could, quote, dictate everything in the current deal desert. That story's next, and Tech Check's just getting started.
For certain.
Here's a gut check on Dropbox. Shares are moving higher this morning, about 3.5%, after Bank of America initiated the stock at a buy. Price target of $34 a share. The firm's highlighting Dropbox's strong free cash flow generation, adding that it has an attractive price to free cash flow ratio, which they say portends strong stock performance during Fed tightening cycles. Stock's still down for the year, but it's holding up better than the broader market, Dee.
John, this is a stock that went public at $21 and has really just languished around that tight range for years. So interesting call there. Let's turn now to the broader M&A landscape. Is the most important deal of the year Citrix? Our next guest seems to think so, calling the $17 billion software buyout a bellwether for financing markets as the Fed looks to bring inflation under control. Joining us now, Puck News founding partner and CNBC contributor Bill Cohen. Bill, I loved this breakdown. I know all of us are kind of focused on Twitter. There's a huge equity portion of that. But that's why Citrix is so interesting. That deal was made in a very different environment than the one we are currently in.
Yeah, it was cut at the end of January when the Fed still was keeping interest rates extremely low, sort of the tail end of the zero interest rate policy. But it's coming to market now, and interest rates are extremely different. The high yield bond, average high yield bond is approaching 9% from something like 4%. So all the pricing, everything that the banks committed to back in January is going to be tested now. And it's not only a test of how much the banks potentially could lose, it's also a test of how receptive the financial markets are to the deals that are stacked up behind it. Deals like Nielsen and Tenneco that are about to be priced based on what happens here with Citrix. So this is a truly important moment, one of those rare moments that we get, frankly, in the financing markets.
At the same time, Bill, this has effects for leverage buyouts, right? And you could argue you're not really seeing as many of those in the current environment, and there is so much dry powder that private equity funds are holding on to. It may just lead to a different kind of deal, right?
Right. It might mean a lot less leverage, more equity. I mean, we won't get to anything like what perhaps the Twitter deal, if it ever gets done, looks like, which is, 3/4 equity, which is close to insanity in terms of a deal structuring environment. But this is 7 times leveraged. It's going to result in pricing that's going to, I think, surprise the market, and is going to result in losses for the banks that committed to it earlier in the year. And as I mentioned, Nielsen, which is a buyout, and Tenneco, which is an Apollo buyout, both are going to be priced based on what happens here with the Citrix deal.
So, Bill, give us a bottom line here. What does this mean for growth stocks right now that some investors think might get rescued by private equity? What does it mean for the IPO market as some might begin to test the waters of that?
I think the buyout market is going to be very, very shaky now until interest rates settle out. And by very, very shaky, I mean very, very few buyouts. It's certainly nothing like the multiples that had been paid in years past, something like 11, 12 times EBITDA with, this huge amount of debt, 7, 8 times EBITDA in debt. That's just not happening now. And it's not going to happen until people have a sense of how far the Fed is going to go raising interest rates. As for the IPO market, also quite dormant. Perhaps with the exception of the Porsche deal that's lining up now. But most IPOs are, this is not a great time for IPOs. Investors are not interested in that kind of risk right now. This is a recalibration of risk across the board. It's healthy, by the way, very healthy, but it's very unsettling, too, for investors and for issuers because expectations still have not recalibrated back to what should be a proper risk management environment. It's going to take time.
But if you look at Thoma Bravo and Silver Lake, they still seem to want to encourage certain types of deals to happen, even if they're not looking to take many things out or everything out entirely. So doesn't that provide some support to growth tech in the market?
Yeah, I mean, again, these buyout firms, as you said, have a lot of dry powder. They've got to put the money to work. But the question is when is the right time to do that? Just because you have the money doesn't mean this is the best time to invest it or to make deals because it's too uncertain, both on the valuation point of view. What do you pay for these companies? What will the companies' boards of directors accept? What is a fair deal at this point? And by the way, if you're a buyout firm, you want to borrow as much money as you possibly can to make the economics really attractive. And what are the financing markets willing to provide right now? Big questions.
Yeah, okay, so Bill, for the bank side of this, I know in your piece you looked at this could be in the ballpark of $1 billion loss for the banks that financed the Citrix deal. But, you know, Tomo Bravo, again, doing all cash deals. How does that change bank earnings? Can they earn fees, and is there as much opportunity to lend for the banks if you see more of these deals instead of buyouts?
Yeah, I mean, if buyout firms are willing to do all cash, and I assume you mean by all equity deals, you know, fine, that those deals can get done all day long. I'm not sure the limited partners in those funds are going to be happy with the economics there unless it's you know, a huge home run. And as for the banks, you know, again, this Citrix deal is going to be the bellwether. If they lose $1 billion or more, then the caution flags are going to go up. This is not a great year to be losing that much money, even if it's spread across a lot of banks. I mean, this has been a real slowdown in investment banking, and you know, bonuses are going to be
on
low.
top of a year where deal activity has been relatively muted. Bill, thank you so much for being with us. Bill Cohen.
Thank you.
Speaking of deals, Amazon losing some ground in the health tech game. CVS, as you know, announcing yesterday it has reached a roughly $8 billion deal to buy Signify, beating out Amazon for the in-home patient care company. CVS saying it would pay $30 to $50 per share for Signify after the stock price surged in August, first on rumors that it was seeking a sale, and then again when Amazon was among the reported bidders after acquiring One Medical for about $3.9 billion. In July, John. Pretty interesting, even amid headlines that they continue to retrench on some warehousing plans going into the peak selling season.
Yeah, I wonder, Carl, did Amazon really lose here if they drove up the price for CVS? I mean, maybe that's all they wanted to do, is make sure that, you know, other people aren't getting stuff for cheap. We'll see. Look, we won't see, actually. We'll just have to wonder. Looking for a read on what comes next for tech markets, aren't we all? Well, we've got more on tomorrow's Apple event in just a moment, plus a whole lot more from Vox Media's Code Conference throughout the week, with Tech Check coming to you live from the scene starting tomorrow. Tim Cook, Andy Jassy, Sundar Pichai, and a whole lot more. Don't miss it. We're back in a moment.
주요 뉴스를 한번 살펴봅시다, 오늘. 일단 뭐 오늘 지표 나온 것들 예상치보다 적게 나온 거 2개가 있고 예상치보다 높게 나온 게 2개 있어요. 그러니까 뭐 이 뉴스의 좋고 나쁨은 그렇게 큰 시장에 영향을 미치는 것 같진 않아요. 요즘 시장은. 요즘 시장은 진짜 지멋대로 가니까 일단 마켓 센티먼트가 가장 중요한 것 같고 어, 그리고 뭐 특별한 또 빌 아크만이 바이 시그널이 올 때에 어떤 아웃라인 하나 만들어 놨네요. 이거 한번 읽어볼 필요가 있을 것 같고 한번 읽어보고 정리를 한번 해드릴게요. 무슨 얘기가 이거는 읽어봐서 나오는 건 아니고 이 클립을 다 봐야 될 것 같아요. 예, 페드가 레이트를 4% 이상 올려야 된다 뭐 이런 얘기를 했구나. 요 후에 이제 바잉 오퍼튜니티다 뭐 그런 얘기를 했을 것 같아요. 한번 이 클립을 다 읽어 봐야 될 것 같아요. 클립을 같이 볼까? 좀 이따가 지금 계속 볼 수 있을지 모르니까 잠깐 보고 크루즈 라인 이 CFO 이거 자살한 거는 왜 자살했는지 모르겠어. 큰 관심은 없지만 뭐 이거는 뭐 코미디인가? 왜 젤렌스키가 뉴욕 익스체인지 오프닝 벨을 띵띵띵띵 했어요? 코미디인데 이건 조금 예, 마켓 뉴스는 뭐 그렇게 크다란 거는 아직 없는 것 같아요. 아마 이 센티먼트가 막 엄청 안 좋아졌다는 그런 게 있죠. 8월 31일 기준으로 봤을 때 지금 베어리시한 게 히스토리컬 에버리지보다 거의 뭐 몇 퍼센트야? 70%, 170% 이상 올라가 있죠. 요게 이제 굿뉴스 앤 배뉴스예요. 이게 안 좋으면은 그만큼 바잉 오퍼튜니티다. 그렇게 생각할 수도 있고. 이제 드디어 이 피어로 들어온다는 거는 뭐 나름대로 쇼텀으로 봤을 때 바잉 오퍼튜니티가 될 수도 있다. 그런 거 보시면 되고. 블룸버그에는 특별한 뉴스가 블룸버그는 상당히 정치적인 얘기가 많아요. 정치 경제 그다음에 지오폴리티컬 뭐 이런 것들이 다 연결돼서 많이 아리클들이 나오죠. 여기에는 지금 이 조 맨친이 조 바이든보다 더 위험하다. 그런 소리를 하는 그런 아리클들도 어디 있어요. 인플레이션에 있어서 그런 얘기를 하는 그런 아리클이 있어요. 이 정도 지금 돌아가는 것 같고 빈비즈로 마켓을 보면 마켓은 지금 전반적으로 지금 다 플러스로 돌아선 상황이죠. 마켓 전반적으로 다 플러스로 돌아선 상황이 되었고 나스닥도 지금 딱 지로 제자리. 그리고 일단은 빅테크들이 의외로 빅테크들보다는 지금은 또 작은 종목들이 막 날아갈 수도 있으니까 작은 종목 같은 걸 좀 찾아볼 필요도 있을 것 같고 그리고 테슬라도 올라오는 것 같고요. 오늘은 그렇게 큰 폭은 아니더라도 그리고 엔페이스 같은 경우에는 아주 잘 찾아주셨는데 큰 흐름으로 보면은 이 지난번 이 갭을 아직 그 밑으로 떨어지지 않았어요. 그걸 보면은 흐름이 강하게 보이는 것 같고 이게 이렇게 해서 지금 모멘텀은 아직 상승 모멘텀 컨펌은 안 됐는데 여기 이제 상승 모멘텀으로 들어선다 그러면은 얘는 좀 더 올라갈 수 있는 가능성 한 305불 정도를 뚫는다 그러면은 한 크게는 아니더라도 한 10불 정도는 더 올라갈 수 있을 것 같아요. 오케이. 여기까지 지금 보고
Our Courtney Reagan has more on this story. Courtney?
Hi, Dee. Yeah, Bed Bath & Beyond's chief financial officer, Gustavo Arnal's death does add to the company's turmoil. Board chair Harriet Edelman said the company's focus is on supporting his family and his team, and our thoughts are with them during this sad and difficult time. Bed Bath & Beyond is elevating Laura Crossan to interim CFO. Sue Gov remains interim CEO after Mark Trinton was fired in June. I've confirmed that the various financing facilities announced August 31st with JP Morgan and Sixth Street Partners were finalized ahead of Arnell's death. Arnell was part of the team that detailed the updated strategy that includes large layoffs, store closures, and the new financing. He joined the company in May 2020 during now former CEO Mark Tritton's transformation, which included a large inventory overhaul, much of which is now being reversed. Tritton had a number of e-commerce initiatives too, including a revamped loyalty program, same-day delivery options, and a partnership selling thousands of Bed Bath & Beyond and Bye Bye Baby items on Kroger's website. But the e-commerce strategy has faltered too. Digital comparable sales down 21% year over year in the most recent quarter, slightly better than the store sales trends, but not much. Digital comps fell 18% in the fourth quarter compared to the prior year. Shares are down sharply today, but important to note, about 40% of the shares are held short, with very high volatility in this name typically and active involvement from the so-called meme traders, as you mentioned there, Dee. Carl, back to you.
Court, what a tragic set of challenges in front of that company right now. That's our Courtney Reagan. A Tech Check is back after this. Stay with us.
지금 EV 무조건 좋다 생각하는 그런 생각이 시장에 전반적으로 흐르긴 하지만 이 EV에 대해 가지고 좀 잘 생각해 볼 필요가 있어요. 이게 안 좋다 나쁘다 안 좋다 뭐 그런 얘기를 하는 게 아니라 이게 전기를 어디서 충족을 시킬 것인가 그거에 대한 것도 상당히 큰 이슈가 될 수 있어요. 제가 전기차를 오래 타고 다녔지만 기름이야 저번에도 얘기했지만 어디다가 내가 싸놓고선 쓰면 된다지만 전기는 너무 디펜던이 커요. 전기가 누가 안 만들어주면 그리고 솔직히 말해가지고 캘리포니아 같은 경우에 2035까지 EV로 다 해야 된다 뭐 이런 식으로 얘기를 하는데 그렇게 되면은 그거 집에서 충전을 무조건 해야 되는 상황이고 바깥에서 충전하는데 충분한 인프라스트럭처가 없다? 충분한 인프라스트럭처가 숫자로만 되어 있는 게 아니라 정말 전력을 다 공급할 수 있는 시간적으로 충분히 빠르게 줄 수 있는 그런 구조가 되지 않는 이상은 이거는 진짜로 토럴 디제스터가 될 수 있는 그런 아이템이기도 해요. 그러니까 뭐 돈 벌 수 있을 땐 버시면 좋은데 이게 미래다. 이게 뭐다. 그것까지는 조금 좀 약간 sarcastic하게 좀 받아들여 볼 필요도 있을 것 같아요. 지금 상황으로 봤을 때는 캘리포니아 맨날 전기 부족하고 그런 흐름을 보면은 이게 쉬운 게임은 아닌 것 같아요. 그런 면으로도 한번 생각해 보세요. 또 여러분들 사이에 이 환경에 대한 이야기를 많이 하고 계시는 것 같아요. 저도 이번 주말에 이렇게 다니면서 전기 그런 것 때문에 많이 고민이라고 해도 얘기를 해봤는데, 야, 이게 진짜로 우리가 살고 있는 세상이 정말 그 화석 연료가 주는 산업 안에서 우리가 살고 있는 거잖아요. 주변에 봐도 다 플라스틱. 컴퓨터 지금 쓰시는 거 봐도 다 플라스틱. 마우스도 플라스틱. 모니터도 플라스틱. 만약에 우리가 석유를 안 쓰면은 그런 거를 뭐로 만들어낼 수 있을까? 그런 것도 이제 큰 과제가 될 것 같고, 그 다음에 우리가 자연을 보호하기 위해 가지고 뭐를 막 하는 것도 있지만, 일단 자연을 훼손 안 하는 게 가장 넘버원 해야 될 일이 아닌가 그렇게 생각해요. 그리고 이게 그 재활용의 한계도 있을 거예요, 아마. 지금 있는 플라스틱을 계속 다시 녹여서 다시 쓰고 다시 녹여서 다시 쓰고 하는데, 그래서 재활용을 했을 때 순도가 떨어지기 때문에, 그렇죠? 그런 것도 이유가 있을 거고, 그리고 그거를 녹이기 위해서 뭘 써야 되느냐, 또 그것도 문제가 되고, 그러니까 이게 아무리 용을 써도 답은 없을 것 같아요. 정말 힘든 그런 과정인 것 같아요. 어쨌거나 뭐 일단은 안 쓴다기보다도 쓰는 숫자를 좀 줄이는 거, 그런 거밖에 없는 것 같아요. 일단은 일회용 컵을 쓰더라도 좀 린싱해서 좀 더 쓰고, 그렇죠? 그런 분위기. 생각을 해볼 필요는 있는 그런 분야인 것 같아요.
China cuts their triple R, their lending rate, 200 basis points because they're so slow, and they're now seeing more closures because of COVID. And the Fed got the green light on Friday from the non-farm payroll numbers because wages are still high at 5.2% year over year.
Today
and oh, by the
too,
way,
right? Today too, right? ISM was more green light.
yeah.
요즘에 보면 이제 종이로 대체를 하는 것들이 많이 있는데, 이제 종이의 딱 하나의 약점이 그거죠. 모이스처에 약하다는 거. 종이 빨대도 그렇고, 그렇죠? 종이 용기도 그렇고, 플라스틱과 큰 차이점이 있죠. 그런 것들이 이제 큰 차이를 만들어내는 것 같고. 대나무 용기. 저는 그냥 스테인레스 스틸 사발이 최고인 것 같은데. 오래 가고 안 부셔지고 닦아도 깨끗하고. 한 번 만들면 정말 잊어버리지만 않으면 100년 쓰지 않을까요? 괜히 어설프게 나무 줄이지 말고. 그리고 나무를 많이 심어야 돼. 근데 나무들을 안 심어서 문제인 것 같아요, 요즘에는. 한국에도 뭐 나무 심나요? 요즘에 한국에는 식목일 같은데. 미국은 그런 게 거의 없죠. 나무 심고 그러는 거는 거의 없는 것 같아요. 하여튼 뭔가 혁명적인 게 일어나야 될 것 같아요. 플라스틱에서 완전히 벗어나는데 플라스틱만큼 우리가 편안하게 쓸 수 있는 무엇인가가 이렇게 나오지 않는 이상은 어려울 것 같아요. 그게 큰 숙제일 것 같고, 그게 어떤 산업에서의 큰 레볼루션이 되지 않을까? 그 아이오닉 5에는 그 자동차 스타트 버튼이 있나요? 저는 엊그제 이제 테슬라를 운전하고 가다가 그 생각을 해봤어. 야, 이게 만약에 무슨 말펑션이 있어가지고 스탑을 시킬 수 있는 방법이 없네. 그렇게 되더라고요, 테슬라는. 거기 스위치 자체가 없어요. 안에서는 차를 스탑 시킬 수 있는 방법이 브레이크밖에 없는데, 브레이크도 다 일렉트릭이고, 그 다음에 뭐 브레이크 같은 것도 이제 뭐 페일러 나면은 뭐 안 되는 거잖아요. 모터가 계속 돌면. 음식 투고박스. 전 옛날 생각이 나네요. 아주 어렸을 때 저희 할아버지가 몸이 편찮으셔가지고 가끔 뭐가 드시고 싶다 그러면 저희 어머니가 그 빈 양은 냄비를 들고 음식점에 가서 받아오셨어요. 뭐 그런 식으로 이제 다시 아주 옛날처럼 돌아가면은 그런 투고박스의 문제도 없어질 것 같아요. 각자 자기 용기를 가져와라. 뭐 이런 식으로 자기 용기를 가져와서 받아 챙겨가면 디스카운트 해주고. 아니면 아예 식당에서 자기네들의 그 사이즈에 딱 맞는 자기네들의 음식을 딱 배달할 수 있는 용기를 좀 더 이게 내구성 있는 걸로 해서 파는 거죠. 그래가지고 팔고 크레딧을 주거나 뭐 그런 식으로 하면은 그런 무언이 있으면 좀 되지 않을까? 우리가 머그컵을 쓰는 것처럼. 요즘에도 그런지 요즘에 스타벅스에 머그컵 가져가면은 1불인가 디스카운트 해주죠. 1불인가? 25센트인가? 뭐 큰 돈은 아니지만 그래도 그런 움직임이 있긴 있었죠. 역시 한국은 빠르네요. 한국이 그런 걸 보면 참 여러모로 엄청난 선진국이 되기 참 좋은 위치에 있어요. 오늘 주가의 움직임을 잘 지켜볼 필요가 있겠네요. 딱 전환점이 될 것 같아요. 잘하면 피벗이 될 것 같기도 한데 일단 완전히 플러스로 돌아서면서 흐름 자체를 약간 상승세로 끌어줄 수 있는 그런 모멘텀을 가져준다면 그래도 지금 S&P 기준으로 본다 그러면은 고점에서 지난 저점 사이 항상 이런 식으로 사람들이 체크를 하거든요. 테크니컬 분석하는 사람들이 고점에서 저점 사이 고기의 50% 그럼 한 4100 정도까지 지금 여기 파랗게 제가 바운더리 만들어 놓은 거기까지는 한번 리커버를 할 수 있는 그런 찬스가 될 것 같아요. 만약에 그렇게 된다 그러면 주식시장이 대략 요 안에서 박스권 횡보를 할 가능성도 높다 그렇게 봐야 돼요. 지금 이 고점 이렇게 지금 이 고점을 다시 탈환하는 거는 뭐예요? 연준이 피벗을 한다 그러면 여기까지 또 갈 거예요. 그러니까 지금 빠진 거는 요때죠. 연준에서 이제 CPI가 나오면서 그때가 여길 거예요. 7월 한 16일 요 근처부터 해가지고 이제 연준이 피벗을 할 거야. 연준이 금리 인상을 천천히 할 거야. 그런 기대감이 이만큼 올라갔잖아요. 그러니까 연준이 피벗을 한다 그러면은 4,300까지 가는 거예요. 아니면은 3,900인 거고요. 근데 3,900이고 4,100. 요 사이는 충분히 어떤 조그마한 호재 때문에 올라갔다 내려갔다 할 수 있는 그런 영향이 될 수 있다는 거예요. 그래서 언제 제가 이걸 쳐놨는지 모르지만 대략 3,900에서 4,100 사이가 요번에 한번 볼 수 있는 박스권의 레인지가 아닌가 저는 개인적으로는 그렇게 생각이 됩니다. 그래서 만약에 이제 연준이 요번 9월 일단은 9월 다음 주죠. 다음 주에 CPI 나오는 거가 일단 상승세가 멎어 있는 게 나오고 하락세로 가고 그 다음에 좋기야 뭐 GDP까지 좀 잘 나오면 좋긴 하겠지만 그럴 것 같지는 모르겠고 그래서 연준이 이제 데이터 가지고 자기네들은 판단한다 그랬으니까 그 데이터가 뭐 안 좋게 나왔으니까 그러면 우리가 요번에 75bp 올리고 그 다음에는 한 50bp나 뭐 25bp 올리는 걸로 끝낼 수 있겠구나 뭐 그런 뉘앙스가 있다 그러면은 4,300까지 다시 갈 수 있죠. 근데 특별한 그런 얘기가 없다 그러면 그냥 CPI 잘 나온 거 가지고 한 4,100까지 갈 수 있는 가능성은 있다 그렇게 보고 뒤에 연준이 정책이 바뀌지 않으면 또 실망해서 또 이렇게 내려오고 또 그 다음에 CPI 때문에 올라가고 이런 식으로 그렇게 흘러갈 가능성이 있지 않을까 저는 개인적으로 그렇게 생각합니다. 이 CNBC 해학타임 리포트를 들으세요.
Intel and Paramount, they made 52-week lows today. Look at the ARK fund, which is near its 52-week low. Look at Zoom, which is near its 52-week low. Look at the cannabis sector, which everyone a couple of years ago wanted to own. These are the things that you can't own right now. And I think that's what's important. Where you avoid the potential for outsized risk losses, that's how you manage through this process of time.
Well, what makes it especially challenging, Josh, is that you don't know what the right price is, right? Time is one metric by which you try and make investment decisions by, but price is a significant one, and we don't truly know the price because we don't know exactly what the earnings are going to be. We don't know what multiple those earnings deserve. Mike Wilson today says this is Fire and Ice Part 2, and that it's more about the ice. And what is he talking about? He's talking about earnings. He says they revised their 2022 base case EPS estimate to 220. That's from 225. So he's still negative. It's not like he's, throwing the whole thing out. He does not embed an economic recession in his scenario of a contraction he thinks will be about 3% in year-over-year earnings growth. That's not horrible. It's just realistic. What we've tried to make the case on what is realistic and what isn't. Earnings are likely to come in. What price do you pay for stocks in that scenario is the great unknown.
Well, we know the retailers are now struggling with ballooning inventories, and that was very easily foreseeable. We talked at the end of 2021 about double ordering and people just saying, we'll just take as much as we can get because we don't actually think we're going to be able to get it. That story has actually played out, combined with the fact that people who have spent a lot of money on durable goods, which is a huge part of S&P earnings and market cap, people who have spent a lot of money on that stuff don't repeat those purchases the next year. The Fed, I've mentioned on the show, if they could wave a wand and they could slow demand only in certain areas, they would do that. But the Fed is not doing surgery. The Fed really only has one very blunt instrument, and that is to hit consumer demand any way that it can, and then try not to overdo that. But in that process of hitting consumer demand, you're going to have a situation where earnings have to come down, and it's deliberate. Like, nobody should be like, oh, no, I think earnings will be okay. We know they won't. So now the only argument is the degree to which they're going to have to come down. Mm-hmm. And that's Scott, that's a legit argument. I don't really have a strong opinion on that. I just know the direction. And if I know the direction, and I know one other very big thing, which is that bear markets have never bottomed at 17 times earnings. I know this. So if I know those two things, then that can keep me reticent about, oh, maybe that's the bottom. Maybe today's the bottom. Maybe I buy it here. I understand these things. I don't have to be a genius, and I don't have to predict the forward earnings of the S&P 500. Directionally, we know where things are headed.
Right. And Steph, directionally, Mike Wilson goes on to suggest that we think the lows for this bear market will likely arrive in the fourth quarter. 3,400 is the minimum downside, he thinks. 3,000 is the low if you get a recession in the fourth quarter, or if the market starts to really sniff out. The market's going to sniff anything out long before the actual knock on the door.
I think they already are starting to sniff it out, right? That's why we've had choppiness all year long. We've been in a trading range because we have all these unknowns. We don't know how it's going to work
Yeah,
out.
I know, but you said top of the show, but you had that soft landing come back into focus on Friday with the jobs report.
Well, I don't know if it's a soft landing.
Who's saying
I'm not giving the Fed
Plenty
that
of
much
people are
credit.
saying that.
I'm not giving the Fed that much credit. They have a very bad history of a soft landing. What I'm saying is that we are slowing, but we're not in a recession. And at the same time, the Fed is aggressive. And they said 4% Fed funds. So many of them said it at Jackson Hole. And so that's what the market is trying to deal with. How much do we slow? How fast? How deep is the recession? 2023, I've told you, I think we are going to be in a recession. I do not think we are in one right now, specifically because of the job market. But there are a lot of data points out there that have actually come in a little bit better than expected. So you asked where to invest. You have to stay diversified. I take the strategy of dollar cost averaging, and I make my price targets based on where I think the fundamentals are and where they're headed. And where I think I have the most confidence right now, energy, because the free cash flow is so great. Even if oil were to fall to $50 or $60, these companies are still making a ton of money. How about LNG and that CapEx budget, the build out rather? That's a theme as well that we haven't really talked a lot about, but that would be a floor or a NextEra kind of a thing. Very good visibility there. On the consumer, I mentioned jobs. Numbers have already come down so much for discretionary. So the valuations are actually kind of compelling to me because the numbers are down and I think the consumer is going to hold up relatively well. We talk about agriculture. I mean, they're seeing a ton of tailwinds and financials. Higher rates will help financials. So I'm not saying that earnings aren't going to come down for all of these sectors. If we go into a deep recession, they will. But I think on a relative basis, and that's the way a portfolio manager runs money, is on a relative basis to the benchmark, I think they will hold up better.
Joe, Mark Newton at Fundstrat says September is likely to show strength into mid-month, right? I mean, and that time is almost near. And he said he agrees with you. While the technical trends remain lower, there do remain important points to argue for a reversal higher at a time when very few expect it. And maybe that's one of the key points. Very few expect it. And that could become evident this week with technology leading the rebound led by the Qs. The Qs could rally, but yet you don't see it.
Well, all right. No, I didn't say that I didn't see it. So let me take that argument for a second and see how that potentially unfolds. First of all, as I did, I made Apple my biggest position. Okay, Apple is now by far the biggest personal position that I have. Newsflash, I'm not getting out of Apple. Okay, I'm not stopping myself out. I want Apple to be my biggest position because tell me what other company is going to be able to offer the degree of resiliency, the balance sheet strength that Apple can in this environment. But looking forward now, I could easily see as we've begun to rebuild the pessimism, both in terms of positioning and sentiment. And if you look at, the statistics for S&P futures, you'll see holders of S&P futures are as short as they've been since back in June. Now you're coming into the CPI report, right? And unfortunately, that becomes this binary event where if you get a better print and now you've built up this pessimism, you've built up this negative sentiment and positioning, you get a better print than CPI. The market's going to rally from that. I think that's all obvious to us. Is that sustainable over time? Not so sure. You need the confirmation of earnings. I still think this market is 60 to 75 days away from getting the all clear where you could say, okay, we've been through enough of the normalization process in terms of monetary policy. We're past the midterm elections. Now we could regain that vision of being a longer-term investor, and we could begin to acquire equities within our portfolio and begin to carry, in certain instances, them in an overweight. But we need probably another 2 months before we get there.
That makes sense to you, Carrie?
Yeah, it does make sense to me. And yeah, as Joe said, we'll get some more clarity, but we keep getting clarity about different aspects of this economy and about the market. And as you know, as I was saying, although I didn't say it quite clearly enough, if you miss the best 5 days per year in the market, your return over the long term would be cut by half. So this is something that we have to keep in mind, that things can change on a dime. They changed on June 16th. Then they seem to change as Powell spoke the last time. So things can change again. Now, I'm not trying to be Pollyanna. I'm not saying it's going to, but to be wildly pessimistic or wildly optimistic in this environment isn't good.
How can they change
And
on
so
a dime?
you
I
have
want to
to
know,
find-
how can things change? How can things change?
Putin surrenders and reopens the gas. Like, what's the scenario where we change on a dime?
Okay. I mean, I suppose that's one scenario, but I mean, I'm thinking more.
China and zero COVID lockdown policy would probably be a 1,000-point Dow rally.
And more stimulus. And more stimulus.
Well, right. So
in general.
China announced 19 new stimulus measures 2 weeks ago. Hasn't mattered, hasn't helped. So it's hard to think of a single catalyst. Carrie, I agree with you. I've said on the show before, one of the most toxic things you can do to yourself is to decide that you play for a team and slap a label on yourself, bull or bear. I don't think that that's constructive for anyone, because what it ends up doing is it forces you to take every day's headline and put it through that filter of I'm a bull, I'm a bear, I'm a Republican, I'm a Democrat. That's a huge waste of time and energy for investors. But I want to address that stat about missing the best days. The thing about that is the best days tend to be clustered with the worst days. There have been 350 trading days where the stock market has gone either up or down by 3% in that single day, going back to 1928. So a century's worth of history. I think you'd agree with me. It's a pretty relevant data set. More than 90% of those took place while the market was in a correction of 10% or more, and 83% of those took place during a 20% or worse bear market. So those big up and down days, yeah, we don't want to miss them if we don't have to, but if we have less money at risk in a defined downtrend or a bear market, A, we sleep better at night, and I do wealth management for a living. You can take my word for it. B, gives us dry powder and or optionality so that when everybody gets too pessimistic, actually can play a little bit of offense. If we're all in for the entirety of the downside, can't do any of those things. Can't sleep, can't play offense. So that is why when you hear me talk
I didn't say anything about being all in.
Agree. So that is why when you hear me talk about pessimism, it's not, oh, I think the worst case scenario is going to occur. I have to be realistic in this environment because I have to be in a place where I can do what I need to do to play offense at some point.
We mentioned Apple shares briefly. They're coming off their third straight negative week ahead of its big event tomorrow. We'll find out where the street stands on that stock, how the committee is playing it going into the event, and how they will on the backside of it. We're back in 2 minutes.
Insurance.
Welcome back. We're counting down to Apple's big iPhone event tomorrow. There it is, 1 day, 35 minutes and 40 seconds. 4 new iPhone models expected, a new Apple Watch, iOS 16, could have some hardware subscription along with that for the iPhone as well. So we heard Joe's point of view, and Steph, I want to debate this. Joe basically made the case that this is the stock to own over everything else. Make it your biggest position is what he did. He gave you the reasons why. You get defense with the offense. You got the free cash flow. You got the balance sheet. You got the cash hoard. You got everything. Is he right?
You got a good company, but it's not at a compelling valuation at 20 times forward estimates. And I don't think these are game-changing products that are going to be announced this week. I'm actually watching lead times. Lead times at the company for all products has actually been improving, so that means supply chains are getting better. The big question that I have is, does demand actually stay strong? I think it will be strong, but does it stay as strong? They were a beneficiary from stay at home, for sure. So let's see that reverse. So I'm very underweight this name. 700 basis points in my bench. I'm like 100 basis points overall. But the way I'm playing Apple in general is Broadcom, right? 30% exposure there. And Berkshire. It's his largest position. So I'm not saying I hate Apple. I just don't think it's that compelling from a stock point of view.
Even with the reasons you just suggested, Berkshire.
Yeah, I mean, I like, well, Berkshire is very diversified, but at least I get some Apple exposure there, right?
Oh, yeah, more than some.
Yeah, you do. I know. If you look at the charts, they trade exactly the same. But Broadcom too. But I don't have to be all in on Apple because Broadcom also has enterprise, which has actually been very strong. We talked about it on Friday and how strong their quarter was.
Joe, justify the valuation. Do you need to have more to the story to justify 26 times than, you know, for the reasons you said, the buyback and blah, 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 right? That only gets you so far. That doesn't justify valuations that get too high at times.
Well, the valuation premium, you're happy to pay that because of everything that you just identified fundamentally about the company. So I'm going to look at that valuation. Yeah, it's a little bit rich, but I'm willing to accept that premium because of what it's giving me back in terms of fundamentals. I think what Stephanie stated, the one point that really, for me, is a positive catalyst is I do think, Stephanie, the demand is going to be there.
Yeah.
I think consumers will show up for these products, and now it just comes down to, can Apple deliver on the inventory? Will the inventory be there? But I think, without question, given the resiliency we've seen recently from consumers and affluent consumers, right? They're buying their Lululemon pants, they're buying their, Lululemon gear, and they're going to go out and continue to buy products like what Apple's going to deliver. So that demand to me is going to be there.
I think they will be fine on inventory, which is why I mentioned the lead times, because supply chains are easing. They're going to have the products. That's why I said the question is the demand going to be there? The demand could be there, but what am I paying? 25, 26 times. Broadcom's at 13 times. Berkshire has $100 billion in cash to spend, right? So I just find that there's other ways to play the same kind of theme, if you will. And so that's the way I'm kind of positioned.
Okay. You have your compadre here in Berkshire, for sure.
Yeah.
But what about this idea of the value? I mean, this essentially, is Apple too expensive? That's the conversation.
Yeah.
You know, what's interesting is, that is the conversation, but what's interesting is, like, does it deserve to be? Because Apple has a stability of cash flow and a continuity of, I guess I would refer to it as shareholder support, so to speak, that no other company has. So, like, arguably that would earn it a premium valuation. The problem with that is if you buy it today at that premium valuation, then you're essentially not in position to earn as much, right? The equity risk premium would be lower because you're taking less risk. So the way I think about Berkshire and Apple is the same way. I don't need to own the cheapest stock in every sector. And in a market like this, I actually think that stability will remain prized by investors. So I think it can keep that premium. Apple's got a lot of levers to pull. It's the greatest the App Store is the greatest business in the history of planet Earth, quite frankly. The highest margins, the fastest growth, the most dominance. That's not changing in the next 6 months, regardless of what happens in the U.S. economy. So I'm staying with it. I think it'll be okay. Not looking for it to take a market leadership position per se if there's a bull market, but I don't think there's a bull market, so I'm good with where I am.
All right, 155 is where it's sitting. Carrie, wrap it up in 30 seconds.
So I would say elements of what other people have said all make sense. It's not a cheap stock. We cut it back about a month ago, but it's still a large position, as it is for most people, because if it's 7% of the S&P, you can be underweight it and still own plenty of Apple. It's a bellwether for the market, and part of the reason the market ran up is because people anticipated a good quarter, and they had one. So I would watch Apple right here at its 1,500-day moving averages.
Yeah, no, that's why some say it is right now critically important to the market because of all of the reasons that all of you said. We'll see what it does on the other side of the event, too, which is always interesting to watch. The run up in some cases, and then what happens on the backside of that. So up next, we do have some trades on some of the biggest analyst calls of the day. Excuse me. Plus tonight at 6 Eastern, don't miss a CNBC special report, Energy Emergency. It's hosted by our own Brian Sullivan. Halftime is back right after this.
Get it now.
Let's do our calls of the day now. First up is FedEx got downgraded today to neutral from buy at Citi. They named J.B. Hunt and UPS their top picks, which, Joe, both are in the Joe T.
They are, and it's really the logistic thesis, the movement of goods, the resiliency of the consumer within the economy. This is going to sound like a lukewarm endorsement, but that's kind of the best I'm going to give you. We're going to need more. These are two companies that, again, I like the balance sheet. I like the fundamental nature of these companies, but you need a better overall macro environment. You're getting a little bit of that with J.B. Hunt, with better gasoline prices. But we're going to need more. We're going to need an improvement. Expectations for this, I think you have to set them very reasonably at a modest level.
How about that, Steph, for rails, all transports?
Yeah.
Do you need a better macro for these stocks to work better?
Probably. You probably do. But I own Union Pacific because it's the #1 company in the industry. They benefit from crude by rail, which is a very big theme and a very big positive for them. And they've been fixing some of the problems, the service problems that they've had over the last couple of quarters. So that should help operating ratios and the margins and that sort of thing. And they have very easy comparisons in the next several quarters. The stock is not a commanding multiple, so I'm very specialized within transports. And I think that there's enough here fundamentally that gives me confidence that earnings will hold up relatively better than some of these other.
Technically, the rails actually look better than any other subset of the transports. And 1 out of 4 freight companies are now below their 200-day moving average. EXPD, FedEx, JB Hunt, C.H. Robinson. These stocks do not look good.
Carrie, you own a company named Wabtec.
Yeah. And we bought it over a year ago. It was trading at a sharp discount to the market. It's gotten some big orders from many of the larger railroad companies. They make cars, they make equipment for cars, they make rail tracks. And it continues to be a good performer, we believe, because it's got a really nice runway and bookings are fantastic over the next couple of years.
So the other call that I wanted to hit, Josh, is a stock that we just haven't talked a ton about, is Amazon. We end up talking about Apple a lot for obvious reasons, but JP Morgan reiterates Amazon today. Their top pick, 185 is the price target. You own it. It's pacing for its 6th negative day in the last 7.
Yeah, so I'll take 185. This is interesting. This is one of those situations where there were a lot of reasons for it to have had the big bounce, and they just haven't worked out. The latest, of course, being the split. As ridiculous as it sounds, these splits have ended up being big catalysts for some very large stocks. Tesla is a recent example. Apple before that. Amazon did the split. There was some excitement when they announced it. The problem is by the time it took place, all of these stocks were locked into this massive downtrend. So they really just didn't see that bounce that you would expect. So then you say to yourself, like, well, what's the next real catalyst for Amazon?
I was writing that down, right, literally as you were saying it. What's the bullish catalyst?
I feel like you and I are almost like we share one brain sometimes.
For real though, what is it?
There isn't. So the answer is that there isn't one.
And does it bother you that 97% of the sell side have buys on this thing?
I feel like that's been the case though since like 2016, right?
Yeah, but I mean,
it's never been a hated stock.
You don't have an incremental upgrade coming. That's my point.
Yeah, you know what might be a catalyst. The only thing I can really think of is some sort of spin-off. But I don't think that the new CEO has the ability to just decide that they want to do that without input from Bezos. And Bezos is having way too much fun these days. All you have to do is follow TMZ to understand why you're probably not going to get that kind of a transaction that would really introduce some excitement into the stock. But like AWS is a standalone stock, this thing could go up 20% on that news. I just don't think it's going to happen right now.
Yeah, Scott, what about buybacks like Alphabet? What about ask Josh? What about buybacks like Alphabet did a couple of years ago to kind of mimic what Microsoft and Apple were doing?
Be great. Historically, they've been pretty hesitant. They've done some in recent years. It's such a tiny amount. It doesn't really seem to move the needle, and it's hard to picture them going from 0 to 60 and doing a big enough buyback that it would really be meaningful. The way a company like this probably would approach a buyback is the way other companies would approach a dividend. They never start out with a 4% yield. It takes them years and years of 5-cent increases to finally get up to an appreciative dividend. I kind of feel like Amazon would be that way about any kind of large shareholder return because, again, the overarching ethos of this company is that it's day zero, meaning they always want to act as though it's their first day in business. It's hard for a company that starts out their first day in business to say there's nothing better for us to invest in other than buying back our own stock. So it may get there at some point. I don't really foresee this as being a buyback or a dividend aristocrat anytime soon.
Okay, let's get the headlines now with Seema Modi. Hi, Seema.
Scott, good afternoon. Here's the news update at this hour. In Memphis, the police chief and local district attorney offering condolences to the family of Eliza Fletcher. Her body was found last night and identified this morning. The 34-year-old mother and teacher was abducted while jogging on Friday morning. Suspect Cleotha Abston is set to be arraigned in murder charges tomorrow. He has already been charged with kidnapping. In Uvalde, Texas, students are beginning the school year about 15 weeks after the deadly shooting at Robb Elementary, where 19 students and 2 teachers died. Some parents and politicians are still seeking more information on the school's security and the police response to that shooting. And the White House says COVID shots will remain free in the U.S. The Biden administration's COVID response coordinator says updated booster shots will become widely available in the coming week. He also says the country is moving closer to an annual COVID vaccine similar to flu shots. Halftime report. We'll be right back.
We're back on the Hub. Evercore ISI today is highlighting some of its favorite stocks. Right now, their criteria includes high shareholder total return, above average PE compression, and a free cash flow yield in the top 20th percentile. Let's talk about some of these stocks on their list. Stephanie Link, Meta.
Yeah.
Is on their list.
It's on their list. Strong free cash flow, an 8.2% free cash flow yield. So that's the definition there. I like it because it still has size and scale, right? 2 to 3 billion users, and in daily and monthly. I mean, and that's what advertisers, digital advertisers want. They want the size and the scale so that they get the ROI. They have to fix reels. We've talked about this. It's going to take some time. But I think at 13, 14 times forward estimates, 8 times EBITDA, a lot of bad news is priced in, and not a lot has to go right, I think, for the stock to react positively.
Joe, Bank of America, we see it on the TV. It's on their list.
It is. I don't know that my ownership of Bank of America is specifically because of the free cash flow yield. I think free cash flow yield, I've been talking about this as most of us on the committee have since the beginning of the year. It's so incredibly important in this environment because it gives a company flexibility. They could do M&A. They could pay down dividends. So Valero is a name that I know is on this list. Valero is a name that I own. Some other energy names, Chevron, ExxonMobil, those are both approaching 6 and 8%. And then AbbVie in healthcare, which has an 8% free cash flow yield, I own that as well. Free cash flow is very important, but specific to Bank of America, that's not why I own it.
Okay. Well, you front ran me on the other names, but that's okay. I was going to get there anyway. Thanks, Joe. Charter, Carrie, don't name everything else on the list, please.
Oh, God, I won't. I won't. I
Charter.
mean, it's bad enough to name Charter. So Charter is a name that we own. It has tremendous cash flow yield. It also is at a 2-year low. If you look at the chart, I mean, you probably are. And we think that it's overdone. I mean, this is all about streaming wars and people cutting the cord. But it's U.S.-centric. That's positive. You don't have to deal with euro or other denominations where you're getting cut because of currency. And it's still growing in terms of Wi-Fi 5G usage. And we think that at this price, Charter with its cash flow yield is a very strong buy right here. Although when the market doesn't like something, as we've talked about, you know, it's tough. It's in its own bear market, and we need to see some catalyst, perhaps the next quarter, where we stabilize and we can start to move higher from that base.
Josh, you like any of these names? Whether it's Bank of America, Valero, MGM, BNY Mellon, Marathon, Capital One, they're all on this list. Lennar.
Yeah, I agree. They're for the most part high quality companies with great free cash flow. I'm just not 100% sure that factor in particular is going to be the one that matters over the next 3 months. Steph's going to get upset with me, but the one I like the least is Meta. First of all, fun fact, over the last 5 years, Meta and IBM, same performance.
Well, I own both. That's great.
both negative 7%. No, but isn't that incredible? Both negative 7%, IBM and Meta for 5 years. So we're told to hold quality companies that are dominant franchises for the long term. Doesn't always work. Meta technically is on the precipice of either the mother of all bounces or a really nasty breakdown, and I have no idea which. Technically speaking, though, if this thing gets into the low 150s, you really can't be in it.
Well, I'll give you the last word.
Well, I mean, look, I think I'm in it for the long term, right? And by the way, over those last 5 years or whatever you said, I mean, I did take profits along the way.
It was up huge and down huge.
Yeah,
Yep.
I mean, so I get it, but I think the stats that I stated, the size and the scale are really important for digital advertisers. They want the eyeballs, right? And so I don't know when they're going to pay for the eyeballs. I don't know when they're going to get reels fixed, but I do know that at least they're working on some things, and they generate a ton of cash in the meantime so they can invest in their businesses. And I just go back to the valuation. This is a profitable company, right? And it doesn't deserve to be down as much as some of the unprofitable technology companies, not in my opinion.
I think that if this had a normal corporate structure where the boy king didn't have guaranteed voting control, that there would be more pressure on him. Now we're starting to see some pressure on them to focus on free cash flow and profitability again.
Sure.
Because in the end, he's got thousands of employees and they're all being incentivized by stock, and that stock is cut in half. So it can't go on like this forever, but if this were a normal situation, Elliott would already be involved, or Dan Loeb, or somebody.
This is the only FANG stock that I own. Only one. And it's the only one that has the most attractive valuation, right? And you could talk about Amazon all day long, but that valuation's not cheap. We talked about Apple already. Alphabet, everybody owns it. Everybody loves it. Same thing like Amazon. So, and I feel like there's a bargain here. Now, I might be waiting a really long time for it, but that's the way I invest.
Okay, we got to bounce. Mike Santoli's with us next for his midday word. Welcome back on the Halftime Report. Senior markets commentator Mike Santoli joining us now from the New York Stock Exchange for his midday word. What are your thoughts so far?
Well, I mean, obviously pretty twitchy action in stocks, and to me, it's what happens when you have this rampaging U.S. dollar and Treasury yields running up. That, to me, is why perhaps stocks are not down more, as you might expect after 3 days of rough news and what's happening in the dollar and yields. But it seems pretty delicate. You know, it's worth pointing out that over the course of this year, the S&P hasn't really spent much time at all below 3,900, which is where we're sitting right now. It seems like below there, it's the part of the hill with slippery footing. So I think that's where the battle sits right now. But if it matters that positioning and sentiment are pretty deeply negative, that is the case right now. And maybe that's why it's holding up a little better.
Let me get your thoughts on the NASDAQ. I'm looking at a tweet from Bespoke. Already had 3 1% plus intraday swings in the first 3 hours of trading. 1.8% decline off the open, 1.7% rally, now another 1% decline is what they cited. I'm just curious what you make of it.
Yeah.
That really seems to be the epicenter right now of where at least investor thought / concern is.
Right, and I think it's just because, as always, it's the extreme version of what's going on in the rest of the market. So, yes, even more oversold. Yes, even more swung around by the biggest components than the S&P 500 is, and you know, a little heightened sensitivity to things like the dollar and yields when we are in this kind of a macro market. So to me, that's the explanation, as opposed to anything going on with regard to, you know, tech earnings or something else with Apple tomorrow. It seems to me much more about the index is getting traded here against other asset classes.
All right, good stuff. Great to talk to you, and I will do it again in overtime. We'll see you then.
Yep.
That's Mike Santoli. Coming up, we have a buy call on one retail stock saying its problems won't last forever. Stephanie League owns it, which means we'll debate it next.
On Coursera.
Well, welcome back. 2 bullish calls today on that stock right there. That is Target, with Barron's writing a feature article over the weekend saying to buy shares because a lot of the bad news is already priced in. UBS has also included it as a top pick for 2023. You own it, and you have been incrementally adding it. Is that right? Adding to it?
Yeah, because the stock is down 30% year to date. It trades at 14.4 times. Walmart trades at 23 times. I mean, so there's a real big change and difference between the two. And I think everybody knows about the $2 billion of inventory that they have to write down, and they are going to write down, which, by the way, is going to be great for the consumer. And so I just think your comparisons start to get easier into the end of the year, into next year. This is really probably a 2023 story, and I'm willing to be patient, especially given the valuation.
Would you put new money into this name if you didn't own it at all today at these levels with these kind of concerns around the economy, macro?
Yes, I would, because they still have traffic and they still have ticket growth. They're still gaining market share, believe it or not, right? So people are going into the stores. They just had the wrong stuff that the consumer wanted. And as long as jobs stay strong, and they have been so far, even if you go to 4% unemployment rate, you know what? The people are still going to go to Target because there is a value proposition there.
Okay, we'll do final trades next.
Visible.com.
All right, overtime, 4 o'clock Eastern. Got Adam Parker on set with me today. Greg Branch is in the house. Eric Jackson, the latest on this tech trade, which we were talking about on halftime today, too. Cameron Dawson's with me. I'll see all of you in a few hours' time, I hope. Let's do final trade. Stephanie Link, you are first.
Nextera, it's a renewables beneficiary. It will increase their growth rate and market share, and it trades at a 5-year average multiple. So I think it's very attractive here.
Okay. Carrie Firestone, what do you got?
Booz Allen Hamilton, BAH. It's defensive, no pun intended, is one of the largest defense consulting contractors. And that stream of earnings is relatively predictable over the next couple of years.
Okay, thank you for that. The man with the ETF, Joe T.
I'm glad Carrie mentioned defense. We talked a little bit about industrials before. Certainly within industrials, you could own a name like Northrop Grumman, which has clearly worked throughout the entirety of 2022.
All right, Josh Brown.
On really bad days like last Thursday and Friday, I look for what's not going down. Uber is on that list. The stock's got really great relative strength here.
Thank you. CNOT, the exchange is now.
Hello, everybody. I am Brian Sullivan, in for Kelly Evans for a while. She is on maternity leave, and here's what is on deck today. Could Europe's energy crisis turn into a financial crisis or banking crisis. It could, and we're going to tell you why and who might be the most exposed, but why it might be good news for American companies. Plus, the countdown clock is on, just 24 hours away from Apple's big event. We'll get a closer look at what to expect and how to position your
energy coming back, a little more buying interest, but it's just not there. It's really choppy right now. Let's take a look at the major indexes. Right now, the S&P 500, 6 of 7 sessions to the downside. Same situations with the Dow Industrials. NASDAQ lower for the 7th straight session. That's down about 9% the last 7 sessions. You have to go back to November 2016 to get a bigger losing streak. That would be 9 days, November 2016, Brian. So we're in a serious downturn on tech stocks. There has been moments of leadership today, but it's been very defensive. Take a look at some of the board's stocks on the upside. It's been mostly utilities like Next Energy and REITs, real estate investment trusts like Federal Realty and Camden Property. They manage apartment buildings, and some pharma stocks doing well. Lilly and AbbVie, for example, biopharmaceuticals. Again, all of these very, very defensive. If you look at another group that's doing well, metals mining stocks, particularly coal stocks, Peabody, Arch, Consol Energy, right near a 52-week high. These are all coal stocks. Of course, a lot of talk about Europe's approaching winter over the weekend, getting some traction there. Big cap tech down 1 to 2%. We're off of the lows, but again, these are all in downtrends. Apple's down 6 of the last 7 trading sessions. Apple was 163 2 weeks or so ago. Look at that, 155. So we're down. Microsoft was 280, now to 254. So we're down 10% or so in the last 2-3 weeks. Amazon, same situation. Nvidia, look at that, 135. Nvidia was 187 just about 3 weeks ago. So we're down 25 to 30% or so in Nvidia. Keep an eye on that one. That's quite a big move to the downside. Despite this, Brian, I don't see panic out there. I call around. What's going on? I don't see heavy volume. And here's the VIX here. It was 27 earlier today. This is not panic territory. This is elevated, but not panic. Where is it, Brian? I'd say 35 or so is where it gets panicky. That's where it was in mid-June. Not there yet, but we should have a little bit more buying interest. That's what I'm waiting for. We just don't see it right now, Brian.
Well, you just said it. It's there in coal. Isn't that amazing? The big tech stocks are down 40%. Coal stocks have doubled. What a year. Bob Pisani, thank you very much. Okay. All right, speaking of, well, if you think Europe's energy crisis could not get more chaotic or maybe more confusing, think again. There have been a flurry of headlines and new comments in the past 48 hours that add even more layers to the story. First, Vladimir Putin launching another salvo in his energy war with Europe. He's cutting off all natural gas flows from the Nord Stream pipeline into Germany until the Western sanctions on his oil end. Now, keep in mind, there is not only no timeline for those sanctions to end, but more stringent sanctions on Russian oil will go into effect on December 5th. European spot natural gas prices up 1,600% in 2 years, and electricity prices today are at records. Headline number 2. OPEC and Russia agreeing to effectively cut oil production by 100,000 barrels beginning next month. That is something we reported may happen just over a week ago on Power Lunch. OPEC worried about global demand slowing in the months ahead. And story 3, it's a big one. Could the energy crisis turn into a financial or even a banking problem? Listen to this. An executive at Equinor, the massive Norwegian energy company formerly known as Statoil, saying today at a conference in Italy that as much as $1.5 trillion in margin calls over energy trading could require some kind of backstop or bailout, or energy trading itself may be at risk. Now, that $1.5 trillion would be on top of what Goldman Sachs says could be an additional $2 trillion in energy bills this winter for Europeans. That's $3.5 trillion by our math. Let's try to figure out how this all plays out. Joining us now is Dan Pickering, Chief Investment Officer at Pickering Energy Partners, and Bob McNally, President of Rapidan Energy Group. Bob, I'm going to start with you. I don't want to make too much of this, okay? And there was an op-ed by Fatih Birol of the IEA respect him very much. In the Financial Times today, saying basically fear-mongering, Germany's going to be just fine. But when I see $3.5 trillion in numbers thrown around, I see electric and heating bills up 200% and 300% in the fourth biggest economy in the world, with many banks now exposed. How big does this get, or is this as bad as it gets right now?
Brian, you're right to make something of it. I think historians are going to look back at the last few days and see what we've seen and call it the inauguration of not a war in Europe, an energy war in Europe, but a world energy war. Germany gets over half its gas from Nord Stream 1. Europe, about 15%. Most analysts were expecting Putin might keep it going up and down here and there, maybe cut off in October. He cut them off now, and they ripped the pretense off. The Russian minister came out and said, Novak said, look, this isn't okay. We're not playing games. This is until the sanctions come off. These sanctions aren't coming off for a long time, and as you said, they're getting worse. So it's hard to see how Germany and Central Europe, Slovakia, Hungary, aren't going to have rationing and gas outs this winter.
Let me ask you, Bob, let me jump in because I'm sorry to interrupt, but I want to ask you a follow-up. I think it's important. Now, we are starting to see some leaders on the margins in the Czech Republic. There's a far-right Italian politician. By the way, they have elections coming up, so it's not out of line that they could change their political party. Effectively today say, we need to rethink the sanctions because they don't appear to be working and our people are suffering. Do you think there is a chance that on December 5th, those sanctions do not get enforced?
I mean, there's always that chance. But then you raise the real way this gets ugly, is it shatters EU unity. And that's exactly what Putin wants to do. I don't think you'll see France and Germany backing off of sanctions and going ahead with the embargo. But could it fall apart as you see this political upheaval in the UK, in Italy, and other places? Absolutely. But that's a worst-case scenario long-term. For, I think, global peace and energy stability. And that's a big win for Putin if he shatters EU unity.
You know,
it could also happen with hoarding. I mean, Germany could decide this winter not to send gas on to Austria. So there's other manifestations of this as well. But the threat to EU unity is perhaps the biggest stake here.
Well, it's a big deal. I mean, effectively, Spain has said to Germany, these are your problems. They are not our problems. France is probably sitting fine with nuclear now that the river levels have come up. You know, Dan, it didn't get a lot of attention, but a couple of weeks ago, the Department of Energy, Jennifer Granholm, the Energy Secretary, sending a letter out basically to oil and gas companies saying, hey, let's rethink maybe exporting so much of our product. In other words, even the U.S., to Bob's point, maybe saying, we need to keep what's ours. Do you feel like there could be some kind of a dangerous hoarding or anti-globalization movement even happening here?
Brian, I think things would have to get worse before we start hoarding. But, a crisis is unavailability of supply. And that's what we're afraid of in Europe. And we've got a financial problem there that could turn into a physical problem.
이제 지지선이 깨졌어요. 지지선이 깨지고 오늘 최저점까지 한번 터치하고 그 상황을 봐야 되는 그런 분위기로 가니까 이제는 왔다 갔다 인버스 그런 식으로 왔다 갔다 해야 되겠죠.
The people are going to be the ones who ultimately make the decisions. And I don't mean by people, I mean technocrats. I mean populations. When you look at Europe, they are willing to go so far, I believe. I was just in Germany a couple of weeks ago to support what's happening in Ukraine. They want Russia out. They want Putin gone. Everybody wants him away. But you wonder how far the populations are willing to go in this situation. And how bad could it get when I hear natural gas prices, Dan, are up 1,600% in 2 years? Do you see them going potentially any higher?
They could. I think it's a game of chicken right now. This is maximum leverage point for Putin because right now it's about price. It's not about freezing and people being cold. I think my expectation is that the gas starts to flow again when it's actually physically cold. And I don't think Putin's going to kill Europeans. That's too dangerous for what he's trying to accomplish in Ukraine. His maximum leverage is now. So price has been higher than it is right now. It's moderated somewhat.
Yeah.
We saw negative gas prices in negative oil prices in the U.S. Price can do anything in the near term. I think this may be as bad as it gets here in the next 4 weeks.
This is, there is this narrative out there, Bob, that I do not like, which is, oh, Putin's winning. because they're still selling a lot of oil. We don't know if they're making any oil. Gazprom had some numbers out today. They could be making those up. They lied about the pipeline. Amos Hochstein of the Biden administration, very smart, very rational guy, this morning on Squawk Box said, this is going to be the end of Russia's run as a reliable producer to the West, not just now, but forever. How much damage is Putin doing to his own people?
So longer term, enormous damage. I think what you just said is right. Long term, and let's see how long this lasts. I hope Dan's right and it ends this winter and the gas comes back. But we're looking at a world energy war that lasts several years. And so in that case, you're not going to see Western companies go back into Russia. As long as Vladimir Putin is the president of Russia, a regime like that is there, it's going to be like North Korea, South Korea. It's going to be a frozen conflict, and Russia's production capacity, will go down, and its reputation of as a reliable producer will have been irreparably damaged. However, near term, I do think we do see the oil. They're making more money on the oil. I mean, we can see the ships going out, and they're doing okay on the oil. The gas they sell under long-term contracts at lower prices. But the oil, they're making money so far. The question is, as you said, will Europe go ahead with this embargo on crude and products? If so, how much more oil would go off from Russia? And would Vladimir Putin respond by, as he did with Nord Stream 1, sort of arbitrarily just cutting off supply further?
So many questions, so long to go. Storage levels are good, but they've never run just on storage alone in Germany. We'll see where it goes. By the way, UK is probably in a worse spot. Dan and Bob, thank you very much. Do appreciate that. All right, quick programming note. The CEO of oilfield services firm Liberty Energy will join Power Lunch at the top of the hour with more on what this all means for the American oil and gas industry. We may actually benefit because we need to export more. And that is not all. Tonight, we're going to have a special look at the energy emergency, why it matters to America and to the world, with an all-star guest lineup, including CEO of the country's largest nat gas producer, EQT, why the Boston area just warned it may not have enough power to give you heat or light in the years ahead. Plus, the CEO of American Electric Power will join us, along with energy experts Rusty Brazil, Halima Croft. That is tonight, 6 p.m. Eastern Time. Tie it all together to why it matters to you and your family and the United States. All right, we have got a big news alert in the housing market. Mortgage rates are on the move. And Diana Olick, they're not on the move down.
No, they are not, Brian. After a really volatile week last week, here we go again. The average rate on the 30-year fixed jumped 23 basis points this morning to 6.25%. That, according to Mortgage News Daily. We saw some very wide swings last week, up to 6.23 and then back down a bit. But this jump up again today would seem to indicate that the 6% range is now the new normal. The last time we were this high was back on June 14th, but rates came back down into the fives pretty quickly in August. It was that jump, though, in June that really put the first brakes on the housing market, which has been weakening ever since. Rates did fall back, as I said, to just above 5%, but recent word from the Fed that's going to be more aggressive in putting the brakes on inflation is pushing bond yields higher and consequently mortgage rates higher. As a comparison, the 30-year fixed was at 2.95% 1 year ago today. So if you're putting 20% down on a $400,000 home, your monthly payment today is $680 more than it would have been a year ago, and that is not even factoring in that the same home today is much more expensive. Brian.
Oh, and by the way, try to heat that, Diana, because now you got $200 a month more in your heating bill.
You got it covered. You do.
There's, what is it, 680 plus 200, 880. Luckily, there's 0% inflation. Diana, look, thank you very much. All right, this summer's rally turning into a September swoon. Stocks have sunk, but you're supposed to buy low, right? So your next guest has 3 picks. Plus, the battle for your privacy heating up. Tech giants watching one bill that goes far beyond Europe's privacy law and would have devastating effects on Google and Meta. The details ahead, and as we head to break, here are your numbers today, and Bob laid it at the top of the show. NASDAQ down again. In fact, the loss is accelerating, off 1%. Dow is off 246. NASDAQ down, 8 days in a row now? Sorry, we're back right after this.
This is The Exchange on CNBC.
Go back to the exchange. While many are saying the market may have bottomed in mid-June, your next guest says it's simply too early to know. But either way, he remains bullish heading into next year. And he brought some ideas and sector picks ahead of him. He is Jeff Crumpleman. He is Chief Investment Strategist at Mariner Wealth Advisors. It's kind of funny, Jeff. It's like everybody's trying to pick the day, the bottom. Only one person has ever done that, and that is the late, great Mark Haynes. It's a fool's errand to try to figure out a day.
이제 좀 재미없는 시간이 될 것 같아요. 한 30분에서 1시간 정도는 오르락 내리락 엎치락 뒤치락 할 것 같고, 전반적인 큰 흐름으로 봤을 때는 아직 하락세가 더 강하게 느껴져요. 왜냐면은 로어 하이가 되고 있고 로어 로우가 되고 있는 그런 모습을 계속 보여주기 때문에 아직 장의 흐름은 하락세로 가는 거가 맞고, 그리고 인트라데이에서는 뭐 어떤 일이든 벌어질 수 있죠. 근데 내가 어떤 프레임으로 트레이딩을 하느냐에 따라 가지고 기회는 아래로 잡을 수도 있고 위로 잡을 수 있는 거예요. 지금 전반적인 흐름 자체는 하향세, 큰 흐름은 하향세예요. 큰 흐름은 하향세로 지금 설정되어 있고, 이제 이거를 뭐 분단이나 그렇게 보면은 뭐 기회는 충분히 어떤 방향이든 잡을 수 있는 그런 모습이죠. 지금 오늘 하루만 분석해 보면은 일단은 약간의 더블탑 포메이션 만들었고, 그렇죠? 그리고 더블탑에서 중간에서 중간까지 와서, 그렇죠? 그런 모습 보여주고 약간 반등 올리고 여기서 뚫지 못하니까 다시 그 깊이만큼 다시 빠지는 거예요. 그래서 여기서 또 이제 반등이 된다 그러면은 뭐 얘가 새로운 포메이션을 뭐 만들 수는 있겠죠. 그러니까 인트라데이는 뭐 뭐든 만들 수 있는 그런 상황이 벌어졌는데, 지금 전반적인 흐름으로는 아직도 계속 낮아지고 있는 그런 추세에 들어있다, 그렇게 보시면 될 것 같아요. 와, 한국에 엄청나게 큰 태풍이 왔었군요. 피해가 심각하게 일어났네요. CNBC에서도 얘기를 하네. 몰랐네요.
New iPhones, new watches, widely expected at tomorrow's big Apple event. But how much exactly are they going to set you back and what else might be unveiled? We're going to get you ready for the event and what it means for the stock. Next.
몇 가지 종목 한번 둘러보도록 하죠. 지금 뭐 시장은 내려가는 분위기니까 하락세로 가는 종목을 찾으면 이런 것들을 숏하기가 좋죠. 일단 에너지, 파이오니어 내추럴 리소스 같은 것도 지금 많이 떨어지고 있고, 그 다음에 반도체 물론 떨어지고 있죠. 어플라이드 머티리얼도 지금 숏하기 좋은 종목이다, 이렇게 필터가 되고 있고요. AMD도 그렇게 나와 있고요. 그 다음에 베스트바이도 흐름상으로 숏하기 좋은 종목이다, 이렇게 보이고, 캐피탈원이 이게 아주 지금 아마 숏에 베팅이 많이 돼 있는 그런 종목 중에 하나일 거고요. 엣지도 흐름이 지금 흘러내려가는 그런 흐름. 마이크로칩 테크놀로지도 그렇고요. 그리고 엔비디아도 물론 숏하기 딱 좋은 종목이다, 그렇게 보여지고, 파란마운트도 지금 많이 떨어지고 있어요. 그 다음에 PBH 이런 거는 뭐 계속 나빠지고 있죠. 그리고 SPG 글로벌도 쭉쭉 떨어지고 있고, 그 다음에 싱크로니 뱅크도 숏하기 좋은 종목, 그 다음에 웨스턴 디지털도 완전히 뒤지고 있습니다. 그리고 웨이아웃을 이쪽도 계속 안 좋게 떨어지는 종목들이에요. 그러면은 지금 그래도 그 중에서 또 지금 선전하고 있는 종목들이 있나 한번 찾아보면 오늘은 선전하는 종목이 거의 없네요. 제 기준으로 상승세를 보여주는 종목들, 그런 종목 리스트들은 나오지 않고 있어요. 그래서 오늘 빅텍 성적표를 보면 뭐 얘는 이렇고, 애플이 154불 정도, 152불 정도, 50% 피보나치 리트레이스먼트 위치를 좀 버티는 듯 하고, 아마존도 지금 갭을 다 채웠어요, 이번에는. 그러니까 125. 거기서 버텨주면 오케이. 못 버티면은 참 한심한 위치로 떨어질 수도 있어요. 그래서 지금 아마존 같은 경우는 125가 중요할 것 같고, 구글도 바닥까지 다 왔네요. 105. 그 다음에 메타 플랫폼도 155가 바닥이에요. 거기까지 더 떨어져서 빠지면은 희망이 없고. 마이크로소프트도 247 거기까지 봐야 되고, 넷플릭스도 205까지 봐야 되고, 엔비디아는 어디까지 추락할지 감이 오지 않습니다. 테슬라는 267 그 정도 지켜주면 제일 좋고, 260이 제가 보는 기준점이에요. 불리시하고 베어리시한 그 딱 기준점 261 정도 되고, 그 다음에 관심 있게 볼 만한 것이 뭐가 있나? 오버솔드 된 종목들? 오버솔드 됐다고 올라오는 건 없으니까 오버솔드 된 종목들은 별로 큰 매력은 없어 보이고, 오늘 업그레이드 된 종목 중에서 우리가 알만한 종목이 있나 보면 넥스트 에라 에너지 이런 것들 업그레이드가 됐네요. 그 다음 PPG도 업그레이드가 됐는데 차트 추세는 그렇게 좋지 않아요. 오늘 테슬라가 업그레이드가 됐나 보네요. 테슬라 업그레이드가 돼 있고, 그 정도 보면 될 것 같고, 퍼포먼스가 괜찮게 보이는 종목들이 에너지 종목밖에 없네요. 오늘은 데본 에너지, EOG 이런 종목들이 지금 파제리브하게 갈 가능성이 있는 종목들이에요. 다이아몬드백, 빵이죠. 이런 세 개 종목들. 오늘 섹터 중에서 플러스로 있는 거는 헬스케어랑 유틸리티, 리얼 이스테이트 정도인데, 특별히 섹터 로테이션의 흐름은 읽을 수는 없는 것 같고, 다 안 좋네요. 그냥 다 안 좋아. 전반적으로 특별히 특징주는 없는 것 같아요. 지금 현재로는.
Now, there is another near-term headache, though, for these ad giants, and that's the growing patchwork of state privacy laws, such as California's Age-Appropriate Design Code Act that could make doing business even more difficult, even if the federal law fails. Guys, back over to you.
All right, Julia Borson. Julia, thank you very much. All right, joining us now to talk about who is going to win the digital ad game, and here's a big hint. He says it's not Apple, is Mark Douglas, founder and CEO of Mountain. Mark, love having you back on the show. I was hoping that Ryan Reynolds guy might pop up. You know, your chief creative officer, but he's probably too busy selling gin or cell phones. All right, let's talk about who's going to win this digital ad game and why.
Yeah, so the reason I said it's not going to be Apple is because when you wake up in the morning and you think of, you know, kind of what you want to search for, you don't go to the App Store to do the search. Obviously, you go to Google. And when you discover things on the internet, you discover them on Instagram, on TikTok, you discover them on television. So Apple's App Store is really people who spend there, they're spending to protect their position in the App Store so that some other app is not advertising against their brand. So Apple's share that is growing, it's kind of a tax on app developers, but it's not the same kind of business that Google has or Meta
How much, you download a new app, and our viewers and listeners know what we're talking about. You download a new app, and then the first thing you get, well, one of the first is this button, you know, allow or ask app not to track. With that, I almost said stupid little invention, but that little invention, gave Apple the keys to the moat, did it not? I mean, how powerful is that button?
Well, it's basically what it did is it made it really difficult for companies like Snap and companies like Meta to attribute the ads, what they were doing to their customers' business and the kind of revenue they were generating. Because a lot of times you might discover something in an app, but you buy it on your computer. And so without that tracking, that Apple, that ID that Apple was sharing, that makes it very difficult. And as a result, both Meta and Snap have taken a hit in their ads business. But it doesn't make consumers then want to go to the App Store. That's the point there. So it definitely hindered some people, but it doesn't enable Apple in any way to steal market share. Even they're taking that market share from the app developers themselves.
Does Apple want to be in the digital ad market? I mean, it seems like just a tough business. Apple likes to make their own thing, go their own. They're the Fleetwood Mac. They're going to go their own way.
Yeah, I mean, until Apple decides what they're going to do with Apple TV, they have this huge TV business that they don't offer ads on. Their subscriptions on that are at best moderate growth. So I think, when they decide they're going to go AVOD, they're going to have big television ads against their television content on TV, that's when Apple has entered the ad game, and they haven't done that yet.
I've been using Apple TV, Mark, since they had the first box, which was just slightly smaller than a shoebox. You know the one I'm talking about?
Yeah,
the silver one you had to download. Now I tried out Roku and I thought, wow, this is actually a better user experience, Roku.
Yeah.
What's wrong with Apple? They're such a good company. I'm trying to understand why their Apple TV product, while neat, is not maybe worth 5 times what a Roku or Fire Stick is.
Yeah, I mean, I think when they first introduced the Apple TV, people thought it would be an actual television.
Yes.
It turned out to be a device you attach to your television. It's the most expensive device. And so I think in that game, what's called OTT devices, the devices that allow you to stream into your television, they're number 4 or 5. So they decided to invest in content. So they have a lot of catching up to do on television, but they also are investing a lot, so there's a lot of potential.
Well, let's see. What I like about it does have the Ethernet port, so you could hardwire the Apple TV box and not have any kind of a lag if you've got that. Mark Douglas, really appreciate your views as always. Mountain. Mark, thank you. All right, coming up, Goldman says get back to the office. JP Morgan says you can still work from home a few days a week, and all that may not matter whatsoever, given that COVID is still keeping people out of work. School is back in session. We're going to take a look at how the return to the office is shaping up and the economic impact of it all. Before we do that, though, we got to look at these markets. Dow down 175, NASDAQ down about 100 points again. September, historically the worst month for the markets of the year. Don't blame us. Lots of time left in the month. We're back right after this.
at Angie.com.
All right, let's talk work. It's appropriate, right? Because we are on the other side now of Labor Day, and that means not just back to school, but back to the office, maybe at least in part for many Americans who are still allowed to work remotely. Now, Steve Leishman has a look at the impact that COVID is still having on work absences and what that means for the economy. I heard you on Squawk this morning, Steve, and I was like, the number of people calling in sick is just unbelievable.
Huge. It's huge. I did some sort of unique comparisons. I'll get to those in a second, Brian. But first, let me tell you, Americans are slowly and maybe reluctantly returning to the office. We have data on that. But hundreds of thousands more, as Brian just suggested, they're calling out sick or they're remaining out sick. The August jobs numbers, they showed us that 10.3 million Americans work from home due to the pandemic. That's down from nearly 50 million in May 2020 when they first started gathering data, down almost a million from July. The decline, together with the news that we heard earlier, more companies are ringing the bell, calling the workers back to the office, suggests there may be further to go. At the same time, you can ring the bell all you want. A large number of workers are still going to be calling out sick. Take a look at this data. 1.5 million Americans called out sick due to illness in August. That's 500,000 more than called out sick on average. If you took an average January or an average February from 2009 to 2019, it's 500,000 more. That is during the height of normal flu season. And it's almost double the 10-year average for a normal August. So while there may not be lockdowns anymore, at least for now, we're kind of living with a permanent flu in this economy. And that's not to mention an estimate from a paper a week ago from Brookings that from 2 to 4 million may be out of the workforce due to long COVID, all of which, Brian, challenges the ability to get inflation down and get the U.S. economy back to potential growth.
Any advice for CEOs out there dealing with this, Steve? Where do we go from here?
You know, I want to start to report, Brian, and you can help me with this, the other side of this equation. You know, years ago, one of our desk producers, Ellen Egith, reminded me that your company doesn't give you vacation, your colleagues give you vacation. I think that's also true for sick leave, right? So does that mean you have to start planning for an additional outage that kind of lasts? It really depends on how this virus progresses. We had, you know what the number was of illness or out due to illness in this past January was 3.3 million. So that was like triple a normal January. I don't know if this continues. So it means you have to have more people backed up in terms of if somebody calls out sick, you still need to get the work done, or you're going to work your existing workforce harder. I think that's something that HR folks are going to have to come up with solutions for.
Yeah, what's amazing is that the case numbers and even some hospitalization data is pretty much the same as it was a year ago, and everybody's just kind of moved on. I mean, it's weird in a way.
Great. It's out there. Now, there is one upside to this, Brian, which I don't know if it's an upside at all. If you call out sick with the sniffles or whatever, but by the way, that is the new protocol, right? If you have sniffles, whether or not you have COVID, you're pretty much going to stay home these days. But for some percentage, and according to our CNBC workforce survey, it's 44% of the workforce, they can stay home and they can work from home while they're sick, whereas they may not have been able to do that before. So it's not a complete loss.
Yeah, good, by the way. It used to be the days of people sneezing and snotting all over everything. Steve, you know what I'm talking about. And that's just me. And you still came to work. Steve Leishman, thank you very much.
Yeah, but Brian, no more snow days, man. No more snow days.
It may never snow again, I'm told. Steve, thank you.
Well, that's enough.
All right, up next, shares of Trex off by about 70% from their all-time high. Of course, that was during the pandemic panic. Fix your home up last year, December. And we spoke with the CEO, Brian Fairbanks, during the pandemic when the company was out of stock. Today, we're going to face some of the biggest challenges they've got right now. Stick around.
우리 너무 조용하고 심심하니까 일반 구독자님들도 좀 불러볼까요? 제가 세팅을 일반 구독자님도 들어오실 수 있게 잠깐 바꿀게요.
Welcome back. The pandemic-fueled home improvement boom was certainly kind to many companies, including Trex, that made shares of composite decking, and their stock surged 61% to all-time highs last year as robust demand outstrips home fixing up their home. The times have changed. Shares are down 66% as demand has cooled, and the company just warned that its commercial partners are now overstocked with product, which likely spells lower second-half sales. For more now on how Trex is navigating the market, let's welcome back in the company's president and CEO, Brian Fairbanks. Brian, I don't know if you know this, but I know where you are. And you look out your window up that hill, and you see James Wood High School. And that's where I graduated from James Wood, and I know exactly where. So I want Trex to do well because my folks still live in Winchester, Virginia. Go Colonels, by the way. How is business, and how do you navigate through this time?
Yeah, so for our last earnings, we reported that we expected to see the second half of the year decline by about $300 million. $200 million of that is related to destocking in the channel. Our channel had expected to grow much in line with the way they had the past couple of years. And rather than growing, what they've seen is more of a flat type sales. Now, that sounds pretty negative on its face, but that's coming off of a 60% growth over the past 2 years. So we're still very satisfied with the sell-through that's in the channel. We just need to get inventory right-sized.
Was there ever a time, you might not admit this, that during the peak of the pandemic when everybody was just fixing up their home, that you and your team and your board or whatever got together and said, man, this pace can't last?
Well, we sure knew that growing at 40% type revenue, which is what we grew last year, wasn't going to continue. But we're still very in the early stages of the wood conversion marketplace. Today, about 25% of decks installed are composite. We've been converting about 200 basis points of share on an annual basis, so we see a long runway ahead of us.
How much are you exposed to new home construction versus people who've lived in a home for 10 years and say, you know what, they live in Apple Pie Ridge right around the corner, and I want to throw a new deck on?
Yeah, a smaller portion of our business is related to new construction. Over 90% is related to repair and remodel. Today, with higher home prices, higher interest rates, we expect that people will be staying in their homes longer, which will continue to drive the repair and remodel. There's about 50 million wood decks out in the marketplace, and all of those decks will need to be replaced in the coming years. And they will all be part of the target market.
So is it possible you're sort of counter housing cyclical? You don't want people to sell their home. You want people to stay put.
Either staying put or selling your home does tend to drive the remodeling spend, but the economic changes that we're seeing this time may drive a few more people to stay in their homes because of the affordability issues of moving up.
What about materials costs? You seeing any decline in your input costs?
시장이 영 힘이 없어요. 이제 뭐 반등하는 트라이가 안 되는 것 같아요. 여기서 보시면은 뭐 작게 보면은 여기서도 이제 엘리엇 파동 비슷한 거를 찾을 수 있죠. 이런 식으로 1, 2, 3, 4, 5. 요 안에서는 한 번, 두 번, 세 번 일어나고 여기서는 한 번, 두 번, 세 번 일어나고 또 길게 빠지고 그래서 지금 하락세로 가는 그런 흐름이 나오는 것 같고 오늘도 어떻게 보면 길게 봐야 되는 장인 것 같아요. 흐름이 중간에 까딱까딱 하다가 흘러내려가는 그런 분위기로 바뀌는 듯한 그런 모습 강하게 보입니다.
demand.
Welcome back. Porsche revving up its IPO engines and driving for a pretty steep valuation. But are there already red lights flashing for that luxury listing? Robert Frank joining us now with a look at the pretty cool IPO, if anything, just for the cars, Robert.
Yeah, Brian, Porsche aiming for a valuation up to $84 billion. That would equal the entire market cap of Volkswagen, twice the market cap of Ferrari. Now, the bull case here is that Porsche, like Ferrari, is really a luxury brand and should get a luxury multiple. Porsche projecting sales of up to $39 billion this year, margins of over 25%. That is massive in the car world. Makes about 300,000 cars a year. Profits were up 22% just in the first half. Now, several big investors like the Qatar Investment Authority already pledging to buy big blocks of stock, so that bodes well for demand. But there are governance concerns. It's a complicated ownership structure with the Porsche family keeping voting control through a special class of shares. Public investors will get non-voting shares. On top of that, the CEO of Volkswagen, Oliver Blume, he's going to remain the CEO of Porsche. Many shareholders opposing those dual roles. You got recession fears, the energy crisis in Europe, Porsche's big switch to EVs. Also, all those questions hanging over the stock. Now, Ferrari was seen as the model here. That stuck up 3.5 times since it went public in 2015, but Ferrari struggling so far this year, down 26%. Brian?
How much is this an issue with the Porsche family, and what is the sales mix between cars and like the Macan? I call it an SUV, but it's just a car that's jacked up, really.
Yeah, exactly. Well, you know, their switch to EVs has been successful, although early. You know, right now, EVs, the Taycan makes up about 18% of sales. They hope that it will account for 50% of sales in the next 3 years. The Macan goes electric in about 2 years. So, you know, they've got a good road ahead of them, but it's still a lot of unknowns in terms of the investments. And right now, SUVs are more than half of their sales. So that's going to be a huge shift for them and for the investors in this company.
Taycan, people I know love it. Charges fast, looks great. All you got to do is have like $130,000 and you can get one. Robert Frank.
Yeah, exactly.
That's it. Robert, thank you very much. All right, well, that does it for The Exchange. And by the way, do not forget, you can catch us tonight. We're talking more about energy, 6 p.m. for our CNBC special, Energy Emergency. Check it out. For now, I'll send it over to Power Lunch.
Thank you, Brian. Welcome to Power Lunch. I'm Seema Modi in for Kelly Evans. Here is what's ahead. Stocks are falling today as the September swoon continues. All 3 major averages are lower right now. If the Nasdaq stays in the red, that would mark 7 losing sessions in a row. That is the longest losing streak in 6 years. Is there even more downside ahead and risk for stocks? We're going to talk about that. We'll also be joined by a power player. Tillman Fertitta will be here to tell us what he's seeing in his businesses, inflation, the labor shortage, consumer spending. We'll cover it all. Tyler?
Seema, thank you very much, and welcome everybody to Power Lunch. I'm Tyler Mathisen. Stocks have once again turned lower after briefly peeking into the green. As Seema mentioned, the Nasdaq is the one to watch, trying to snap a 6-session losing streak, down 8% over that time. But right now, as you see, it is off about 3/4 of a point. Today, we're seeing declines in media and entertainment stocks, notably Netflix, Warner Brothers Discovery. It's all one company now, among the worst performers on the S&P 500. Alternative energy stocks, they are higher. Enphase expanding a distribution deal over in Europe. And Next Era upgraded by Morgan Stanley on hopes for hydrogen. Well, as investors try to figure out the Fed's next move, our next guest is bracing for further rate hikes. He says inflation poses the greatest risk to risk assets. Joining us now with his outlook for the market and some top picks, Mark Lashini.
오늘 자연재생 에너지 애들이 왜 이렇게 올라갔나 했더니 유럽이랑 계약을 막 하고 그러는 게 지금 많이 증가되고 있다. 그런 얘기가 있네요.
On crushing inflation.
Well, they really do, Tyler, and I think the old adage, don't fight the Fed, is certainly in play at the moment. They seem to make it very clear, particularly Jay Powell's brief speech at Jackson Hole, that their commitment is unconditional. and they're willing to cause some pain in both households and the economy relative to loosening up labor conditions to relieve demand from a swamping supply and therefore provide a release valve, if you will, for the elevated inflation readings we're seeing. So I do worry that as a consequence of their effort to do that, unless what we've seen recently giving some evidence that perhaps inflation is receding off of its peak levels, doesn't develop either as a pattern or come down as quickly as perhaps the Fed would like it to otherwise see, then they're going to keep on their campaign to raise hikes, and talk of 3 3/4 to 4% on the overnight rate is a non-trivial risk for the markets.
With
and I
that-
think you're seeing that reflected in equity investors' opinions.
With that in mind, with an inverted yield curve in mind, is there any way we avoid a recession over the next 6 to 12 months?
Well, I think there is a path for that, Tyler. However, it's exceedingly narrow. Obviously, one only has to look at the labor market as evidence of the fact that employers continue to hire. The JOLTS surveys showed that job openings outnumber unemployed 2 to 1. We continue to see employment ranks increase. That's certainly good news. Also, the fact that the labor force participation rate actually rose, giving some evidence that perhaps the wage gains that the Fed would be concerned about may also help to subside inflation readings. And so collectively, like we saw in this morning's release of the ISM services numbers, the consumers still are well endowed and are more inclined than not to continue spending. And in that environment, perhaps we can overcome the threat of too tight Fed policy may thwart what is still a non-trivial risk of a recession, and as a consequence, allow for this so-called soft landing to occur.
Yeah, I think one of the big questions is how much more pain do we need to see in the labor market for the Fed to get inflation down to its 2% target? We are 1 week away from the next CPI report, which will tell us whether inflation has in fact cooled, similar to what we saw in July, or if it in fact is continuing to get worse than expected. With that in mind, Treasuries, we're seeing some of the highest yields in years. Would you be a believer in shifting some of your capital away from equities and into fixed income?
Well, Seema, we've advocated reducing equity exposure to a level that is congruent with one's risk budget. In other words, target weight on equities within a balanced portfolio, and to diversify, including sectors like energy, which has its own idiosyncratic tailwind, along with more defensive sectors, as the playbook would suggest you should, into an economic slowdown. Having said that, I think with yields having backed up the way they have to 334 or so on the 10-year, I think there may be some offerings or opportunities within the fixed income market that would allow perhaps for some of that capital to be treated better if in fact we see this evolution of the economic slowdown come to pass, even if we avert a recession, which suggests that yields from these levels should, in that environment, at least on the longer term maturity spectrum, work their way lower.
All right, Mark, we'll leave the conversation there. We appreciate you joining us today with the Dow currently down 157 points. Mark Liskini.
Thank you.
Let's turn to energy. Europe's energy crisis escalating, and the worst is still to come. That's according to the CEO of German gas giant Uniper, who warned of a broken relationship with Gazprom after Russia suspended gas supply to Europe indefinitely in response to economic sanctions. Adding fuel to the fire, OPEC will cut production by 100,000 barrels a day just 1 month after it pledged to increase production by the same amount. Let's talk about it with Chris Wright. He is the CEO of Liberty Energy to discuss the European escalating crisis around energy. Chris, to many, this is clearly an indication that Russia is seeking to force Europe to lift economic measures. The question is, will it work? Do you think the Europeans will cave?
I don't know if they'll cave. I think the temptation will be strong. The cutting of the gas on Nord Stream 1 is just a massive move. Natural gas is the largest source of electricity in Europe by a fair margin. It's the dominant fuel for industry and home heating. And via fertilizer, it's the most important ingredient for agriculture. So this is a significant threat to society in Europe. It's going to be a rough winter.
And what does this mean for the U.S.? I mean, many people would say this is just a European problem, but we are seeing natural gas prices continue to hit historic highs. Brent crude now above $90 a barrel. California weighing the option of potential blackouts as it deals with this new heat wave.
Absolutely. There is ripple effects. And as the European industry shuts down, a good part of their industry will shut down this winter. That's inflationary effects across the industry. If Russia plays politics with cutting back oil exports, we can see oil prices double from where they are today. So yeah, these things have global ramifications.
So what do we do?
The best thing we can do, and we're
지금 뉴스가 뭐가 있는지 한번 둘러보도록 하죠. 일단은 커머더티 쪽으로 한번 보면 크루드 오일은 내려가고 있고, 그다음에 특별히 볼만한 것이 내추럴 가스 정도죠. 내추럴 가스도 좀 내려가고 있고, 그다음에 번드 쪽을 보면은 국채 10년물이 지금 3.33, 3.5가 지난 고점이었어요. 거기까지 거의 돌파할 여지가 있어 보이고, 지금 3개월 물을 보면은 2.9까지 올라갔네요. 3개월 물이. 그래서 일단 3개월이랑 10년 차는 0.4. 그러니까 10년 물이 올라가다 보니까 이 장단기 금리 차는 오히려 좀 벌어지는 그런 모습을 보여주는 듯한 형세이고, 그리고 특별한 뭐 헤드라인 뉴스는 지금 없는 것 같아요. 하루 종일 들어봐도 별로 업데이트된 게 없죠. 업데이트된 거 없고, 업데이트된 거 별로 없고, 레이디스 뉴스를 봐도 특별히 눈에 띌 만한 거는 없는 것 같아요. 일단은 이제 달러가 강세예요. 지금 110이 넘었어요. 오늘 달러 인덱스가 110이 넘었다는 거는 이제 유로랑 비교했을 때 달러가 상당히 강하니까, 여기 나오는 헤드라인 보면은 US travelers get discounts in Europe amid favorable euro-dollar exchange rate. 그런 얘기가 나오고요. 그러니까 미국에서 돈 많은 사람들은 지금 유럽 여행하기 참 좋아요. 시간 많고 돈 많은 사람들은. 그리고 오늘 주식 시장 중에 많이 움직인 게 알리바바, 페덱스, 드랍박스 뭐 이런 게 많이 움직인 것 같은데, 위로 갔는지 아래로 갔는지 모르겠어요. 그리고 보면은 오늘 뭐 다운그레이드, 업그레이드 된 종목들이 있나 한번 볼까요? 특별한 거 없는 것 같아요 오늘.
Just a slightly less obstructive policies in the United States and an ability to build more pipelines and more energy infrastructure in the United States would build confidence and would spur growth in more U.S. oil and natural gas production. We're going to be a winner out of this geopolitical alignment with our local domestic sources of energy, from oil to natural gas liquids. But to be a bigger winner, we've got to avoid the hostility towards hydrocarbons. That's what got Europe in this position to begin with.
지금 오늘 넥스테라 에너지, 지금 뭐 자연재생 에너지나 기타 등등 이런 좀 대체 에너지 이 종목들이 좀 많이 오늘 오르고 있는데요. 특히 이제 유럽이랑 뭐 계약하는 회사들도 많고, 그래서 이제 넥스테라 에너지 같은 경우에 오늘 매수 의견 상향 조정이 있고, 테슬라 같은 경우에도 지금 매수 의견 상향 조정, 아마존 베스트 아이디어 나오고, 요건 처음 보는 건데요. 엔하우저 부쉬, 이건 뭔지 모르겠네요. 뭐 하는 회사인지 모르겠는데 이것도 바이래네요. ABI래요. ABI. 더치시 뱅크, 타겟 타픽, 그다음에 트랜스오션 바이, 데이브 앤 버스터, 페버릿 리스트가 있고, 이거는 심볼릭 플레이예요. 이건 뭐야? 루멘텀? 이거는 뭐 하는 회사인지 처음 보는 거네요. 이것도 무슨 에너지 회사 같네요. 페트롤리움 업사이드가 있다. 그래서 이것도 바이. 심볼은 모르겠어요. 찾아보셔야 될 것 같고. 애플 오버웨이트, 드롭박스 바이, 노르웨지안 크루즈 라인 바이야. 이거는 뭐 믿을 수가 없어요. 요런 정도 뉴스밖에 없는 것 같네요. 요런 정도. 제 이메일이 어딨냐면은요, 목두님. 제 채널에 가잖아요. 유튜브에서요. 제가 제 이메일을 몰라요. 여기다가 뭘 링크를 해놨는지. 채널을 가면은요. 여기 About에 가면은요. 요 밑에 요 뷰 이메일 어드레스가 있을 거예요. 여기로 이메일을 하세요. 그럼 될 것 같습니다. 이거 아마 전화로도 될 거예요. About에 가셔가지고 for business inquiry, 뭐 비즈니스는 아니겠죠? 근데 여기다가 클릭하시면은 여기 있어요. 여기다가 하시면 될 것 같아요. 여기다 카피 넣죠, 뭐. 이건 자주 안 보는데 보도록 할게요. 목두라고 꼭 말씀을 하시고서 이메일을 했어요. 제목에다 목두라고 써주세요. 제가 이거 다 안 보거든요. 이메일이 많아서. 근데 제가 저녁 시간을 내기가 좀 어려운데. 아까도 잠깐 봤지만 지금 일반 구독자님들도 제가 들어오시게 해놨으니까 보면은 여기 그죠. 지금 센티먼트가 베어리시한 게 50%. 이건 역사상으로 봤을 때도 상당히 많아요. 그렇죠? 그리고 원이어 베어리시아이가 59였어요. 그러니까 거의 뭐 지금 마켓 센티먼트가 상당히 안 좋다. 그렇게 보면 될 것 같고요. 그리고 지금 제가 보는 거는 S&P가 한 3,950 정도 오늘 넘으면은 이제 단기적으로 반등을 조금 할 수 있는 그런 모멘텀을 가져볼 수 있을 것 같고, 근데 지금은 3,900을 버티기도 약간 버거워 보이는 그런 모습을 보이는 것 같고요. 그 다음에 보시면은 이 차트상으로 봤을 때도 보면은 뭐 그렇게 큰 흐름은 없어요. 이런 흐름에서 지금 현재 거꾸로 해야겠구나.
Well, hi, Tyler. You're right. Campaign season is now officially underway, and Democrats are kicking it off in part by
보시면 61.8% 피보나치 리트레이스먼에서 지금 버텨주려고 하는 그런 모습은 보여요. 근데 굳이 여기서 상승세를 찾는다? 그런 건 좀 어려운 것 같고, 그냥 다른 지표들을 보면은 지금 약간 오버솔드에 가까워오는 그런 모습들이 보여지고, 지금 다이버전스가 이제 많이 생겼으니까 컨버전스로 바뀔 가능성이 있고요. 그 다음에 TD 시퀀스로 봤을 때 9 카운트가 끝나고 다시 카운트가 시작된 상황이기 때문에 뭐 이런 거는 진짜로 대세 폭락으로 가지 않는 이상은 다시 더 이렇게 떨어질 가능성은 조금 적어지기 때문에 약간 횡보하면서 이거 유지해주는 그런 분위기로 가지 않을까. 그래서 단기 상승을 한다 그러면은 한 4,000 정도? 4,050 정도? 요 정도? 그런 흐름을 보이지 않을까. 그 이유를 몇 가지 아까 아침에 회원님들이랑 얘기는 했지만 다시 얘기하면, 지금 이 주식 시장이 이 상승으로 이렇게 갔던 이유가 요 CPI가 발표됐었던 그 지점이고, 그때 연준에서 이제 피벗을 하면은 야 좋겠다 그래가지고 이렇게 올라갔잖아요. 그래서 지금 그대로 그만큼 빠진 상황이니까 지금 이자율의 상승으로만 보면은 거의 뭐 주가는 한 요 정도 3,900선 정도가 유지가 된다, 그렇게 보면 될 것 같아요. 그래서 뭐 다른 희망이라든지 그런 것들을 본다 그러면은 요 지점에 한 반 정도 되는 지점, 한 4,050 정도 되는 그런 위치, 그런 흐름에서 좀 박스권에서 있지 않을까 하는 그런 생각도 하게 되니까요. 큰 기대와 희망은 별로 없는 장이다, 이렇게 보시면 될 것 같고, 박스권에서 어떻게 대처할지 그런 것들만 보시면 될 것 같아요. 오늘도 뭐 시장의 뉴스도 그렇게 많지 않고 할 얘기도 없고, 그래서 장 마감 라이브는 스킵을 할 것 같고요. 이렇게 약간 좀 편안하게 말수 줄이면서 같이 좀 차트 보면서 시간을 보내도록 하죠. 오늘 많이 뜬 종목 중에서 이제 자연재생 에너지 중에서 이 엠페이즈 같은 종목도 보면은 지난번에 이제 실적 나오고선 갭 상승을 했죠. 그리고 또 오르고 쭉 올라서 이 갭을 채우러 내려올 것이라고 예상은 했지만 그 위에서 잘 버텨주고 있어요. 그래서 오늘 같은 경우에도 6.7% 상승 계속 하고 있는 종목이고, 지금 우리 회원님들 중에서 이제 얘기가 크로거 얘기가 나왔는데 우리 100억의 꿈님 한번 보세요. 크로거 같은 경우에 지금 이 갭이 있었어요. 갭이 있었어. 갭이 있었고 갭에서 지금 이 부분에 갭을 내려오면서 채우고 다시 그 갭 위에서 이제 못 들어가고 있는 분위기거든요. 그리고 200일 평균선 아래에 있고, 이런 경우에는 어닝 플레이를 하는 것보다는 제 생각에는 실적이 잘 나오면은 충분히 상승 모멘텀은 생길 것 같거든요. 지금 자체로는 조금 많이 눌리는 느낌이 많이 드니까 지금은 진짜로 약간 갬블성 배팅이 될 것 같은데요. 지금 흐름으로는. 그리고 보면은 올라왔고 내려왔고 되게 뉴트럴해요. 지금 어떤 식으로 갈지 모르는 것 같아요. 기다리는 것 같아요. 딱 심리죠. 차트는. 지금 실적 발표 기다리는 듯한 그런 느낌. 뉴트럴한 냄새가 많이 나요. 오늘 매수 의견 상향 조정된 테슬라를 한번 보죠. 테슬라도 보시면은 지난번 저점과 지난번 고점, 그러니까 최근에 크게 흘렀던 그 흐름에서 50% 정도 되는 지점이 260불 정도 되는 위치, 거기에 이렇게 나와 있죠. 그 나와 있는 지점에서 오늘 지금 해머를 만들면서 올라가고 있어요. 그래서 테슬라 같은 경우에도 한 260 지점은 지켜주지 않을까 하는 그런 생각도 들어요. 근데 테슬라는 지금 285를 넘어주는 게 되게 중요해요. 285가 어떤 트렌드를 얘기하냐면요, 올해 안에서 이 비와 평균선이라 그래요. 이거를 비와 볼륨과 프라이스를 같이 섞어서 계산하는 그 평균선에 지금 좀 아래에 있어요. 그래서 그거보다는 위에 올라와 있는 것이 훨씬 안전하거든요. 그러면 285 정도가 넘어간다 그러면은 상승세에 올라타는 불리시하게 다시 돌아갈 수 있는 그런 위치가 되니까 285 잘 기억하시고요. 다른 종목들은 그렇게 눈에 띄는 종목이 오늘 없었던 것 같아요. 그래서 요 정도 지금 마켓 돌아가는 상황 한번 돌아봤고요. 일단 지수로 바꿔 놓겠습니다. 볼륨을 봐야 되기 때문에 S&P 선물 지수로 이렇게 켜 놓는데요. 전반적인 차트 흐름상으로 보면 아직도 하향세예요. 아직 전반적인 차트 흐름으로 보면은 아직도 하향세가 강하고, 뭐 1시간 차트, 4시간 차트 뭐 이런 걸로 봐도 다 지금 하향세예요. 하향세. 아직 하향세를 완전히 꺾어 올리진 못했어요. 이런 부분을 봐도 이렇게 하향 트렌드죠. 그리고 저점이 여기가 저점이었는데 오늘 그 저점을 못 지키고 한번 떨궜다가 지금 반등하는 모습인데, 요런 거는 또 애교를 봐줄 수 있죠. 요 정도는 지금 테스트하는 그런 걸로 애교를 봐줄 수 있어요. 그래서 한 3,900 정도를 지금 테스트하고 있다. 우리가 그렇게 보면 될 것 같고, 그래서 이제 3,900에서 반등을 해서 3,950, 그러니까 이게 뭐 프리마켓이긴 하지만 그래도 여기에 고점을 다시 올라간다. 그러면은 방향 전환이 가능하기 때문에 그런 거를 한번 우리가 관심 있게 보면 오늘 시장이 앞으로 요번 9월 연준 그리고 다음 주에 있는 CPI 발표 전까지 어떻게 움직여 갈지 그런 거를 조금 기대해 볼 수 있게 되죠. 앞으로 1시간 반 정도가 남았죠. 1시간 반 정도가 남았기 때문에 제가 말은 많이 못할 겁니다. 목이 아파서. 그리고 또 누구야? 우리 회원님들 중에서 디스코드에서 이제 TMF에 대해 가지고 질문하시는데 TMF는 이 20년물 국채예요. 그러니까 채권 가격은 지금 똥값이 되고 있죠. 그러니까 계속 흘러내려가고 있습니다. 지금 지난 저점보다도 더 내려갔어요. 저점보다도 더 내려가고 10불대다. 그러니까 오늘 지금 10년물이 3.35네요. 제가 볼 때는 10년물 3.5가 일단 첫 번째 매수 타이밍이 아닐까 생각해요. 그러니까 글쎄 오늘 들어가는 것도 좀 성급한 것 같기도 하고 10년물이 한 3.5 정도 되면 사신다 생각하면 좋을 것 같아요. 10년물이 지금은 4까지 올라갈 수도 있거든요. 그러니까 그런 걸 계산하고 사시고 이 국채 가지고 수익을 내시려면 꽤 시간은 오래 걸릴 거예요. 올라오는 시간이. 이게 내려갔을 때 올라오는 시간이 그렇게 단기간에 휙 올라오진 않을 거예요. 한 30% 정도는 수익을 낼 수는 있지 않을까 그렇게 생각해요. 지금 보면은 됐죠? BJC 4317님 제가 지난번에 얘기할 때는 3.5 정도 얘기했는데 왜냐면은 지금 시장이 계속 상황이 바뀌고 있잖아요. 그러니까 지금 10년물이 4%까지 간다는 그런 예측도 있기 때문에 이거는 1포인트가 상당히 큰 거당이요. 국채는. 그러니까 그래도 3.5에 최소한 가까이 왔을 때 시작하는 게 나을 것 같아요. 저는 개인적으로는 자연재생 에너지를 좋아하진 않지만 지금 추세는 자연재생 에너지 쪽으로 돈이 좀 흘러가고 있는 것 같아요. 그러니까 스탑 로스 잘 걸어 놓으시고 잘 트레이드 하시면은 좋은 성과가 있지 않을까 해요. 자연재생 에너지 쪽. 잠깐 마이크 끄고 무건 수행을 좀 하고 있겠습니다. 여러분들은 앞에 차트는 S&P 500 선물 지수로 바꿔놓고 잠깐 침묵의 시간으로 들어가도록 하겠습니다. 여기 오늘 내가 마킹해 놓은 요 부분들을 한번 보세요. 고기를 넘어가는지.
CNBC.com.
90 minutes left in the trading day. We want to get you caught up on the markets, stocks, bonds, commodities, and a look at the consumer with power player Tillman Fertitta. Let's first take a look at how stocks are faring. We're off the lows of the day. The Dow currently down 133 points. NASDAQ currently down about a half a percentage point. So we are off the lows of the session. Let's go to the bond market where yields are continuing to rise with 2-year yields now at the highest level since 2007. Rick Santelli here with us. A look at why bonds are moving so much. Rick.
Yes, indeed. As a matter of fact, you have it. November 2007, you see it on the chart. Here we are up 11 basis points, a whisker under 3.5%. And one of the reasons, of course, is that the Fed in September is most likely going to raise 0.75%. Could be the third 3/4 point increase in a row, and the market is making its adjustment. And the curve is steepening today because it isn't the 2-year yield that are zooming ahead fastest, it's long-dated treasuries. Right now, you're looking at 7-year and 10-year up 15 basis points, as you see on this chart, starting in June, because we are still getting close, but not quite ready to take out that June 14th high yield close, just a bit below 3.5% for the 10-year yield. The curve has steepened about 3 basis points and come a long way. Steepening might not be the exact correct terminology. How about less inverted, especially if you're looking at 2s to 10s. Now, it isn't only in the U.S. All yields are going up, but maybe in the U.K., where the energy crisis is really coming to a head, well, its 10-year closed around 3.10, 3.10%. That's the highest in 10 years. And if we look at the foreign exchange markets, dollar is king. The dollar index on pace for another fresh 20-year high close. And if we look at the component parts, 1985, we're getting very close to levels in the pound versus dollar that we haven't seen since the mid-'80s. That would be close to 40 years. And if you look at the euro versus the dollar, definitely on pace for a fresh 20-year low, where the dollar index hit a 20-year high. And finally, the dollar yen today on pace for another in a row, fresh 24-year low close against the dollar. And all this, of course, is happening for a variety of reasons. Energy crisis in Europe, and U.S. interest rates are moving up aggressively. Back to you.
All these historic milestones being hit. Rick, thank you for summing it up. Oil closing for the day. It's been a volatile session as OPEC cuts production. Gazprom pipeline remains offline. Pippa Stevens, though, here with the details. Pippa.
Hey, Seema, it's been a pivotal few days for the energy market. Starting with oil, OPEC and its allies agreed yesterday to cut production by 100,000 barrels per day beginning in October. Now, this is not a meaningful amount, but as RBC noted, it's important because it signals the group's willingness to respond to price dynamics, or as the firm put it, active market management. Brent crude is down 3% at 92.89. WTI is about flat on the session. The difference in those moves is because WTI didn't have a settlement price yesterday, so it is trading against Friday's levels. Now, moving over to gas, Gazprom shutting down flows through the Nord Stream 1 pipeline indefinitely. That sent prices jumping yesterday, although the contract is now down. But still, Rystad Energy saying that winter is coming, with the firm predicting one of Europe's most challenging few months in decades. U.S. natural gas also tumbling down about 7%. Production is up, and an early start to heating season is being challenged, Seema, by warmer temperatures. Back to you.
Actually, I'll take it from there. Thanks very much, Pippa. Now time for our power player. From inflation to the potential for a slowdown to a lack of workers, supply chain issues. He deals with all of them in his hotels, casinos, and restaurants. Is Tillman Fertitta back with us now for a special treat. Thank you, Tillman, for joining us. We appreciate it.
Hey, Tyler, that sounded pretty negative.
Well, I don't know.
Some good
We're going to
news.
get there. I'm going to ask you just to tell me how business is by segment, by region, by type of business.
So it's really interesting. High end is off a little bit, but tourism is up because we didn't have the European traveler last year, and we didn't have traveling near as much as we do this year. So that's all kind of come up a lot. And now that high end, because of all the PPP money, most people have spent it all at our high end restaurants. And so that's a little off now. But overall, sales are really strong. We continue to be extremely busy, but then we go into all those negatives that you just said. And natural gas, has been at an all-time high. So our energy cost alone was up over $1 million just in August. And of course, hourly wages are up over 10% compared to last year. There is no need for minimum wage anymore. It's way, way, way above where people ever wanted minimum wage. So, and then you have, the energy that everybody who delivers something to you puts a surcharge on it. So costs are high. It's exactly kind of what you said, but yet business is still good. So casinos, business is good.
Go ahead.
Casinos, business is good.
Good. So let me ask you about that. When you see rising prices of the inputs like food and other things, how do you have pricing power to put it through? In other words, I'm going to restaurants and I'm seeing most in the higher end restaurants, the steak is now $65 minimum, on its way to $100 for some cuts. So do you have pricing power to do it?
Let me just say this. I think we're running out of pricing power. Mm-hmm. And part of the reason that your same store sales is so up is because of pricing power over the last 12 and 18 months. But at the same time, everybody's wages are a lot more. But you're right. At a high-end restaurant now, you can order an 8 or 10 ounce filet and be paying $65. But remember, we're paying $25 for that steak. And then we have the waiter that delivers it costs so much, and the cook that cooks it. And occupancy has gone through the roof for restaurants. Any decent restaurant location now is $500,000 and $600,000 a year just in rent. So costs continue to rise, but business is good.
Tillman, it's Seema. I was curious, in the latest August jobs report, we saw the hospitality sector add around 31,000 jobs, which was less than some of the other sectors like business services, healthcare, and retail. What are you seeing on the labor front? Is it still hard to find new workers, or is that easing?
I'll continue to say, when you go into a restaurant today, you should always expect good food, but service is not going to be what it was. I got a report on Friday that we're short 250 managers and 2,800 hourlies. Okay, that's for 500 restaurants. Okay, so just take that, and that's what it takes to operate when you're full on a typical night. And so there's a tremendous shortage. A lot of people have just left the industry. I don't know what they're doing, but they've definitely left the industry and realized, you know what, we can't even get people to go to work 9 to 6 Monday through Friday. So how do you think hospitality people think when they say, wait, why am I working at 9 o'clock on a Saturday night? Why am I working on Christmas Day? So I think a lot of people have just left the industry and are not coming back.
Why do you think that is? If you point out earlier, and it's true, that wages have gone up, is that the only lever you have to get people to come back, is to pay them more and more and more? But at some point, you can't.
Well, we are paying them more and more and more. But go back to what I just said, Tyler, is that people learn not to work and go to work every day. It was all about today, all the Wall Street firms telling everybody to come back to work in New York and all over the country. So think about a waiter who doesn't want to work, or a cook who doesn't want to work at 8 o'clock on a Saturday night when all their friends are going out. And so they're finding other things to do so they don't have to work when everybody else is out playing.
You raised something that I wanted to get to, and since you opened the door, I'll go there, and that is, what has your policy been? Obviously, you have a lot of hourly workers who have to be in place to do the job, but in your, I call them back office functions, what has your policy been on return to office? How are you handling it?
We never left the office, okay?
Well, you are in Texas, so I guess that's...
Right. I mean, that's where our corporate office is, and that's we kind of followed the state. But at the same time, we've had an extremely good, productive 2.5 years because we were in the office. And I'm not saying that if you're not in the office, you're not. And let me tell you something. I believe that when somebody has something personal to do, especially mothers, be it their kids.
포니님 오셨네요. 지금 뭐 귀팅할 것도 없죠. 제가 뭐 하는 얘기도 없기 때문에. 오늘이 참 시장이 통계적으로 보면은 레이버데이 위켄드 끝나면은 하락으로 가는 추세가 많았다. 그런 통계가 많이 있어요. 그리고 이번 주는 특별한 이슈거리가 없는 듯하고 다 유럽발 악재 내지는 유럽발 뉴스들이 많을 것 같고, 이번 주에는 특히 지금 연준 은행장들의, 그리고 뭐 부의장이라 그래야 되나요? 브레이너드가 하여튼 이런 사람들의, 특히 목요일 날 제롬 파웰의 또 스피치까지 쭉 이렇게 있는 그런 주예요. 그렇기 때문에 아마 좀 약을 치는 주가 아닐까, 미리 약을 좀 치는 주가 아닐까 생각하고, 이제 그 다음 주에 나오는 게 이제 CPI가 13일 날 화요일 날 나오고요. 그다음에 인플레이션 레이트 같은 거, 코어 CPI 뭐 이런 것들이 쭈루룩 나옵니다. 그래서 이때가 가장 다음 주가 좀 크리티컬한 그런 주가 될 것 같고, 이번 주는 약간 노이즈가 끼는 그런 주가 아닌가 그렇게 예상됩니다. 현재 뭐 시장의 퍼포먼스를 보면은 의외로 리얼 이스테이트 같은 게 이렇게 많이 올라와요. 리얼 이스테이트이 한동안 퍼포먼스가 안 좋았었는데, 이게 보면은 거의 섹터 로테이션이에요. XLR. 그쵸? 차트를 보면은 별로 매력 없어요. 근데 워낙 이제 상대적으로 다른 섹터보다 바닥이라 그래가지고 아마 섹터 로테이션이 들어온 게 아닌가. 굳이 얘가 뭐 잘 될 그럴 이유는 없죠, 오늘. 그쵸? 하여튼 3,900 지키는 게 버거워 보이는 그런 하루인 것 같아요. 지금은 3,900 유지하는 게 버겁습니다.
Now.
Enterprise software stocks still under pressure after an earnings season that saw more companies report delays in closing deals. This week, John Ford brings us an up-close with one CEO who says he's learned to be clear when there are problems. John.
Yeah, hey, Seema. Todd McKinnon's co-founder and CEO at Okta, an identity management and security company. Now, Okta stock fell hard last week after he said the company was having trouble digesting a recent acquisition. Todd has faced operational trouble before in Okta's early days, and he says it forced him to change his approach, which had been to project that he had everything totally under control.
That second year in the job at Okta, my instinct was show no weakness, show no problems. Because if this company has problems, it's my fault. I'm the CEO, I'm the founder. I shouldn't have let it have problems. And that was my instinct. That instinct turned out to be totally wrong. The right way to do it is like, team, here are all the problems, and there are a lot of them. And I trust you, and I have confidence in you as co-owners of this to help us get through them. And my first reaction was like, oh, that's going to scare everyone away. And it did scare a few people away. There are some people that bailed out on Okta during that second year. But it had an amazing being open and transparent and showing them the situation we were in and showing them the possible ways out of it and some of the risks was galvanizing for the rest of us.
When I spoke to McKinnon on Tech Check earlier this week, some of that mindset was on display. Even though the quarterly results mostly beat expectations, he pulled in revenue projections, saying some salespeople were leaving, which had slowed momentum.
Yeah, we have had a little bit higher than average attrition in the sales team, and that is driving some of the near-term mixed results. I think when you look at the quarter, though, I think there are salespeople being successful at Okta. We had a record number of $1 million plus deals in the quarter. We had great customer retention. Our net retention for customer, which is really emblematic of customer success, is 120% plus. So there's a lot of success going on. But when you think about trying to reach this new buyer and bringing two sales forces together in service of trying to broaden that appeal in the C-suite of every organization in the world, that's challenging and a little bit more challenging than we thought it would be. So we're going to work through those issues and move forward.
McKinnon was also an early executive at Salesforce, rising to head of engineering at one point. He told me he learned from Mark Benioff how leaders can talk about the future, even though it doesn't exist yet, in a way that motivates a team to move forward. Given the choppy economic waters we're in, he's probably going to need both the transparency and the vision to move on from here, guys.
Yeah, I was curious, John. There was a note from Guggenheim last week that really laid it out, right? They said Okta is a company in disarray. As McKinnon mentioned to you, Salesforce attrition, historically high levels. They also talked about how the co-founder and COO is taking a year sabbatical. Their chief product officer is departing. What is he doing really to turn around the company over the next 3 months here? In your thoughts?
Now, Seema, Todd would argue that that net revenue retention number shows that people who were paying, companies that were paying for the product a year ago are paying that and more now, which shows product quality and customer satisfaction. So he would argue that the product isn't broken. Also, they had some security issues earlier this year, you might remember. The company's arguing that they're hearing about that less and less from customers, and that actually that's had no quantifiable impact on revenue. So he's arguing that maybe some of the problems have been blown up to be more than they are, but of course the street's going to continue watching that from here.
What is Okta's edge in what is increasingly becoming a crowded security and authentication marketplace?
Tyler, I would say it's focusing on identity versus historically the security market has been trying to, well, not trying to, but has ended up in its pitch sort of being more fear-based. Well, you know, if you don't install this, here's what's going to happen. Okta's sort of unique approach from how it started is this is really about managing the identities of people in the organization, who's allowed to access what. So it's a little bit more proactive about productivity versus being about fear.
All right, John, thank you very much. John Ford, we appreciate it. Always interesting. All right, coming up, the biggest dividend payer in the Dow, the big call on FedEx's future, and the stock that could rally 100%. That's a double. Double your money. All ahead on 3 Stock Lunch.
오늘 공개 방송 이거는 여기서 일단 닫고요. 장을 봐야 될 것 같습니다. 뭐 할 얘기도 없고 너무 켜놓는 것도 그렇죠? 밍밍하죠. 그러니까 일단 퍼블릭에 오픈하는 거는 지금 이 시간 후로 닫도록 하겠습니다. 뭔가 이렇게 나눠드릴 말씀이 있으면은 저희 계속 가지고 있겠는데요. 특별히 오늘은 아까 말씀드린 기본적인 키 S&P 3900, 3950 그 부분에서 어떤 식으로 주가가 형성되는지 그게 가장 큰 오늘 키포인트일 것 같고요. 지금 흐름으로 봐서는 약하네요. 이렇게 뭔가 1시간 10분 정도 남은 상황에서 뭔가 크게 튀어오를 것 같은 그런 뭐 뉴스거리도 없고 시장이 그냥 밍밍한 그런 분위기로 가는 분위기이기 때문에 지금 계속 고점이 낮아지는 분위기로 가고 저점은 그래도 일단은 전 저점보다 떨어지지는 않고 있어요. 하지만 흐름 자체가 그렇게 강하게 튀어오르거나 뭐 떨어질 악재가 없기 때문에 이렇게 밍밍하게 갈 것 같습니다. 그래서 또 라이브 켜놓으면 밍밍해지기 때문에 여기서 일단 라이브 문은 닫고 나중에 또 특별한 일이 있으면은 장중이 아니라 클로징 벨에서 한번 뵙도록 하고요. 지금은 일단 이게 문을 닫는 것이 나을 것 같아요. 왜냐면은 열어놓으면 처음 보시는 분들 들어오면은 이거 뭐 하는 건가 싶기도 하거든요. 그러니까 그렇게 하도록 하겠습니다. 그러면 오늘도 뭐 날씨가 더우니까 더운 날씨 잘 건강 유의하시고요. 내일 또 한번 시간에 뵙도록 하겠습니다. 감사합니다.
Time for today's three stock lunch. We're going to look at some of today's biggest headliners. Verizon, which on the day it named itself Verizon, I didn't know better. I called it Verizon, but that was a long time ago. It used to be Bell Atlantic. Raising its dividends 16th consecutive year and has extended its lead as the highest yielding Dow stock. That's not always a good thing. FedEx moving lower following a downgraded Citi. The firm saying macro pressures could impact earnings growth, and Stifel reiterating its buy on Norwegian Cruise Lines. SEMA knows a little bit about this one, saying the stock could serve up nearly 100%, surge 100% following recent weakness. Here to help us trade them, Craig Johnson, Managing Director, Chief Technician at Piper Sandler. Craig, welcome. Let's start with Verizon, high dividend, raising it again, but it is 25% lower than when it began the year.
You know, Tyler, you look at the stock, and it's very clear looking at the chart that you're still making lower lows, lower highs in here. And the stock right now is sitting at a 52-week low. Yeah, the dividend is attractive, but again, at this point in time, we got to really see the chart sort of set its footing in here before you can really get excited about Verizon stock in here. So from my perspective, I think you got to avoid this name until we can actually find support in the shares itself, Tyler.
Craig, what about FedEx? Shares are down about 21% this year.
So when you look at FedEx, it's sort of consolidating in a range. Upper end of the range is around $240. Lower end of the range is $200. And from our perspective, the stock is getting oversold. But I really want to see some sort of indication that at the very lower end of this range, that the stock is going to kind of bounce and start to rally off of the lower end of the range. We are below a declining 50, 200-day moving average. So technically at this point in time, the best you can hope for is some sort of oversold bounce at the lower end of the sort of trading and consolidation range for FedEx.
All right, let's move on to number 3. That would be Norwegian Cruise Line. What do you think here?
Norwegian Cruise Lines, it's been sort of a tough stock at this point in time, down 36% year to date, widely underperforming many of the broader averages in the market at this point. But here's the thing, I see a little glimmer of hope here, Tyler, is that the stock is now starting to make an emerging sort of new uptrend here in the shares. And if you look at that uptrend and you compare it to where the long-term resistance comes into play, that's around 1650. So from my perspective, just looking at where we are now, we could probably see a nice trade back up to 1650, which is around 20 and change % upside from here, and probably looks among the most attractive among these three stocks here today for lunch.
And the stock is up today on a note from Stifel, upgrading the stock to buy following the new launch of a new ship. In comparison to Royal and Carnival, you would still pick Norwegian, or is there a better buy within this space?
I think Norwegian is fine at this point in time. A lot of them, a lot of those names look the same. There's been tremendous amounts of adding of debt to the balance sheet to keep these companies afloat, shall we say, during the pandemic. And they've diluted their companies quite a bit. But overall, they look all about the same. I think Norwegian or Royal, probably among the two more constructive of the kind of big three names out there.
Let's widen out our lens a little bit, Craig, and get your thought on the market generally, down 212 points on the Dow right now as we have begun September, which is seasonally not a particularly good month. Neither really is October. What do you see between now and year end?
Tyler, all I'm seeing and hearing from people at this point in time is a tremendous amount of negativity. I haven't seen investors this negative on the market in quite some time, and I can understand why they are negative. The challenges that you have in Europe, the downturn that we've seen in the broader markets here to date, interest rates that have been going higher, the curve that is inverted, all these things. But here's the thing that I find interesting, is that the market is reflecting a lot of this. Some of the indicators that we've looked at, Tyler, they're tremendously oversold. They're at levels that we rarely see over the last 50 years. And when I see levels this low, I start leaning into the negativity, and this is where I want to start buying things. No change to my year-end objective of 47.75.
Yeah, you know, I was going to ask you as you started to answer there, well, is all that negativity actually a good thing? And you answered it. Craig, as always, great to see you.
Thank you.
All righty.
Up next, we will put the surging dollar under the microscope, what it means for your investment. That's coming up.
여러분들이 요즘에 돈을 지키시는 방법은 딱 한 가지예요. 팔지 말고 트레이드 하지 말고 딱 계시면은 돈을 지키실 수 있어요. 요즘 같은 시장에 트레이드 하셔서 돈을 버시겠다고 이렇게 섣불리 발을 대시면서 손실을 보시면은 회복하기가 힘들어요. 그러니까 최대한 아까도 말씀드렸지만 잃지 않는, 그러니까 로스가 없이 버틸 수 있는 전략을 세워 놓으시는 게 가장 합리적인 전략일 거예요, 지금에서는.
Bounty.
Welcome back. Let's talk about these historic moves in the currency market and what it means for your money. Now, as the Federal Reserve tightens, Japan continues to ease. That's why we're seeing the yen at a 24-year low against the U.S. dollar. Analysts say that could challenge U.S. companies with exposure to Japan. We look through FactSet. Industrial supplier WW Grainger with 13% of its revenue made in Japan. Visteon, automotive electronics supplier, and manufacturers Nordson and Allison Transmission. These are some of the names to keep an eye on. They collect revenue in Japan. So what happens when the dollar is stronger is when they convert that back into dollars, you're basically bringing in less revenue. And it's not just Japan. The UK currency at a 24-year low against the US dollar as the economy there softens and inflation remains at the highest in decades. US companies with exposure to the UK, according to Goldman Sachs, Newmont Mining with 69% of its revenue generated there. eBay, Etsy with high exposure to the UK. The weaker currency is also pressuring UK equities. It's not so much the FTSE 100, which tracks multinationals. Remember, they benefit from a weaker pound, but it's the FTSE 250, which tracks the domestic companies. That really tells the story. You'll see down nearly 20% so far this year. The euro certainly challenged by all of this, trading at a 20-year low against the US dollar today as we await the European Central Bank to make a decision on interest rates this Thursday, Tyler. The expectation is somewhere between 50 to 75 basis.
The euro at parity to the dollar sure makes it easy if you're traveling there. It's if it's 500 euros, it's $500 basically. Yeah. But as you point out, U.S. companies that are doing business in Europe or in England or Japan, they're bringing back fewer dollars for each transaction, because the dollar is so much stronger.
Exactly. So this becomes a big tailwind, or big headwind for all of these multinationals. It really questions whether diversification makes sense in an environment where central banks are not on the same page.
Yeah. All right. Right? Falling dollar is better for multinationals who want to get more dollars back when they bring them back. All right. Thanks for watching Power Lunch, everybody. Glad to have you with us.
Great to be here with you, Tyler.
Likewise.
Closing bell begins right now.
A volatile day here for stocks with a more than 400-point swing in the Dow. The most important hour of trading starts now. Welcome, everyone, to Closing Bell. I'm Sarah Eisen. Take a look at where we stand right now in the market. Down about 200 points on the Dow. Low of the day was down 270. High of the day, as you can see, we tried a few attempts earlier in the session, up 145 points. These negative reversals are becoming a theme in the trading sessions lately. The S&P 500 down 0.4%. It's helped right now by some of the defensive stocks, which are higher on the day. We're talking about groups like real estate, utilities, and healthcare. The Nasdaq's underperforming as Treasury yields continue to shoot up. 10-year yield goes past 330. The Nasdaq down about 0.75%. Take a look at healthcare. One of the winners today with names like Johnson & Johnson, United Health, and Merck leading the Dow. You had a deal, CVS for Signify Health, and also it's just traditionally a safe haven or defensive place to go when there are worries on Wall Street. Coming up this hour, Mobius Capital Partners founder Mark Mobius on the recent weakness here and abroad, where he's finding opportunities amid the volatility. Plus, we will also discuss the outlook for consumer spending and inflation with the CEO of Unilever, Alan Jope. We'll start off, though, with today's market dashboard. Senior markets commentator Mike Santoli tracking this pullback down 0.5% now on the S&P 500. What levels are you watching?
3,900 is the one that it's been toggling above and below for a while today. Also on In Focus on Friday. Remember, the S&P was down about 1.5% in the last few hours of trading on Friday. So 3,900, in addition to being kind of a round number, it's also been really where the lower end of this range has been. And we've only dipped below it in June, really, and parts of July so far. So it's defined, the prevailing lower end of this range since about May. The other part of it is it's kind of the uptrend from July is roughly right in there. So it shows you it's a little bit of a somewhat decisive area in terms of whether that rally from June is going to stick. Now, we have very oversold conditions developing in stocks right here, going up against those higher Treasury yields, higher dollar, a lot of the macro pressures that we all know about. So that, to me, is why the market isn't down kind of in a more comprehensive or direct way. We are kind of oversold. We should get some bounces in here, and that might be why it's holding together here at 3,900. And if we were to go down another couple percent, I think you'd even get more oversold and washed out, and maybe that would mean the makings of an even better bounce, not necessarily have to go down 5 or 7% to the June lows. Now, take a look quickly at global bonds and stocks. They're kind of walking each other down the hill all year. This is the global government bond ETF. So that's the price of bonds, yields going up. And you see these times when yields led the way lower and stocks kind of caught down. And this is the global stock index. So that suggests at least that it is still going to be a drag on what equities do globally.
Well, and also the data keeps coming in good.
Yes,
ISM
exactly.
Services was a beat. It was a 4-month high. This momentum in the data now seen as pretty bad news.
That's right. So we got a decent number right at 10 o'clock, and the market sort of took heart in that for a little bit, and then all of a sudden yields flew because it does suggest that the Fed is going to see no real reason in there to let up on the 75 basis point pace, and that maybe is going to be the idea that the Fed is willing to kind of break things along the way if it does so.
Mike, thank you. We'll see you later. Mike Santoli. For more on the global markets, let's bring in Mark Mobius, founding partner at Mobius Capital Partners. Good to talk to you. Do you see these trends, Mark? Higher treasury yields, weaker stocks, stronger dollar continuing throughout the year? How much worse is it going to get?
Yeah, I still think it's going to get worse for a number of reasons. First of all, look at Europe. Europe is in deep trouble, and the European Central Bank will have to raise interest rates dramatically. And the U.S. can't be left behind because you have a situation where the U.S. dollar will be too strong. Already the U.S. dollar is too strong. So that's a real problem. The interesting thing is that some of the markets in Asia, particularly Indonesia, Thailand, India, are beginning to outperform the U.S. market. And that tells you a lot about how those countries that are not impacted by what's happening in Europe with Ukraine and what's happening with oil prices to a great extent are going to do much better in this market. But generally speaking, the picture looks very bad.
So are you making the case for, and I know you always are invested in emerging markets and your fund has been tracking emerging markets, but it hasn't looked that great for emerging markets lately. The stronger dollar is a headwind for overseas currencies, right? And the energy crisis, China being in lockdown with a very uncertain trajectory for a recovery. It doesn't look that great when it comes to the cards stacked for for emerging markets.
No, absolutely right. If you look at the emerging markets index, it's been terrible. It's been underperforming. And the main reason is because of China. It represents 30%. As you know, China is in real trouble. It's probably going to get worse there. But what we do is look at individual stocks in individual countries. So, for example, if you have Indonesia outperforming the U.S., you're going to find some stocks in that market that will do fairly well against the U.S. stocks. So it's time now to be very, very picky in what you want to buy anywhere in the world, wherever you are, including, of course, the U.S. So the indices look bad for emerging markets, but individual countries, in some cases, are going to be okay.
What about China? You have liked China before, have been investing in China, Mark, even during some of the uncertain periods around regulation. They're still pursuing this zero COVID policy, and the tensions between the U.S. and China are getting worse. Is it investable? Can you invest there?
Well, China looks bad, and we've had less in China than we have in India and Taiwan. Of course, with the Taiwan crisis, we have to be careful about what's happening there as well. But generally speaking, the situation in China looks bad, not only because of the lockdown, the COVID lockdown, but also because of relationships with the U.S. and with other countries as well, and because of the incredible debts that have been run up, not only in property, but in the Belt and Road Initiative. As you know, they've lent billions of dollars to countries in Africa, in other parts of Asia, and even in parts of Europe. So it's become a situation where the banks in China are going to have a real trouble. So I think the China market does not look very good.
What about Europe, Mark? Are you putting any money to work in Europe, in any European countries, just with the energy crisis going from bad to worse?
No, we're not putting anything in Europe. We think it's going to get worse before it gets better. Don't forget the winter's coming, and things are going to get very, very tight. And it's not only about consumer prices, but also about industry. Industry can't get energy in Europe, and they have to start closing down or slowing down their production. So this is a very bad scenario for Europe.
Mark Mobius, thanks for joining us. Tackling some of the global issues right now. Up next, former Saudi Aramco executive Sadat Al-Husseini on how OPEC's production cut and Russia indefinitely suspending natural gas supplies to Europe will impact oil prices. And then later, an exclusive interview with the CEO of Unilever on the state of the consumer and his strategy. The Dow's down about 180 right now. You're watching Closing Bell on CNBC.
지금 보름달처럼 동그랗게 칠해놓은 데가 지금 하향 트렌드를 깨고 살짝 올라왔던 부분이기도 하고, 어떻게 보면은 플래그를 뚫은 부분인 것 같이 보이기도 하고, 좀 의미가 있는 부분인 것 같아요. 한번 지켜보시고, 오늘 같은 경우에도 지난 목요일, 금요일처럼 또 후반에 약간 상승으로 갈 수 있을지 테스트를 할 수 있는 그런 시간이 충분히 가능하거든요. 만약에 그런 것들이 이제 전반적으로 기관이나 개인 투자자들이랑 같이 이렇게 잘 맞아 들어간다 그러면은 끝판 많이 말아 올릴 수도 있을 것 같아요.
Beginning next month. Joining us now is former Saudi Aramco executive VP Sadat Al Husseini. It's good to talk to you again. First, on the significance of the OPEC plus cuts. We haven't seen anything like this since the depths of the pandemic, and just last month, they were boosting production. What do you think?
Well, good afternoon, Sarah. It's not a big adjustment. It's a 100,000 barrels out of a global supply of 98 million barrels. It's just an indication that they're watching the markets very carefully, and they're prepared to react, even if it's a small adjustment now. The big problem isn't just now, it's what's going to happen later in October, November, when Russian oil supplies get out of the market. That's when they will be poised to do a lot more, I believe. But right now, it's a small adjustment.
Have you been surprised at how Russian supply has held up despite sanctions?
Yeah, well, the Russians have been very diligent. Somehow they've managed to keep their oil flowing. A lot of their ships are owned by Greek and Cypriot ship owners, so they will be subject to the European regulations once they have to conform with the sanctions. Yeah, they're doing okay. They've had a 6-month window to keep selling. But they're running out of room to market. So it's going to be a really challenge for the market to replace that Russian oil once it comes out of the market.
And obviously this came after the G7 is agreeing to basically cap the price of Russian oil on the market. Is that something that you think will work, will inflict pain for those, I guess, that go along with it? They'll get cut off from Russian oil.
Well, you know, Sarah, this is really a big deal because we're talking about the third largest economy in the world, which is Europe. And we're talking about the largest gas reserves holder and a nuclear power, which is Russia. And when they come into a conflict like this, this is going to be a real big issue for a long time. So trying to put a cap on prices, I don't think it will work. I don't think the Chinese or the Indians or anybody out there buying Russian oil is going to want to see a price imposed on them. They'll negotiate their own prices. But the problem is going to be beyond this. It's what do you do in 2023, 2024? What do you do when Russian oil and gas are forced to stay out of the market? The world is going to have to find alternatives. And you know, this isn't Afghanistan or Iraq. This is Russia. This is a big deal.
So where do you think this all goes in terms of the impact on prices, both on oil and nat gas, and the effort to find alternative sources?
Yeah, what we've learned is alternative energy just can't cover everything. Europe, between nuclear and alternative, can only cover 25% of the requirements. 75% of the energy in Europe is still oil, gas, and coal.
여기 옛날 아람코의 CEO, 옛날 CEO가 얘기하는 거 아주 속 시원하네요. 일단은 이게 러시아는 함부로 건드릴 수 없다. 에너지 쪽에서는. 그리고 자연재생 에너지가 심지어 원자력까지 포함해가지고 커버할 수 있는 거는 그렇게 크지 않다. 이제 그런 얘기를 하네요.
Concerns about Chinese growth. Sadat Al-Husseini, thank you very much for taking the time and for your insight today. And do not miss tonight's CNBC special energy emergency for much more on the outlook for oil and natural gas. That is tonight, 6 p.m. Eastern, right here on CNBC. Let's check on the markets right now. The Dow's down about 141. We've recovered a little bit since the start of the final hour of trade. The S&P right now down less than 1/3 of 1%. It is coming back. Industrial is just popping into the green, along with healthcare, utilities, and real estate. Still ahead, Bridgewater's Karen Carneal-Tambor reveals where she's finding opportunities amid this market volatility. Plus, Wall Street buzzing about Kanye West's war of words with Adidas. Why that matters for investors. Straight ahead.
and Peacock.
What is Wall Street buzzing about today? Kanye West waging war on Adidas, and it is getting ugly. Over the weekend, Ye posted on his Instagram account taking aim at Adidas board members. He's accusing the brand of making decisions about his Yeezy line without his input and of stealing his designs. He's also taking aim at Adidas Senior Vice President Daniel Cherry, posting a picture showing a civil war between them. Previously, West went as far as to post a mock New York Times cover announcing Adidas CEO Casper Rorsted's death on September 1st. West has been working with Adidas since back in 2013. It's been a very profitable relationship for the German company. In August, just last month, Rorsted told me Kanye is their most important partner worldwide and that he is very happy with the relationship. Well, today, Adidas is telling us no comment. This matters to investors. Yeezy's line has become significant. While Adidas doesn't disclose financials about the brand, Bloomberg reports the Yeezy brand is valued between $3.2 and $4.7 billion, which also includes the smaller Gap partnership. Let's not forget, Yeezy famously left Nike in a similar manner back in 2012 after reports the relationship was too difficult to manage. We'll see what Adidas's threshold is here when it comes to Kanye West. The stock is already down more than 50% over the last 12 months due to other factors like China and, of course, what's happening in Europe. When we come back, Bridgewater's Karen Carneal-Tambor joins us with her portfolio protection playbook and where she sees opportunity. She's worried about a stagflationary environment. Dow's down 132, continues to recover a bit off the lows. We'll be right back. Take a look at stocks right now. Down day on Wall Street. The Nasdaq is down for its seventh day in a row. Longest losing streak since 2016. Higher treasury yields, weaker euro on the European energy crisis in focus today. Joining us is Karen Carneal-Tambor from Bridgewater Associates. And Karen, you still think the market is painting too rosy of a picture of what's going to happen with the economy and the Fed?
Yes, I think the market is really just starting to catch up. If you look at what you can see in the market pricing, and you try to basically disaggregate what is the market really saying, you know, if you split out in the bond markets, what are really inflation expectations relative to what are rate expectations and real yields? The market is still expecting that inflation comes down relatively quickly. This inflation problem is pretty short-lived, and that's true across countries, including, you know, Europe, the UK, the United States. And if you look at the stock market and basically try to disaggregate what's really happened to earnings expectations, how much do we expect earnings to be hit by all this relative to how much is the stock market just down because there are higher interest rates, so you want to discount earnings at, you know, a higher interest rate to today. Markets aren't really discounting a particularly bad earnings scenario. So that still adds up to a Fed that has to hike, central banks that have to hike, but that their hikes are enough to kind of magically both bring inflation down pretty quickly and get an earnings outcome where we don't really need a particularly serious recession to kind of get things back on track. And that's unlikely, not to mention that we don't have a huge risk premium priced in yet for what it's like to live through volatile inflation, stagflation, needing to ration. Those things are just starting to get priced in, which is why you're seeing such terrible market action.
So it's interesting that you don't buy the idea that inflation is going to come down very fast, even though part of the thinking there is that if we do get a recession and weakness in global economic demand, that will pressure inflation even further.
Right. Well, you need to either get a serious recession, which is not really priced into markets. And we know from the past that there is a lead lag. It's not like the economy slows and a minute later inflation comes down. We see in the past that it takes, 6 months, a year for it to make its way to inflation. First, you get deep economic pain before really inflation starts to slow. And that some of the, I think, overly optimistic views are that this energy stuff will kind of just go away, not realizing how much it has second and third order consequences. If you need to literally ration what you're making in the economy because you just don't have enough energy, that's an input into everything. And now you have a supply problem that's more pervasive and longer term, and you need to slow demand even further, an even deeper recession before those price increases stop spreading across the economy.
So it's a pretty doomy, gloomy scenario that you paint of stagflation, which I know you've been warning about for a while. In the past, you have said that commodities are a good place to shelter. But if you're really worried about recession, is that still true?
I think commodities are not great in a true stagflationary environment for the reason you're saying, which is that when growth is weak, demand for commodities is going to slow at the same time. And you don't want to be idiosyncratically just in the commodities that end up being the most squeezed. I think stagflation is the toughest environment for investors for the reason you're saying, is that you don't want to be exposed not to strong growth and not to weak inflation, and most assets are. And it leaves investors with tougher choices. It leaves them with choices of looking for inflation protection wherever they can. And to me, one of the easiest things you can do is, change some of your nominal bonds to inflation-linked bonds. Instead of everyone has nominal bonds, everyone has a treasury, you might as well get paid whatever CPI ends up printing, because I think there's a decent chance it'll be higher than what is currently priced in. And in addition to that, look around the world. Not every country in the world has as gloomy of a stagflation outlook as the United States. Places like China and Japan look pretty different. And so just diversifying what you're holding geographically at least gives you some access to other places where stagflation is less on the agenda than certainly in Europe and the UK, and then in the US in a different way.
So China might not have stagflation, Karen, but it has a lot of other problems, and some of them potentially bigger when it comes to geopolitics. Obviously, it's getting worse between the U.S. and China on Taiwan, between Taiwan and China. We saw the U.S. make a move for NVIDIA and other chip makers to ban certain exports last week. Why is China a good bet for you right now with all that going on and intensifying at the same time where it's still locking down millions of people every week to deal with COVID?
Well, I think the risks you paint in China are absolutely true and cannot be ignored by investors, should not be ignored by investors. It's just a matter of kind of diversifying your risks and not having your whole portfolio in, let's call it, wealthy country stagflation. And so the Chinese risks are true, they're real. Some of them have knock-on effects on us. For example, if there's a serious heating up of tensions around Taiwan, that could hurt supply chains all over the world. That could end up hurting other countries as well. And then the thing with China is that you are getting compensated for those risks in a different way. There's a significantly higher risk premium. So if you basically say, what do earnings have to do in China at a time where policymakers need to stimulate rather than need to cut back and make sure that inflation doesn't get out of control, but they can actually afford to stimulate? What do earnings need to do for you to kind of break even? And you need to have about zero earnings growth relative to what you need to have in the US and Europe, which is significantly higher. And so you're getting a higher risk premium, and at least you're getting different risks. Everything you hold has a lot of risks in it. That diversification starts making sense. And that doesn't mean you don't think about those risks very seriously and weigh them.
I got it. Karen, thank you. It's good to see you and check in. Karen Carniel-Tambor. Take a look at where we stand right now in the markets. Got about 30 minutes left of trading, down 150 or so on the Dow. We've still got 4 sectors positive in the S&P. Industrials joining that group. The worst performers are communication services, energy, and technology. Kind of the playbook for concerns about the economy and higher interest rates. Up next, the CEO of Unilever on the outlook for inflation, whether he's seeing consumers trade down to cheaper products, something we're watching out for. And you can listen to Closing Bell on the go by following the Closing Bell podcast on your favorite podcast app. We'll be right back.
막판 움직임이 아름답지 않네요. 그냥 쭉쭉쭉쭉쭉쭉 흘러내려가는 그런 흐름으로 바뀌고, 오늘 또 뭐라 그래야 되나, 저점이 종가가 되는 그런 분위기로 흘러가는 듯한 그런 흐름으로 갑니다. 그럼 별로 안 좋죠. 그러니까 이런 장에서 만약에 트레이드를 한다 그러면은 플랫폼 안에 위로 가는 거 한 종목, 아래로 가는 한 종목 딱 해놓고 손절 라인 딱 잡으면서 트레일링 스탑 딱 걸어가지고 한쪽 사고 한쪽 한쪽 사고 한쪽 사고 한쪽 사고 한쪽 사고 이런 식으로 잘 하시면 되는 그런 하루이긴 한데, 그것 또한 잘 타이밍이 안 맞지 않으면 한쪽에서 읽고 다른 쪽에서 또 읽고 그렇게 되게 되죠. 오늘 같은 경우에 저는 따박따박 그 테슬라 올라갈 때마다 따박따박 잡았고, 그 다음에 거꾸로 내려갈 때마다 SQQQ 따박따박 잡아서 지금 뭐 그냥 소소하게 하루 일당은 벌어낸 것 같아요.
Check out today's stealth mover, pest control company Rollins. It's the top performer on the S&P 500. RBC Capital Markets upgrades the company to outperform, from market perform, citing expectations of record revenue growth. Rollins, which owns the Orkin and Western Pest Services brands, has nearly 3 million customers and has posted 24 consecutive years of sales growth. Lots of pests. Up next, a top market strategist on the recent pullback and whether investors should be selling into any rallies. That story plus Porsche going public and potential trouble for a SPAC seeking to merge with former President Trump's media company. When we take you inside the market zone, we've just taken a little leg lower. The Dow's down 219. We'll be right back. We are now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Mike, looking at the broader markets, the Dow's down 200, the Nasdaq's down almost 1%. But there's buying, and there are names that are working today. For instance, in the NASDAQ, Tesla's up, Starbucks is up, some of the defensive groups. I almost want to say it could be worse, given some of the headwinds that the market is looking at right now around Europe and the energy situation. We've got an ECB meeting this week around the U.S. and the better economic data and higher treasury yields. What's your take?
Yeah, it certainly could have been expected to be worse. Catching up really on 3 days worth of pretty tough headlines. The U.S. markets are, not just the European situation there with the natural gas turnoff, China stuff, not good news coming in. No. So I do understand, this is why we're down a little bit. It's lethargic. Keep in mind, the S&P, though, it was down 9% over the course of 3 weeks from that mid-August high. So we've done a good deal of unwinding of that rally we got in June. That's one reason, perhaps, that, it's not rushing lower in a broad way today.
Well, I think that some of the bears, I was reading Mike Wilson of Morgan Stanley, who's obviously been pretty bearish throughout, and says we're still going to make new lows in the fourth quarter. They're resting on this idea that earnings expectations still have not moved lower enough to reflect some of the weakening economic fundamentals that we will get if the Fed raises rates. What's on the other side, the economy appears to be picking up steam, or at least holding some momentum here, despite the interest rate hikes.
I mean, look, you can't disprove the idea that earnings do have downside risk, given that we've seen some slowing, given what's gone on, profit margins being pressured. But here we are more than 2/3 of the way through the third quarter. It's not as if the economic performance that we can observe in the U.S. Is something that would necessarily cause earnings to collapse for the third quarter. Yes, it always is a question of what the outlooks are going to be. We do hear about the corporate conference schedule going on right now and whether that's going to be some landmines coming out of that. But I do think it's a good debate at this point. I also find it interesting that people are pretty comfortable feeling as if, yeah, sure, there'll be a year-end rally, but you'll get a chance to buy them lower from here, or at least even below the June lows. It's certainly plausible. September's not friendly. The Fed's tightening into a slowdown. All the basic inputs into a broad market view suggest that the downtrend, has the benefit of the doubt here. But, at some point, sentiment gets too crowded on that side of things, and it requires new bad news to keep the downside case going.
I don't know if you were listening to the interview we just did with Bridgewater's Karen Carniel-Tambor. Sure. Pretty dire forecast in terms of the stagflationary outlook, which she says is not being priced in, the fact that inflation doesn't magically come down, and that the economy is going to get worse. What's happening in Europe, what's happening in China, what's happening with the Fed. And that's a tough environment for investors. What do you make? Do you think the market's too rosy on that? And if we do go into something more stagflationary for longer, what works?
I think there would absolutely be further downside to valuations in that scenario. There's no doubt about it. I don't think we're priced right now for stagflation. However you want to define that. Does that mean inflation goes down to 4% and growth struggles and we get at stall speed or something like that and earnings flatten out or go down next year? Yeah, I think that would be pretty hazardous for the market. But I also think it's not a foregone conclusion that has to be the path right now. This cycle has not really obeyed the cadences on the way up or the way down of a typical one.
Let's talk about FedEx tumbling today after Citigroup downgraded the stock to neutral. Analysts there feeling bearish heading into peak delivery season, arguing weaker freight activity could impact earnings growth this year. Citi's price target slashed to $225, but that still implies upside after a sharp decline over the past month. And also questions swirling about whether FedEx's performance reflects something broader with the global economy. What do you make of the call and the valuation?
Clearly macro-driven, kind of cautious about most of the group. So it isn't just a FedEx story. And to some degree, sort of ratifying how the market has been treating FedEx right now. Not a lot of earnings growth expected this fiscal year or next. It's still a bit of a turnaround play if you believe in it at this point. Dollar headwinds, all the reasons you would think to be a bit cautious on FedEx are in this call. But again, it's calling for like a 10% upside to would mean fair value based on Citi estimation. So I don't think it's necessarily desperate. But freight rates are going down. It's good for the inflation story. It's not great for transport stock performance story.
Let's talk autos. Porsche going public. Volkswagen announcing plans to spin off the iconic sports car maker either later this month or early October. The IPO could have a valuation up to $84 billion, which would make it the largest European offering in decades. But it does come at a time when rivals Aston Martin and Ferrari have seen their valuations decline. Robert Frank joins us. The timing is really interesting, Robert, given what's happening in the luxury space, what's happening in Europe. How much investor appetite is there going to be for this IPO?
Yeah, and Sarah, and what's happening in the markets and with IPOs, a very difficult time to come out with one of the biggest IPOs in recent history, certainly in the auto market. Now, on the bull case, this is a chance to own one of the most storied names in the auto sector. That gold Porsche badge is a profit machine. It's got margins of 22 to 25%. In the auto world, that is massive. And, they're expecting sales this year of around 38 billion euros. That's only on production of around 300,000 cars. You've got Qatar Investment Authority, all these folks trying to buy large blocks of stock. The problem is on the governance side. You've got the family that's going to basically control this through a special block of voting shares. The public shareholders will get non-voting shares, so that's an issue. Second issue is that the CEO of Volkswagen, Oliver Blume, will also be the CEO of Porsche. And for investors who really want these companies separate, it's a problem to have the CEO running both companies. So the devil will be in the details, but this is a great brand, certainly in the auto space. We'll see whether it's overpriced.
Why is Volkswagen doing this now? Obviously, you mentioned the IPO market has basically been shut down. So why do they feel like now's the time strategically for the parent company?
Well, there was a lot of negotiations with the heirs of the Porsche family, so this has been in the works for many years. They finally got that settled. The bigger issue, though, is Volkswagen needs this cash to switch to EVs. The investment on the EV side, as we know from all these companies, is massive, and they need the cash infusion from this spinoff to fund their EV side.
Got it. Robert Frank. Robert, thank you. The timing, Mike, will be interesting. It's such a large offering. It's happening over in Europe at a time where we haven't seen too many large IPOs. I don't know. It could be different just because of the name brand and people like it, and it's an EV play.
There's scarcity value in the most elite auto brands out there, clearly. Also, when Ferrari came public and split away from Fiat Chrysler at the time, it was in early 2016. It was an industrial recession. Valuations were depressed. That's not necessarily something that makes or breaks a deal for the longer term. In fact, there's an argument to be made that when an IPO does get done in a very slow time for offerings in general, and when the markets are a little bit under pressure, it usually means that it's a deal people really want and therefore can perform over a longer period of time. So the question is, does it get out? And if so, are we valued at a pretty, undemanding level because the markets have been tough?
Well, they do have one thing going for them, which is a weak euro, which certainly helps the translation on earnings. Shares of Digital World Acquisition. That's the SPAC planning to merge with Trump Media and Technology Group. Big loser on Wall Street today, as you can see, down more than 16.5%. The company is now delaying a shareholder vote on whether to give the deal a one-year extension until Thursday, which is the deadline to take Trump Media public. According to a published report earlier today, Digital World has not been able to secure enough support for an extension. Leslie Picker joins us. So what happens next, Leslie, and why all the delay?
Yeah, so basically they need a pretty sizable turnout in order to get this extension approved. They needed 65% of shareholders to vote in favor of this extension. And as you know, DWAC has a very large retail base, which tends not to have the highest turnout when it comes to corporate governance. Now, they had 2 weeks to drum up enough support for this extension, weren't able to do that. They are now delaying it by 2 days. We'll see if the media attention from today, potentially throughout the rest of the week, will do the trick. But clearly, the market is getting a little concerned they'll be able to get this deal done, given all the regulatory scrutiny. That's kind of why they need the extra time to complete the deal.
Got it, Leslie Picker. Leslie, thank you. The Unilever CEO speaking at the Barclays Consumer Staples Conference today, saying he is seeing some trading down among customers, including in the Americas, where people are swapping out, for instance, body wash for bar soap. But also there are some pockets of strength, including e-commerce, where he is seeing customers add on to pints of ice cream, for instance, on their Uber Eats orders. Joining us now from the conference is Unilever CEO Alan Jope. Alan, it's good to talk to you, given you have such a broad reach across food and household products. What are you seeing globally right now from the consumer as we monitor how they're holding up in the face of a lot of macroeconomic challenges?
You bet. Hi, Sarah. Thanks for having me. I mean, Unilever is quite a different company from where we were 3 years ago, that we're entirely focused on growth. We're not tied to a long-term margin commitment, and we're executing with more discipline. We've made clear strategic choices. And so we find ourselves in a position where we're quite well equipped for this continuous volatility that we're living with. It's wrong to make sweeping global aggregations and generalizations. What we're seeing right now is continued strength in Asia, particularly South Asia. Our business in India is doing very well. The consumer there is holding up well. Similarly in Southeast Asia, Latin America and Africa continue in very difficult circumstances to deliver strong growth. We've seen the US to be fairly resilient. I think high household savings levels and the fact that we've not yet reached peak inflation means that the US is doing well. Europe's been one of the softer parts of the world. By and large,
오늘은 이렇게 또 비실비실 이러다가 끝날 것 같네요. 막판 반등이라는 거는 없네요. 오늘도 역시 그냥 맥디를 딱 봐도 그냥 비실비실한 게 딱 느껴지고 RSI를 봐도 50 근처에서 비실비실. 오늘은 비실비실한 하루인 것 같아요. 뭔가 크게 폭발력이 있는 그런 흐름은 하나도 없고 뭐 10분 안에 뭐가 일어날 가능성은 더 희박할 것 같고 뭐 거의 오늘은 이렇게 끝난다고 봐야겠죠. 그러면 큰 그림으로 본다고 치면은 그래도 3,900은 지켰어요. 오늘도 실제로 현물로 봐야 되니까 3,900 그렇죠. 3,900은 지금 지키는 그런 모습이니까 일단 3,900은 지키려고 하는 것 같아요. 흐름이 지금 이렇게 크게 앵걸프가 생기고도 하락세 0.4% 정도면은 거의 부정적인 거는 끝나가지 않나 이렇게 보네요. 앞으로 끽 가야 한 2-3일 정도? 그때쯤 되면은 반등이 오지 않을까? 확실히 반등이 오지 않을까 예상이 됩니다.
You mentioned at the top, Alan, that you guys were in a very different spot, and I know you've been making a lot of strategic changes and going through a restructuring. Still, over the last year, the stock has underperformed. It's down about 3 times as much as Procter & Gamble and even more than that of Nestle, some big competitors. Why is that?
Yeah, I think if you look over the last 6 months, you see quite a good rally in Unilever's stock. What we understand is that the market is valuing consistent, steady growth. And in a couple of years ago, we had 1 or 2 too many surprises for the market. And we're really focused now on that steady reliability of top-line organic growth. And as we've delivered that over the last 3 quarters, we are seeing it reflected in stepped up investor confidence in the company and in the strategy that we're following.
How is it going with Trian Partners and your new board member, Nelson Peltz? What have those conversations been like?
Yeah, we brought Nelson onto the board because of his extraordinary track record in the consumer sector. We're enjoying an extremely collaborative relationship. Nelson, like our other board members, are keen to see the trapped value in Unilever unlocked. We think we're a business that's undervalued. One area in particular where we've enjoyed the engagement with Trian is we're moving into a new, simpler organization. We've ditched our matrix organization that we've had for a couple of decades, and we're now running the company end-to-end through 5 very simple divisions, and that enjoys a lot of support from Trian and from Nelson himself, and he's keeping the pressure on us to make sure that we realize all the benefits.
아까도 잠깐 말씀드렸지만 이번 주에 이제 연준 의사들의 그 스피치들이 많아요. 그 스피치가 이제 미리 시장에 약을 좀 뿌려놓는 그런 전략을 쓰지 않을까 싶어요. 너희들이 원하는 대로 안 된다. 뭐 피봇 없다. 이자율 상승 우린 그대로 지킨다. 계속 그런 얘기 강하게 계속 할 것 같아요. 그리고선 그게 이제 시장에서는 악재보다는 여지까지 했던 얘기 똑같이 반복하니까 큰 흐름에서 자체는 문제는 없을 것이고 이제 그게 정말 미리 좀 뿌려놓은 약이라면 그렇죠? 그리고 다음 주 CPI 나오고 그 다음 주에 연준 회의 있고 그럴 때 뭔가 좀 잘못 나오더라도 큰 악재로 작용하지는 않을 것이다. 그렇게 보면은 일단은 뭐 그냥 시장은 평상 유지는 해주지 않을까? 저는 그렇게 생각해요.
We wish them a lot of luck with their business in Israel, and we're back to focusing on making great ice cream in Vermont and championing causes that are very important to Ben & Jerry's, like climate change and equality. So we're thoroughly enjoying having Ben & Jerry's in the portfolio, and the situation in Israel, as far as we're concerned, is closed.
Alan Jope, thank you for joining me. It's good to talk to you from the Barclays
Thanks,
Consumer
Sarah.
Conference. CEO of Unilever. We're going to have more on the state of the consumer tomorrow. We've got an exclusive interview with the CEO of Kellogg, Steve Cahillane. And remember, he is in the process of trying to break up his company into 3 different new companies: cereals, snacks, and of course, the plant-based food. Let's hit the broader market because stocks are lower here heading into the close. Our next guest says there could be worse to come. Let's bring in Kristen Bitterly, head of North America Investments at Citi Global Wealth. Kristen, it's good to have you. So what should investors be doing on big sell-off days like today, 7 in a row for the NASDAQ?
I think right now we need to play a little bit of defense, and that's something that we've been doing in our portfolios, being very balanced across both fixed income and equities, and really leaning into quality parts of the market. Unfortunately, I think the market is trying to find some signs, some dovish signals, some signs. Look at the jobs report. Maybe that was Goldilocks. But ultimately, we are in an environment where there are tightening financial conditions, and that is going to impact the consumer, and it is going to impact earnings. And so that's not something that we would have seen in Q2. That's something that we're going to see with the Fed's trajectory going forward. So we are cautious here.
I guess the pushback and something you can point to, and I'm not sure how much of a bullish argument it is that positioning is light again, and people are getting very bearish again. And last time that happened, we saw what, a 17% rally in the market in midsummer.
That's absolutely right. And I think it's one of those things from a positioning standpoint. If there were something to turn, then you would see maybe a pretty fast rally off the lows. That being said, where the market is pricing right now, it's not pricing in a recession. It's not pricing in any type of earnings contraction as well. And so that's why it's not a function of not being invested in the market. It's picking your places in the market. So if you have equity exposure, leaning into quality, leaning into some of those sectors that are actually resilient in recessionary environments, like healthcare, like consumer staples, and then balancing that out with some quality fixed income, where now you're earning yields that far exceed the dividend yields in U.S. equities. So having that balance is a way that you can benefit from some of those bounces, granted not to the extent that we saw, but still have some skin in the game.
Why do you like healthcare and staples over, I don't know, real estate and utilities?
And so I think healthcare is one of those areas. It's an area that we've liked for quite some time. It's obviously held up quite well, and it's a favorite of many people. And for that reason, I think when you look at if we are nervous about earnings contractions, if we are nervous about that tightening of financial conditions, you need to look to places in the market that have inelastic demand. Healthcare obviously provides that. And when we look at the past 3 recessionary environments, a sector like healthcare has been one of the few sectors that has been able to consistently grow their earnings for that period of time. So that's where we're very specific. We want that inelasticity of demand in terms of where we're picking our spots.
Kristen, thank you for joining me with some of the advice that you are giving to your clients. Just under 2 minutes to go here. Just over that, Mike. As far as the defensive stocks that Kristen mentioned, real estate and utilities are working today. What do the valuations look like if you are feeling like you want to take an opportunity on the sell-off to get more defensive?
Well, you're kind of paying up for the privilege in a sense here in most of those areas you mentioned. Real estate has been tougher, but utilities, they never really looked that great based on standard valuation metrics. They're bought for the safety themselves as opposed to the earnings they're going to deliver. Also, the slight leverage to natural gas prices has helped them out a little bit. And if you look at consumer staples, you know, there again, you have to generally pay a bit of a premium there if you want the smoother ride. It has paid off. People have been willing to do it. What's interesting to me is that type of thinking and those flows have not really made their way toward what we used to think of as the more reliable areas, which were some of the big tech platforms and things like that, which just got too expensive. People don't want them yet.
Yeah, Tesla's higher today. I mentioned Starbucks, Lululemon adding another 4% on top of an already big rally last week. What are you seeing in the market internals, Mike?
Yeah, some softness there, Sarah. We've been sort of toggling mostly below the flat line all day, and it's about more than 2 to 1, 2.5 to 1 declining to advancing volumes in the New York Stock Exchange. So pretty consistent with what we're seeing at the index level there. Take a look at the communication services sector. Made a new low today, actually, as a group, while the S&P has not yet made a new year-to-date low. And you talk about traditional defensives, the telecoms, the cable stocks really look awful right here. People are very concerned, I think, about things like cord shaving and cord cutting. Our parent company, Comcast, Charter, all those things not working. And then Meta and Google are also relative underperformers. So that's an area that probably is starting to look statistically cheap, I would imagine. Volatility index not doing much, perked up into the 26s. It's elevated, not panicky. We have a little bit of a Monday rebuild in volatility, but you see that chart there, shows you higher lows, and we're in between panic and concern.
That's sort of what jives with what the market is telling you right now. Concern, but not panic. Take a look at the Dow as we head into the close. Down 165. So we've come off the lows again here as well. It's been kind of a bumpy ride in the final hour, but lower. We had a few attempts to try to go positive earlier in the day. Up 145 at the highs. Didn't quite work. United Health, Visa, Boeing are the biggest adders to the Dow. As far as what's hurting the Dow the most, Goldman Sachs, 3M, Microsoft, but most of the Dow stocks are lower. S&P 500 down 0.4%. It is the defensives that are working. Utilities, healthcare, real estate. Industrials are also positive now on the day. Communication services, technology, weaker, along with energy off the back of oil prices and materials. The Nasdaq down for 7 days in a row. That's it for me on Closing Bell. See you tomorrow, everyone. Now we'll send it into overtime with Scott Wapner.
All right, Sarah, thank you very much. Welcome, everybody, to Overtime. I'm Scott Wapner. You just heard the bells. We're just getting started from right here at Post 9 at the New York Stock Exchange. In just a little bit, I'll speak to tech investor Eric Jackson and why it's time to buy that space, even with the Nasdaq on this long losing streak. And speaking of, we'll also get you set up for Apple's big event tomorrow out in California, what it means for that stock, which some say right now is the most important in the market. We begin, though, with our talk of the tape. Nothing but negativity. That is pretty much what you hear from almost every investor you talk to these days. Are things really that bad? Could it be a contrarian signal for your money? Let's ask Trivariate's Adam Parker. He's with me here at Post 9. Is it really that bad? I mean, everybody's like the sky is falling, including you.
I'm not a sky, so I do love the new.
You're like the earnings.
The new purple glasses are amazing. You look great.
Thank you.
I'm not. Listen, I'm here with you on set, and the S&P's down 40 bips. That feels like a relative outperform for our us being together this year.
I'm serious though. I mean, is it really that?
No.
오늘 장마감했습니다. 라이브는 이렇게 끝낼게요. 이따 클로징 벨에서 뵙겠습니다. 수고하셨어요.